Well, because ex-IT yesterday, the Nifty could have easily tested 26,000, make no mistake. 26,000, that remains the first key level on the upside. Of course, 25,800 is the immediate one. The psychological one remains 26,000. Now, the Nifty Bank was relatively steady compared to the last 30 minutes in which the index fell in yesterday's trade. But otherwise, compared to the Nifty Bank was fairly steady. Today, as I mentioned, it's an earnings-heavy day. Bharti, Airtel, Hero MotoCorp, IOC, Keynes Tech, PFC, LIC, a lot of results today. And of course, watch out for NSDL because the shareholder lock-in is ending today. But for now, the GIFT Nifty is indicating a subdued start, the 25,800 being the first level on the upside to watch out for, and then followed by the 26,000 mark. Over to Ria now, who would list out the stocks that you need to keep an eye out for in today's session. Ria, morning, what's on your list?
Well, good morning, Thomas. Let's start off with Trent first. The net profit has come in at 510 crores versus estimates of 537 crores. EBITDA, however, has been above estimates at 1,081 crores. For Tata Power, they have reported a muted quarter this time around. Net profit has come in at roughly 1,194 crores. Revenue, however, has come in at roughly 14,000 crores versus estimates of 16,000 crores. For Metropolis Health, the net profit has seen an increase of roughly 32% compared to the previous year. Revenue has also seen an increase of around 26%, and further, the company has also approved a bonus issue in the ratio of 3:1. For Medanta, they have seen roughly 19% revenue growth on a year-on-year basis, which has been led by developing hospitals as well as international patients. Margins, however, have come down to 19% versus 25% in quarter 3 of last year, and this has been impacted by the opening of the new Noida hospital. For Apollo Tyres, the net profit has gone up by roughly 40% on a year-on-year basis, and the revenue has also seen an increase of roughly 12% compared to the previous year. And further, the company has said that they are also going to invest roughly 5,810 crores in Andhra Pradesh in their plan for capacity expansion. For Cummins, for quarter 3, they have missed estimates both on the revenue as well as the EBITDA front. Revenue has come in at roughly 3,055 crores and EBITDA at 635 crores versus estimates of 670 crores. For JSW Cement, the net profit has come in this time around at 131 crores versus a loss of 80 crores in quarter 3 of last year. The revenue has also seen an increase of roughly 13% on a year-on-year basis. And lastly, keep an eye on Marico as well. The company is going to acquire 60% of Cosmix Wellness for a paid-up share capital for 226 crores.
Keep all of these stocks on your radar. Ria, thank you for that update. Over to Mangalam now, joins in with cues from the F&O space. Mangalam, good morning. It's the Sensex weekly expiry today, but what is the F&O data indicating now after yesterday's session?
The F&O data is indicating resilience, and that's exactly what played out in yesterday's trading session as well. If you look at the Nifty and the Nifty IT, you wouldn't believe that the Nifty ended 40 points higher when the IT index was down by almost 6%. The reason for that is Reliance did well, Nifty Bank did well, and at the same time, towards the end, we saw some recovery from the lows on the IT index as well. The range on the Nifty yesterday, the low and the high, told you that, we are now, after that 600-point reset on the way up post the US-India trade deal, we've moved higher from 24,900 to around 25,500 at the lower end, and around 25,800 to 26,000 at the upper end. And that ties in with the 20 and the 50-day moving average on the Nifty as well. The FIs, they continue to buy in cash market. Yes, it wasn't a 5,000 crore purchase that we saw in the previous trading session, but then again, it wasn't a 3,000 crore sell that we saw in the sessions prior to that as well. So any non-negative is a positive. The FIs continue to cover their short positions in index futures as well. Yesterday, they bought about 1,800 crore rupees with 6,000 long contracts being covered, and as a result of which, short contracts being covered, as a result of which the FII shorts now are at 81%, longs have increased to 19% in just 3 trading sessions. That's a positive. And in addition to that, they've also written nearly twice as many puts as calls. So that's telling you that there is a lot firmer support than there is resistance on the way up. So if you look at the active options, you would see the 25,700 put fairly active in trade and the 25,800 put fairly active. Both of them have a premium of anywhere between 100 to 150 rupees, telling you around 25,600 to 25,650 is where immediate support lies. On the way up, however, we need to cross past this 25,850 to 26,000 mark very, very formidably.
So keep an eye out on all of these levels. Mangalam, thank you for that update there. On to CNBC TV18 exclusive. The two global business tycoons, Reliance CMD Mukesh Ambani and BlackRock chairman Larry Fink, came together under one roof to discuss the art of investing for a new era. In a conversation with Shireen Bhan, the industry stalwarts spoke on a broad range of topics, ranging from India's growth potential to AI. Listen in.
Excites me the most is the startup industry. When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, right, 100 new Reliances in terms of where and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India.
Let me come back to you on the investing in India's growth opportunity and this new era that we're speaking about, and the role of making strategic choices today, which will require patient capital. And I want to understand from your perspective what it will take actually to build patiently with patient capital over the next 2 decades.
Well, I think that the Indian opportunity, as we stand at about $4.5 trillion of GDP in a $110 trillion world. Right? I see us outgrowing the world and finding our right place. So I am one of those believers who think that this 4.5 in a 20, 30-year period, right, will outgrow the rest of the world, and we will hit $25, $30 trillion. It's going to be 30 years from now, but as we do that, the India opportunity is a 10, 20, 30-year opportunity. And when you think about solving India's energy problems, I am a believer that in the next decade, India will not import 80% of its energy. We have a path, and God willing, with technological breakthroughs, we will be reasonably self-sufficient in energy.
So when you think about the growth of India, it's not a quarter, it's not a day or a week, it's not a year, it's over a long horizon. And you could say maybe this is the era for India and over the next 20, 25 years.
What excites you the most about India? You referenced the tariffs, and we've had a deal with the US overnight. President Trump and Prime Minister Modi have signed off on that reciprocal tariff agreement. So the overhang has lifted at least on one aspect of that relationship. How crucial a development is that, and what excites you the most about India today?
Well, let's be clear, over 20 years it had no bearing. Maybe over the next 6 months or a year, it had some significant bearing. But over time, the foundational issues of India, how it's able to leapfrog. I mean, you watch what has, over the last, I would say, since the era of the smartphone. And I think that's a pivotal point. 2012 was, I mean, think about your life before the smartphone here in India. But the beginning of the smartphone, the rollout of 5G, and how that transformed India in so many ways. When you think about how the Modi administration digitized the rupee and how it transformed commerce in India across the board, I am very worried about other countries. Even the United States is falling behind.
Take a short break. All the action from Wall Street on the other side. Stay tuned. Now, on Wall Street, it was another mixed session because the technology stock sell-off deepened and that weighed on sentiments. The Nasdaq was down over 350 points, led by AMD, which saw its biggest single-day fall since 2017. The S&P 500 was down 0.5%. The Dow, though, outperformed, supported by stocks like Amgen and Honeywell. Now, Kate Rooney of CNBC gets us a wrap of all the action on Wall Street.
U.S. markets were mixed across the major indexes in Wednesday trading as the tech trade continues to struggle. The Dow gained 260 points, the S&P 500 fell by 35, and the tech-heavy Nasdaq dropped by 351. The Dow was the lone index in the green on Wednesday as concerns persist about AI disruptions to the software and data sector dragged on the Nasdaq and S&P. Leading the sell-off Wednesday, chip stocks, especially AMD, down 17% after its forecast for the upcoming quarter underwhelmed analysts who had anticipated a stronger outlook based on the AI boom. But AMD CEO Lisa Su defended the company's earnings and forecast to CNBC, saying AI is accelerating at a pace she would not have imagined. And the Trump administration Wednesday announced a new initiative between the U.S., Japan, and EU to shore up the critical mineral supply chain as part of the effort to reduce dependence on China. The three signatories say they'll develop coordinated trade policies and mechanisms and will set the foundation for binding agreements on critical minerals trade.
Kate Rooney, thank you for that update. Now, here's some opinion from Stephen Parker, the co-head of global investment strategy at JP Morgan Private Bank, on the recent tech sell-off and the broader market outlook.
Yeah, I actually think what we're seeing in markets so far this year is very healthy. I think a lot of people would have been skeptical at the idea that we would be sitting near all-time highs, despite the fact that the tech sector is the worst performing sector in the S&P and has fallen more than everyone else. This broadening story that we are seeing is really reflective of the anxiety that investors have had over the last couple of years. It's been all tech all the time. People have been worried about concentration risk. Now we're seeing a rotation. It's about a broadening of the recovery story. Cyclicals are picking up the slack. And it's not just the AI infrastructure plays and the hyperscalers that are driving markets higher. It's actually the AI beneficiaries. That's going to cause some disruptions, particularly in sectors like software.
Take a short break. Cues from the commodities market on the other side. Stay tuned. Welcome back. On to the latest from the White House. US President Donald Trump spoke with Chinese President Xi Jinping last evening ahead of his expected visit to China in April. Trump said that the two leaders had a long and thorough call on trade, military issues, Taiwan, Russia's war in Ukraine, Iran, airplane, engine deliveries, and oil and gas purchases by China from the US. The president added that the relationship with China and his personal relationship with President Xi is an extremely good one. And in other news, in an interview to NBC, Donald Trump also said that Kevin Warsh would not have received the job offer as Fed chair if he had expressed a desire to raise interest rates. And while Trump said that he believes that the central bank in theory is an independent body, he suggested that the Fed should follow his lead because he thinks he knows the economy, quote unquote, better than almost anybody, end of quote. And on that note, Manisha Gupta is now here. She definitely knows commodities better than a lot of us. Manisha, good morning. What is on your radar today?
Oh, well, a lot of volatility, really. It's getting whipsawed on both sides when you look at the precious metal prices. Yesterday was a strong day. Both of these commodities were doing well. But when you look at the trade right now, we haven't been able to hold $5,000 an ounce for the gold prices. And silver, which hit $90 an ounce yesterday, is trading back around that 82 levels. So overnight was a 4% decline for silver. It's trading nearly 5 to 6% on the lower side at this point in time as well. Well, the U.S. key data is delayed due to partial government shutdown. And as you were mentioning, it really is about a lot of conversations that seem to be coming in from the U.S. president. The major one to watch out for is going to be on 6th of February, which is tomorrow. The U.S. and Iran conversation is expected to happen in Oman, and much of the further cues would really come in from that. The profit taking is exactly what we're looking at in case of crude oil prices. That one is trading down 2%. Copper fell 2.5% in the overnight markets as well. So commodity is seeing a bit of a decline across board when you look at those markets. And it's not just commodities. Take a look at the Bitcoin prices, trading at the lowest level since November 2024. So there is some sell-off continuing in all of these places.
The sell-off is continuing indeed. Manisha, thank you for that update. It promises to be an action-packed trading session. We take your leave on that note on Power Breakfast from me and the team. Thank you for watching. Bazaar Morning Call on the other side sets you up for the day's trade.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. And it's a down day once again last night. Yesterday, of course, lots of action, single stocks. IT was the big pain point for markets, although indices ended, I think, absolutely flat. I'm Prashant. With me, my colleagues Reema and Mangalam is with us today. Guys, morning.
Hi, good morning. The question is, will the tech rout continue back home in India? But the FI is bought in the cash market. So much on the earnings front, we react to trend. But today we will watch for Hero MotoCorp, Bharti, Tata Motors, passenger vehicles. And in that, throw in a volatile commodities and the Sensex weekly expiry.
Well, the street is expecting some sort of dip to come by. The bulls who missed out on that 600-point up move that we saw day before yesterday, they're latching onto every negative news as a buy on dip. And that's what took place yesterday as well. Who would have thought that, the Nifty ended 50 points higher after a 6% decline in the tech index? Will that happen today or not is something that we'll track.
I think the Infi was down a little bit, I think about
3.5%
or so. And FI buying was small, right? I mean, 30
so long as it's not
30 crores.
Right? A non-negative is a positive, is what they say, right?
Yeah, but I'm just amazed, and we put this out yesterday morning as well, that and that perhaps was a signal. You had a big a gap up, which could not last day before yesterday, right? We ended near the lows rather than anywhere near the highs. So, be watchful, and I think the global screen is not all that great as well. So let's just take a quick look at where we are with everything which is happening. So US equities down for the second day, but of course from the lows they paid losses. Nasdaq ending about 1.5 lower. Small cap index was down once. The S&P did a little better, but it's down. Wix went up a little bit. It's the highest level since November. Dollar index was up about 0.25% or so. Dollar is trying at least to start to push back higher as well. So not yet at 98, but we were looking at a break of 97, which is not the case. Closer to 98 than to 97 now. Now, precious metals, I'm just looking at spot prices, and the futures this morning in Asia perhaps are a little flattish, but this is the spot close. Gold 1.5 higher, silver about 6% up as well. That is last night. So a bounce continues after the complete positioning washout that we saw last Friday, 30% sell-off that we saw. We've come back, I think, about 50-60% of that sell-off on silver especially, which is the more violent of the two. Oil prices 2% higher to about 69. Now, all eyes, of course, on this US-Iran talks. There are some reports coming in early Asia that Mr. Witkoff, who's like, the Trump man in to negotiate something of a deal with Iran, is kind of sort of flying back. Talks have broken down. Iran is saying, well, we'll talk about the nuclear program and nothing else. And I guess the Trump administration wants a more in a way, for the lack of a better way to put it, strategic submission in many other areas as well, which of course Iran is not ready to do. So I think this is one needs to watch, and this is once again. Talks are on Friday. I think they're happening in Oman now. But as we go into this weekend with tomorrow left, this is going to be something which will be very, very closely watched. It's an important one. Oil, the IT stocks, and this was the big theme we highlighted yesterday morning, right from the word go, and complete washout here. Right? I mean, stocks sold off anything between 5 to 12%. And I just thought it's good to see where these stocks are after the big crash in US markets. So Cognizant 2% higher. So these are not large, right? I mean, these stocks sold off 10-15%. They've come back 2%. Accenture is up 0.1. EPAM is up. Global has come up a little bit. The Infosys ADR is down about 3.3% as well. There were Cognizant numbers which came through, and there's some commentary around those numbers as well, which we will highlight as we go along. But that is the IT services. Now, chip stocks, right? AMD was down very, very sharply, but other chip stocks also were down and out. And you would think, well, it's counterintuitive, right? Chips go into AI, and AI is disrupting IT services software, so why should chip stocks be down? But it's one big circular loop. I mean, especially with regards to Oracle and, some of these other large companies, which also are in these areas, not just products, but services as well, and perhaps fears that there'll be lower demand for some of these AI chips. Now, I just sort of tie in the levels here. What FPIs did, they were very small. They didn't sell. I mean, I think that's a better way to put it. As Mangalam said, there was negligible cash buying, next to nothing really. And they covered another roughly 10,000 odd contracts in index short. I'm just looking at just the index contracts, not options, but another 10,000 odd contracts. They're still short. But from last Friday, they've, covered what I think about 50,000 odd contracts. Net shorts have been covered. The support zone doesn't change. This is the big gap that we saw after the India-US trade deal on Monday night. This is the Tuesday to Monday gap. So that's the support zone, 25,450 to 25,640. That's the high on, that's the low on Tuesday and the high on Monday. That's basically the gap zone. And the recent high, of course, is 26,373. But I think there will be some stops between that and where we are right now. So we'll have to kind of sort of take it as it comes. For now, lots of earnings, lots of single stock action, which I think will keep us busy. GIFT Nifty will give you a quick sense of how we're likely to start. We're down about 37 odd points this morning. The F&O positioning and how we're looking. Mangalam, take it away.
Well, you know, it seems as though the 600-point up move that happened post the India-US trade deal is where the market will settle. The earlier range was 24,950 thereabouts to about 25,300. Now that's settled about 650 points higher. So that's exactly what the F&O position also suggests. So if you look at the overall move of the market yesterday, who would imagine that the Nifty ended about 50 points higher when the Nifty IT was down almost 6%? The reason for that was towards the end we saw some purchase in the IT stocks as well, but all through yesterday's trading session, it was Reliance and the Nifty Bank that powered the frontline indices ahead. The broader markets also did extremely well. If you look at the levels, that ties in with technical levels perfectly. If you look at yesterday's low on the Nifty, 25,554, and the high, 25,818. Where does that compare, or how does that compare with the 20-day moving average and the 50-day moving average on the Nifty? The 20-day moving average is around that 25,500 mark, and the 50-day moving average was exactly where yesterday's high was at 25,818, and that exactly is the kind of range that the street expects after this new 600-point reset on the frontline index as well. The FIS, after a 5,000 crore purchase in the previous trading session, did not sell yesterday, and that was a positive. And they continue to cover their short positions in index futures. Yesterday's purchase was close to around 1,800 crore rupees with near 4,000 long additions and 6,000 short covering. So net contracts coming down by almost 10,000. So if you look at the FII positioning over the last few trading sessions, in just the last 4 trading sessions, the FII longs have increased from 12% to 19%, and net contracts have come down from 2 lakh to about 1.5 lakh on the short side, so a covering of nearly 50,000 contracts. So on the obverse side, the shorts have actually come down from 88% to 81%. Still fairly net short, but they are reducing their contracts. At the same time, yesterday there was incremental writing on index puts. So if you look at the FII options selling, they sold twice as many puts as they sold calls, which tells you that the support is much stronger than the resistance on the way up. And that's where the GIFT Nifty indicating a 35, 36-point downtick is an important parameter to track whether those dips are bought into or not. The 25,700 put writers fairly active, premium of 120 rupees. 25,800 put writers as well, equally active, a premium of 100 rupees or 150 odd rupees, telling you around 25,600 to 25,650 is where the support lies. Resistance obviously comes as we move past that 25,800 to 25,900 mark. So those are important Nifty levels that I'll be tracking for. But as the Nifty moves in the range and with the hope of a downside being protected, the important part is mid and small caps are likely to do a lot better. And that's something that we've seen over the last couple of trading sessions.
Thank you very much for that. And globally on the tech front, even Alphabet, Google's parent company, came out with numbers post-market hours, and it looks like it's firing on all cylinders. Revenue was a beat, and the company's annual revenue crossed $400 billion mark for the first time ever. Search revenues, and here there were fears that its own Gemini will eat into search revenues, so they've silenced that with about a 17% growth. Google Cloud has seen a growth of 48%, which is ahead of what Microsoft reported, so that is strong. But the big headline is that the company has doubled its capex guidance for this calendar year, and it stands at about $185 billion, which means the AI infrastructure wars continue.
Rima, I'll tell you, but the numbers are not all strong, right?
Yeah.
But look at the share. The stock was down 1.5%. And that is the point I was...
Came post-market hours, and in after hours, it's flat.
It's down 1.5. I just checked. Oh. The point is, and this is what I was saying, Apple, for example, reported strong numbers. Share goes up. Share, I think, flat. Nothing happened. Palantir reported numbers. Stock bonds goes up 5%. Numbers were blowout. Apple reports numbers. Stock is down 1.5%. Again, strong numbers, right? Yeah. So, the signal, and the numbers are all strong, but it's the signal. I mean, and you tend to pick up these pieces in terms of where things are headed. So, I mean, there's no conclusion, but the point is that one has to be a little careful. And I think for our viewers, right, if there is a global shakeout coming and you will outperform, and the common view is that we will outperform if the global market cracks, etc. But you just want to, you don't want to be too speculative and too outsized in how you're trading, etc. Because, because it's looking a little weighty, not because of anything else, but just that they've done so well. And you had these corrections, go back the last 12, 14 months, you've had 5, 7, 8% kind of pullbacks. So that's the point.
Yeah, the opinion is mixed on what happens to Alphabet from here on. Some believe that since the stock low was about $140, and now it's closer to $350, just in less than 1 year, when people were calling out for the death of Google, it's come back very strongly. So, is all the good news perhaps priced in? And valuations generally for AI stocks have gone through the roof. But let's get in. Prashant Baroda, Portfolio Manager, Emerging Markets at Allspring Global Investment. Prashant, thank you once again for joining us. I believe you had a conversation with the other Prashant, our in-house Prashant, post the India-US trade deal. But let me begin this conversation with...
The main point was we spoke at 1 o'clock. Prashant?
It was one for you. What about for him?
Yeah. 1 a.m. and it was
right after the announcement.
He was, that conversation did not inconvenience Prashant. Yeah. This conversation, I think, is, he has to stay up late for us, right, Prashant? But he does. Thank you very much,
Thank
Prashant.
you for doing it.
No, actually, it's not too late.
It's not too late.
All right. So let's begin with, the sentiment surrounding Indian IT shares is very weak. What is your own take? Because software stocks globally are under duress. Is it warranted? Do you see a further sell-off, more valuation correction, more deflationary pressure, which puts earnings at risk? Or is it a bit overdone, according to you?
Well, if you look at just the commentary, I think it's a little bit overdone because people are projecting that AI will sort of take over tomorrow, which, is probably not going to happen. So from the IT services perspective, the growth still is very muted. So if you were to ask me, Rima, the last 3 years, if you had avoided this sector and maybe shifted to telecom or communication services in India, you have probably done really well. The risk, I think, for this sector is still in terms of top line growth. And till we see any clarity on that, I think the AI news will come and go, and stocks will kind of react to that. But it's a lot of positioning by hedge funds here, where a lot of people have been long semiconductors and short software plays. So I don't think you can make much of that at this point.
You said, right, the risk for the Indian IT companies is in terms of the top line growth. It's been very muted. But will what's happening on the AI front, agentic AI, further put pressure on the top line growth?
There is a chain of thought that it will, but so far, they're still growing top line. So we haven't seen it. So I think the proof will be in the pudding later half of the year as these companies, if some companies actually show a little bit of acceleration, I think this sector can rebound well. But if there's further slowdown, I think, it will be at stalemate. The good thing for Indian IT services versus like a lot of SaaS plays in US is that they don't come at very high valuations. They actually pay out dividends, and it's not at those high valuations that a lot of the software companies trade at in US.
Yeah, Prashant, the India market, right? FPIs, it's already starting to fizzle out. We thought at least a few days this number will be there, but of course it's. So what will it take, Prashant? And what's the feedback? I mean, you speak regularly with the investing community outside, and what's the feedback now with regards to the market here?
I think so. The key thing, Prashant, is even if you look today, you were talking about Alphabet. Alphabet announced, and they raised their capex guidance by almost 50% versus the consensus. So as long as sort of these consensus is below the capex guidance of a lot of these large mega cap players, South Korea and Taiwan will continue to do well. And I think people are positioned that way. The question really happens in the back half of the year when all of this is sort of in the consensus, what happens. So I think from the foreign investors' perspective, you have to kind of, once all these news is in the consensus, they'll look at other avenues. And India provides that structural growth story, which is not related to any of these sort of big capex plays in US.
Right. Prashant, what other macro signals are you tracking? Because on the one hand, we're looking at individual stocks and individual themes like AI, etc. But there is a fair amount of macroeconomic, geopolitical volatility as well, be it US, Iran. There is the new Fed chair, or likely to be a new Fed chair in the US, alongside the volatility that we're tracking in precious metals. So what are those signals telling you?
I think the biggest risk is going into the next 6 months is whether we do overheat a bit. So you see what happened was with this capex boom that Google, Microsoft, and all have done, is that South Korean semiconductor players are laughing all the way to the bank, and their prices have really gone vertical. So with what that means is that the other industries, which is smartphones and others, also rely on those memory chips from Samsung and SK Hynix. They are feeling the brunt of the pressure. And the same thing with metals and mining. As commodities sort of are rising, you will see, some of the margins of auto companies, while some companies will be able to pass on, others might not. So the risk, therefore, is of inflationary pressures toward the back end of the year if we overheat. And that will sort of derail the equity story from a global perspective.
Prashant, thank you very much for your time. It's always a pleasure and good getting that perspective from you. We'll just quickly run you through the interactions which are lined up here on the program. So if you can just quickly move this along. So 8:35, we'll have the, Dharmesh Kant of Chola Securities joining in to talk about fundamentals and specific stocks. 9 o'clock, we'll have Girish Pai of Bob Capital Markets. And IT is still very much a lot of where the discussion is happening. 9:20, Devina Mehra of First Global will be with us. She's, of course, a strong proponent of global diversification. At 9:30, the management of Hexaway Tech will be with us to talk about the third quarter earnings. Management of Tata Power will be with us to talk about their December quarter numbers. And we'll have the management of IKS Healthcare to talk to us about the outlook going forward. Again, a company which operates largely in the US. So it'll be interesting to get a sense of what's happening. Lata will be in conversation with Ajay Srivastava on trade and, of course, the India-US deal. Also, MK Surana on, of course, some of the aspects of the deal, which, of course, one important one is oil purchases, not from Russia, but from the US and Venezuela. How viable and what will it do to the economic share for companies? That's the focus.
Right, with that, we'll take a short break. But as we do that, a lot of stock-specific action to track today. And we'll get to it in just a bit in our special top 10 segment. We're looking at Trent, Medanta, Metropolis, and Marico, along with Apollo Tyres, which are likely to be opening in the green on the back of positive news flow. And Tata Power, NHPC, Welspun Enterprises, Cummins India, along with Hexaware Technologies, stocks on our radar likely to open in the red.
Welcome back. The gift Nifty is suggesting a bit of a subdued and non-directional start for the markets. But what about individual stocks? Our research team is standing by with CNBC TV 18's list of top stocks for the day. Mangalam, the big one is Trend. Now, yesterday's stock ran up 5%, I think, by the close. Numbers are good, but can it continue?
So there are two things to look at it. The stock had fallen about 20% post its first quarter update, and the first quarter update had only the revenue, which was a miss as per street expectations. Now, the only room for a positive surprise was then the operational performance, the EBITDA. And ahead of that, the stock was up 5% yesterday already. Is the EBITDA a big surprise? No, it is a surprise for sure. But the stock has seen such a big correction that maybe it could see a mild green today. So 1,081 crores is what the company's EBITDA has been. The CNBC TV 18 poll was about 1,000 crores. Margins have expanded from 18.2% consolidated basis to about 20.2%. Revenues up 15%. We already knew the revenues up 16-17% on a standalone basis. The net profit hasn't grown as much. Again, this was expected because of the higher depreciation on account of new stores that they've added. What could perhaps take the stock higher is the management commentary. They say the outlook for the medium term continues to remain positive. Like-for-like growth for fashion portfolio was marginally negative due to the festive season shift, which is not any different from a lot of the other players. Beauty and personal care, innerwear and footwear, which are growth drivers for a lot of these retail players, is now over 21% of their revenue. Star business, own brands is about 74% of their revenue, so that's a positive. And finally, the management acknowledges the slow growth in Star, and they're saying that they are now from here on looking to accelerate Star's store expansion. So that could be another growth driver for them. The stock was up 5% yesterday, but has seen a big correction from the top, which is why I'm going with green.
All right, Mangalam, thanks very much for that. Well, we're going to focus on Tata Power next. Vivek is here with details. Vivek, take it away.
Well, good morning. A slightly subdued quarter for Tata Power. Along expected lines, remember, Mundra was shut down throughout the quarter, and along with that, power demand too for FY26 so far has been quite subdued, but a bit of pickup seen in December as well as January. On the back of that, revenues down by 9.4%, EBITDA along the same lines down 9%. Margins, however, the company managed to hold on to the margins at 21.9%. Profitability impacted down 25%. This is number one because of the Mundra shutdown, and number two because the base quarter had a one-off effect as well. What did very well? Odisha Discom continued to positively surprise. Solar cell and module manufacturing ramp-up continues. The solar rooftop business, especially, there's been a pickup as far as the solar EPC book is concerned. Yesterday, very importantly, the management in the media call said that they're in the final stages of going ahead and signing a supplementary PPA for the Mundra Discom with the Gujarat government, and that'll be a key event to track as far as Tata Power is concerned.
Right, Vivek, thanks a lot for that. Vinny, Cummins India, how are those numbers?
Nothing exciting here, Mangalam. When you look at it in terms of revenue, EBITDA, that missed the CNBC TV 18 poll. Profits, obviously, they were sharply below what we were expecting. Why? But because there was an exceptional item that came in, exceptional loss this time of 126 crore. Labor code impact is that 126 crores, which we're talking about. If we remove that, then the PAT would be in line. But revenue, as well as in terms of the EBITDA performance, that was below what we were expecting. Now, domestic sales, that remained muted at a decline of around 2%. Export sales, we were expecting that to do well, but that is also just seen a growth of 2%. Management is highlighting that because of the geopolitical tensions, there could be some more pressure that one could see on the export front as well. We'll watch out for that. But key is going to be to keep an eye out on that con call commentary that will come in. The con call is at 10 a.m. today. What is the outlook in terms of data center? The union budget has spoken about the tax holidays on data center. That becomes a positive for Cummins. How is that order book for data center, and the outlook on data center now is going to be the key from here on. As of now, we could see it open in the red. Maybe commentary in the con call is something that could change the move for the stock then.
Thank you very much for that. Hexaware has reported a muted quarter. The company's revenues declined by 1.5% in That's Q4 of calendar year. They follow a calendar year reporting, but that's in line with expectations. Margins dropped by 60 basis points to 17%. This is the EBITDA margins, and that has missed the mark. The company has wrapped up last year with a growth of 7.1%. Their commentary suggests that calendar year 26 will be better than the 7.1% that they had in the prior year. But they have, now moved to EBIT margin reporting. So earlier they would give a guidance on EBITDA. Now they're saying we're moving to EBIT margin guidance 13 to 14%, and that is lower than what they reported in calendar year 25. So all in all, it's a muted set of numbers. Revenues down 1.5% and margins have compressed. While for next year, they are guiding for an improvement in top line, the margins should be lower.
All right, and no good news for tech either, so the stock in the red. But Vivek, NHPC and Welspun Enterprises, no positive surprises there either?
That's right. NHPC, Q3 is typically a seasonally weak quarter. Not too much of water power or hydropower is generated during this particular quarter. So on the back of that, revenue is down by almost 2.9%. Again, a year where we've seen muted power demand, EBITDA down 79%, but EBITDA impacted by multiple factors. Other income higher by almost 3.2 times on a year-on-year basis. A one-off charge of 781 crore, which will be reversed. So, that we have to look at that particular EBITDA downtick in that context as well. Margins very weak, 9.5 versus 44.4% on account of the factors listed. And profitability down by 5.2%. Now, coming to Welspun Enterprises, the important part is the management has downgraded their revenue guidance. It's on the back of execution weakness that the company is seeing in FY26. So, revenue is now seen at 3,600 to 3,700 crore versus an earlier guidance of 4,000 crore. Revenue is down 12% on the back of muted execution. Along with that, key order which the company was expecting has now been deferred slightly. EBITDA down 2%, margins at 19.6 versus 17.7. Company has moved to higher margin execution projects and profitability down by 66%, but a one-time impact of close to 50 crore on account of a write-off in the Kutch oil block. Order book quite healthy, 15,000 crore. Management joining us later today. We will get more details on the deferred order. It's a large order and that will be something that will aid the order inflow.
Thank you very much for that. Over to Ekta now for more on Medanta and Metropolis. Hi, Ekta. Good morning.
Morning. I'll start with Metropolis. It was a good set of numbers. The revenue was up around 26%. Margins came in a little lower at around 23% sequentially, and the profit at around 41.3 crores. Now, the patient and test volume growth was in double digits, 14% and 13% respectively. True Health, which is basically their preventive testing and their specialty portfolios, both did well, was up 37% and 34% respectively. Now, in terms of Medanta, they reported a revenue growth of around 18.8%, but the margins were under pressure because they've started their Noida operations, and that reported an EBITDA loss of around 32 odd crores and further impacted by the labor codes amounting to around 36 crores this quarter. Occupancy 59%, ARPOB, which is average revenue per occupied bed, was steady, up around 10 odd %. Expect both the stocks to possibly be in the green today.
All right, that's about Medanta. Rima, Apollo Tyres, how did the numbers look?
Well, it's a good set of numbers by Apollo Tyres, in line with estimates. Revenues went up 13%, margins expanded by 40 basis points to 15.3%. Profits have gone up by nearly 40%. But the big announcement is a mega capex. They've announced a mega expansion project for Andhra Pradesh plant, and that involves spending nearly 5,800 crore rupees. So all in all, good set of numbers in line with estimates, but there is a big capex number.
All right, a big capex number. Speaking about big, let's talk about a string of acquisitions that Marico has been doing. Just a week ago, they went ahead and bought 4,700 BC from PVR, and now they've gone ahead. And rumors were rife about this one as well. 60% stake in Cosmix Wellness for about 226 crores. Values the company at 375. Cosmix Wellness is a company in the business of protein powders, protein snacking, etc. And look at the growth of this segment and the company out there as well. It started in FY19. FY23, the revenue was 5 crores. FY25, it's 51 crores. And now, as we speak, the annual run rate is about 100 crores. So it's been compounding hand over fist. But more importantly, it's been profitable since inception. The brand has high teens EBITDA margin profile, and the company, Marico, that is, has the right to acquire the remaining 40% as well after FY29. Does it move the needle much for Marico? It's a 100 crore revenue business. Not necessarily, but it ensures that the company is making acquisitions in the right spaces. It's just the way Marico has been doing over the last few, years in terms of diversification. So I'm seeing this as a green in terms of strategic development. And I've tried the product. As an unabashed champion of all things protein, I quite like it. I have to tell you, Cosmix is a good brand.
I'll try it.
You should. It's plant-based protein, and now they've come up with the fermented yeast protein as well. And if you do not like the milkshakes, etc., you can get the protein pancakes. I personally prefer the protein pancakes.
Never tried any of it, Mangalam, but I will now.
But I know a lot of my friends who use this.
Cosmix.
Yeah, Cosmix.
Okay, well, that's basically the top 10 list. And here's a quick recap, right, with the stuff with positive news flow and negative. So on the positive side, we've got Trend, Medanta, Metropolis, Marico, and Apollo Tyres, while stocks with negative news flow are Tata Power, NHPC, Welspun Enterprises, Cummins India, and Hexaware Technologies. All right, well, commodities in focus, right? And Manisha is here with what's top of mind. Manisha, good morning. What's on your list?
Well, it's profit taking across board in commodities is what I look at it like that, not just commodities. Bitcoin also is trading at a 12-month lows right now. But I'll start with gold and silver. And yesterday was a good day. Metals gained yesterday, but overnight it has been a profit taking. So gold fell 2%, silver fell 4% overnight. And if you look at the markets right now, it's a very, very sharp decline coming in on your screens there. We did see $90 an ounce yesterday. It's trading at $74 right now. So big profit taking yet again coming in. I mean, this is something that we've been talking about, that the sharp correction that we have seen and the kind of run up before that, the profit taking or the declines are not done with yet. So every gain that you see in many of these commodities, including gold and silver, there are further lows that you perhaps could be looking at. And that's exactly what you're looking at in silver right now. Some profit taking has continued in case of crude oil prices also, while there's a lot being said between US and China, US and Iran as well. But the markets feel that they would give time until Friday. In Oman is when US and Iran are going to have a conversation. Further direction, of course, for the markets would come in from that one. Take a look at the copper prices. Very sharp cut coming in on for that one as well. Yesterday was 2.5% of a decline. It's trading 2% down even at this point in time. The inventory rise that we have seen in case of copper in Shanghai, US and LME seems to be weighing onto these commodities as well. But majorly, the kind of run-up that we've seen in last 12 months for commodities, this is profit-taking, purely just that.
Manisha, spot gold prices were higher last night, right? If I'm not mistaken. So the sell-off is this morning, or gold and silver,
No, it came,
or was there some
overnight, Prashant? Before the New York markets closed at 11:55, 12-hour time, it already was down 2.5% in the markets there. Silver was down 4.5% as well. So before New York shut, we already had seen a sharp decline, and Asia is just following it.
Yeah. Okay, got that. Manisha, thank you very much for that. We'll take a quick commercial break here. We'll get you excerpts from our conversation with two global business icons. We have Reliance's Mukesh Ambani and BlackRock's Larry Fink. Stay tuned for that mega CNBC TV 18 exclusive. Okay, welcome back. This is a CNBC TV 18 mega exclusive. Two big business tycoons, leaders, Reliance's CMD, Mukesh Ambani, and BlackRock's chairman, Larry Fink, came together under one roof to discuss the art of investing for a new era. In a conversation with CNBC TV 18's Shireen Bhan, both spoke on a broad range of topics, ranging from India's growth potential to the impact of AI on economies and sectors like healthcare and other areas as well. Listen into a slice of this conversation.
What excites me the most is the startup industry. When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, right, 100 new Reliances in terms of where and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India.
Let me come back to you on the investing in India's growth opportunity and this new era that we're speaking about, and the role of making strategic choices today, which will require patient capital. And I want to understand from your perspective what it will take actually to build patiently with patient capital over the next 2 decades.
Well, I think that the Indian opportunity, as we stand at about $4.5 trillion of GDP in a $110 trillion world. Right? I see us outgrowing the world and finding our right place. So I am one of those believers who think that this 4.5 in a 20-30 year period, right, will outgrow the rest of the world, and we will hit $25-30 trillion. It's going to be 30 years from now, but as we do that, the India opportunity is a 10, 20, 30-year opportunity. And when you think about solving India's energy problems, I am a believer that in the next decade, India will not import 80% of its energy. We have a path, and God willing, with technological breakthroughs, we will be reasonably self-sufficient in energy.
So when you think about the growth of India, it's not a quarter, it's not a day or a week, it's not a year, it's over a long horizon. And you could say maybe this is the era for India and over the next 20, 25 years.
What excites you the most about India? You referenced the tariffs, and we've had a deal with the US overnight. President Trump and Prime Minister Modi have signed off on that reciprocal tariff agreement. So the overhang has lifted at least on one aspect of that relationship. How crucial a development is that, and what excites you the most about India today?
Well, let's be clear, over 20 years it had no bearing. Maybe over the next 6 months or a year, it had some significant bearing. But over time, the foundational issues of India, how it's able to leapfrog. I mean, you watch what has, over the last, I would say, since the era of the smartphone. And I think that's a pivotal point. 2012 was, I mean, think about your life before the smartphone here in India. But the beginning of the smartphone, the rollout of 5G, and how that transformed India in so many ways. When you think about how the Modi administration digitized the rupee and how it transformed commerce in India across the board, I am very worried about other countries, even the United States is falling behind.
Right, interesting conversation out there. Two leaders of the world. Let's take a short break, come back, we'll be joined by Dharmesh Kant, the head of research, Chola Securities, for some fundamental stock ideas on the other side. Welcome back. You're watching us here on Bazaar Morning Call. The Gift Nifty down about 35 points or indicating a 35-point lower start. 45 points now. Let's see whether that dip gets bought into or not. Similar to the kind of gain that we saw yesterday, maybe we open flat as compared to the open. Dharmesh Kant, who's the head of research at Chola Securities, now joins us. Dharmesh, what do you make of the trend numbers that came over after markets yesterday? The stock was up 5% ahead of numbers.
Yeah, good morning, Mangalam. Thanks for having me for the show. See, the stock was definitely up 5% in anticipation of some good numbers coming through, but overall, revenue growth of around 15-16%, mid-teens kind of revenue growth was there. There was definitely a margin uptick in the trend numbers, but going by what is the new norm for trend to deliver, for times to come would be around 15 to 20% at best they can do. Valuation multiples of trend was, given on the basis of at least, 35, 40% kind of a growth rate. So from there, there's been significant drop. And this is, 2-3 quarters of consecutive decline in the top line growth. So I think trading bounce can still happen. But the valuation comfort is not there. And this will be the new norm for the numbers going forward. Based on that, I don't think it's still a fundamental buy because valuations are still very expensive, way ahead of the growth rate which is about to come for this company. So trading play can be on, but as far as fundamental, long-term buy is concerned, it should be avoided.
All right, a trading bet is on, but not necessarily a fundamental up move. The stock last checked was close to around 70 times 1 year forward price to earnings in terms of valuations. What about the IT pack? The rout continued yesterday and overnight on NASDAQ as well. Do you think it continues today? At what point does it become a value pick?
Yeah, one of the problem with Indian IT space is we are always left catching up or replicating what the world has to offer. The Sensex was, established in 2021. In 4 years time frame, they can come out with products which can disrupt the entire ecosystem of the IT world globally, including the, big weights in the US market. We have a history of more than 30 years in the IT servicing part, and still we end up managing the back end of the system. And what is the growth level? 4-5% kind of growth in IR terms we are talking about. And if there is a 50 basis point or 100 basis point kind of an improvement in guidance, we are celebrating that. If you take the currency advantage away, the currency depreciation which India is having, this will come down to 1 and 2%, or it can be even a negative kind of a scenario. So to my mind, unless Indian IT companies come out with this disruptive kind of a product, which the world is there to be, for the taking, it won't change the scenario out here. We can talk about sequential trading place in there, but large caps to be totally avoided. Software as a service is into a question mark now, but product companies still merits a chance. So one is to focus on Indian IT product companies because product is what will be the newest technology and the advantage will come through from those companies. So we are completely avoiding the IT companies except Orient Pro Solution, which we have a recommendation on. The earnings came through yesterday. Earnings was operationally, the earnings was pretty good. If you look at sequentially, there was improvement of, revenue was 3.74% up, EBITDA was 4.7% up, and EBIT was 5.96% up, with margins improving, EBITDA improving by 20 basis point, EBIT by 70 basis point. Top line on a year-on-year basis, revenue growth was 21%, slightly lower than the management on guidance, and they have guided for 30% kind of a growth for entire FY26. 9 months, they have done 26%. And the reason for this kind of a slowdown in Q3 mainly was maximum order wins came in the month of December and November, which will be executed in Q4 and Q1 of next financial year. So around 6 order wins were there, 4 from banking space, 2 from mobility space, and almost 400 to 450 crores of the size of the order book has been there. Normally, they do 12 to 15% kind of a execution in the quarter. So I think Q4 is likely to be better. And data center order win has been there from the IDBI Bank. That's happened a few days back. Though it's a small size, 20 odd crores roundabout. But I think this opens up the opportunity for further opportunities coming in the data center space. So management, will be doing a phone call today evening. We will be focusing keenly, watching that and discussing out there. Let's see what they have to guide. But I think they will do near to what they have guided for FY, by the time we end FY26. Again, in such an environment, it's a good growth numbers which has come through.
Okay. In the past, you like Persistent and Coforge. that's out of the portfolio now?
Yeah, Rima, seeing the kind of development which is happening and which will happen, definitely, I mean, near term, there won't be any impact on any of the profitability of any of the IT companies. They would be going with a steady state, what they have given. But definitely, as things improve and the type of disruption is happening, so India needs to have some deep sea anthropic kind of companies out there. Otherwise, so, I mean, normal maintenance will definitely come under cloud going forward, and this is what we have seen. So that's definitely out of our kitty now.
Dharmesh, the last time we spoke, you said in the entire defense pack, Hindustan Aeronautics is a stock that you like. Valuations relatively were attractive at 30 times forward multiple. Now, just yesterday, there was news about how the company is out of the race to manufacture those stealther jets. So it's a potential order loss of 15,000 crore rupees. Not significant when you look at the overall order book size, but the stock was under pressure. And today, Morgan Stanley has downgraded HAL, and they're citing increased competition from private players. What is the view on HAL? Have you spoken to the company? What's the call?
No, we have not spoken to the company. The reason being the numbers are yet to be out and they are in a silent period. Once the numbers come through, then maybe an interaction will happen. I mean, fundamentally on the numbers front, they are sitting at around 8x their book-to-bill ratio. So ample of visibility of 15-20% kind of a growth going forward for next 3 to 4 years. No problem out there. At the same time, the execution was delayed because of not their fault, but because of the fault of, I mean, GE was not supplying the aircraft engines, fighter plane engines. So that's the reason why the execution has come under a bit of a problem. And the government of India has, now came out with a new rule where you can't have an order book in excess of 3 times book-to-bill ratio. So many of this, not only HAL, there are other companies like BE and all, they all will have face the same problem when incremental defense orders are being announced. I mean, what Morgan Stanley has cited sentimentally, yes, definitely, because the private players, all 3 private players, be it Tata or Bharat Forge or L&T they are coming through an indirect route by having a tie-up with defense companies. And this will open up the competition. So, I mean, now the thing is very clear. You have to execute and it's good. There's no monopoly. There will be many competitors in the race, and that has a, sentimentally negative impact. But seeing the valuation multiples in which HAL is standing and the type of book size they are there, and if they are able to demonstrate execution capability in say Q4 and Q1 of FY27, it will be back in the reckoning and business. So we have advised our clients to stay put. In fact, we have advised to add HAL in yesterday's fall.
Okay, advice to add HAL in yesterday's fall. Dharmesh, thank you very much for joining in. It's over now to Hormus to highlight all the big movers delivery action that took place yesterday. Hormus?
Good morning, Rima, and of course, can't not talk about IT and the 2 big names, of course, that led the fall yesterday, both Infosys and TCS, together wiping out over 1 lakh crore in market cap, and both of those stocks all saw cumulatively trading worth close to 8,000 crore rupees in yesterday's session. The biggest single-day fall for Infosys since July of 23, for TCS since March of 2020. Both of them had their highest volume since July of 2024. So fall plus on high volumes as well. Now, Infosys had close to 3 crore shares that were traded yesterday, 20-day average of around 74 lakh shares. TCS too had over 1 crore shares being traded, almost 3x of its 20-day average, which is close to 32 lakh shares. And on the delivery front as well, Infosys had almost 2/3 of those shares marked for delivery compared to a 20-day average of just over 40 lakh. And even for TCS, 66 lakh shares were marked for delivery here too, higher than the 3x of its 20-day average, which is close to 20 lakh shares. Now, stock that has been on the rebound is Gokaldas Exports. Another 20% upper circuit yesterday, second straight day of such a move for the stock. In fact, when the stock opened on Tuesday, the stock was up in 20% circuit, and all 100% of the shares were marked for delivery that day. But in yesterday's session, the volumes were the highest in 3 months, close to 1.5 crore shares that were traded, 20-day average of just around 13.5 lakh shares. And here too, 30 lakh shares marked for delivery, 20-day average being just over 4.5 lakh shares. And from a 52-week low, the stock in a matter of 2 sessions has gone up to a 2-month high now. And lastly, a stock that should be on your radar today after the results from Qualcomm last night is Dixon Technologies. The stock was up for the 3rd straight day yesterday. This gained in 6 out of the last 7 trading sessions. Now this one too, the stock has rebounded from the January 27th lows of less than 10,000 rupees. It's up 17% since then. 4 out of the last 5 sessions has seen volumes in excess of 10 to 20 lakh shares. Yesterday, 15 lakh shares were traded, 20-day average of 8.5. And out of those 15 lakh shares, 4 lakh shares were marked for delivery. The 20-day average here being just around 2.5 lakh shares.
All right, Hormuz, thanks very much for that. A very interesting data and data sets. We'll take a break. We are back with, of course, the pre-open session in 6 minutes' time. Girish Pai of Bob Capital Markets will be with us to focus on, the IT stocks and where they go from here. Stay tuned, coming up. Okay, welcome back. 2 minutes to go for the pre-open session to kick off. Mitesh Thakkar is with us, and so is Sudarshan Sukhani. Gentlemen, morning. Good to have both of you here. Thanks very much. Mitesh, you go first. How are things set up and how are they looking? Yesterday, of course, things cooled off and we ended slightly higher. IT was a big casualty. Is there enough steam, or is the steam running out?
Morning, Prashant. So I think, the steam isn't running out, but I think it's just trying to absorb the big gap up which happened on Tuesday. And therefore, you might see some volatility. But my sense is that as we get closer to about 25,500 zones, in case we do that, yesterday we got a low of 25,560. But anything close to about 25,500, I think, would be a buying opportunity, because the short term, the hourly, the 2 hourly charts are all pointing up with that big gap up. But yes, typically these kind of big gap ups do produce a certain amount of retracement before the trend resumes again. So I think that process is on. 25,500, 450 is my strong support zone. Preferred buying area on the index is 25,500. And I've talked about the bank Nifty, saying that we've never had a closing above 60,200. Yesterday was a very minor closing about 60,200. But in case we can build upon the bank Nifty's movement, start getting past yesterday's high, then I think we should see momentum in the bank Nifty as well.
Sudarshan, your call on the indices?
Yeah, good morning. See, my view is that we had this big rally and the markets are likely to consolidate. That normally happens. We have this cycle of expansion and contraction. We are going into that contraction phase now. So inside this consolidation, trading the Nifty would be very difficult. First, we'll have some narrow range days like we had yesterday. Sometimes there'll be choppiness without direction. The correct trade is to wait patiently if it happens for a dip towards the same level, 25,400 to 25,500 in that zone. If the Nifty comes in that zone, then it becomes a buying opportunity. Till then, just avoid it.
What about stocks, Sudarshan? Good morning.
Good morning. Well, ICICI Prudential is a buy with a stop under 645. Exide is a buying opportunity with a stop under 335. Havells is a buy with a stop under 1320. And finally, all of my trades are buys. GMR Airport is a buy with a stop under 95. So there are 4 mid-cap buying opportunities.
Mitesh, your buying ideas or trading ideas?
I have all buying ideas as well. A buy on Concord with a stop at 515 for targets of 550. DMart, was a call yesterday with a target of around 38.50. It hit a high of 38.49. But once it crosses this 38.50 mark, the chart is still strong, then I think it should get more momentum. So now it's a conditional buy above 3851. Keep a stop at 38.15 and 39.40 should be the near-term target. Then a buy on Eternal with a stop at 288 for targets of 306. And Petronet is somewhere getting a lot of strength on the medium-term chart. So in the short term, there's a buy with a stop at a 293 for a first target of 309.
Okay, thank you, gentlemen. We'll keep coming back to you. Just quickly talk about the technology space and the big headlines coming out of there. Cognizant, that's also an IT services company, but not listed here, though they are planning a dual listing sometime in the near medium-term future. They came out with the numbers, and the calendar year 26 guidance surprised the street. It came in at 4 to 6.5%, and the stock closed up in the green with a gain of about 3%. So that is positive. But separately, in NASDAQ, the selling continued for the second day in a row. Even yesterday, NASDAQ was down 1.5%. And the problem here were the chip stocks. So AMD plummeted nearly 17% after their Q1 guidance disappointed the street. And along with AMD, even the rest of the semiconductor stocks were weak in trade. So Micron selling off 10%, Applied Materials, Broadcom, also under pressure. In fact, you're seeing weakness in Kospi as well today. Just separately, Kospi is down nearly 3.5%. So this entire pack is under pressure. But Alphabet is now a $400 billion giant in terms of revenues. And across the board, good numbers. Search revenues, where the street was fearing that ChatGPT, etc., will eat into the traditional search revenue. That went up 17%. Cloud has come back, beating peers, 48% growth. And plus, the big war chest for CapEx. The company has doubled the CapEx guidance. But finally, back home in India, yesterday we had a big rout in capital name IT stocks. Stocks were down 6.5% at the index level. Jefferies says that Anthropic's plugins are a threat to Indian IT. They're saying these AI agents can target Indian IT's application services, which is about 40 to 70% of Indian IT companies' revenues. And therefore, current consensus growth does not factor in this revenue erosion. So there is a possibility of a downside risk to IT valuations, and their stance is selective. But let's invite Girish Pai, research analyst, head of institutional equities, head of research at Bob Capital on the show. Girish, thank you very much for joining in. You've been a close watcher for so many decades now on the Indian IT. You've seen multiple cycles. What is your read? Are we reading too much into this agentic AI eating into disrupting the business model of Indian IT companies? And what is the advice you're giving to your clients?
Yeah, so Rima, we need to kind of step back a bit and look at the broader picture. So we've seen 3 years of slow growth for the Indian IT services industry. So FY26 will be the third year. And there was an expectation that FY27 is going to be a slightly better year from a revenue growth standpoint, a pickup by about 150 to 200 basis points. I think that is on. I think the question is whether that is going to continue into that momentum is going to continue into FY28 and 29. So what this whole discussion around agentic AI is basically throwing in somewhat more uncertainty into the minds of investors. So what people are going to question is the EPS CAGR. So right now, people are building in something like 6, 7, 8% kind of EPS CAGR between FY26 to 28 or 29. People are questioning that, whether that will go down to like low single digit or probably go into the negative territory. So that's one part of the picture. On the other side, you have software stocks, packaged software stocks, which have been impacted by AI for the last 12 to 24 months. I think if you look at most of these companies, stock prices have been down anywhere between 25 to 45% in the last 12 months. So they have been impacted by this whole cloud over them because of AI, while earnings have been coming through at a reasonable rate. Now, the issue between software, packaged software, and Indian IT services companies is that Indian IT services companies have got a fairly large package implementation business. Now, that could potentially get impacted because if Fortune 500 CIOs and CFOs are going to kind of step back in terms of their purchase of packaged software because they think they could get a little cheaper, or they're probably not so sure about how the AI is going to impact these kind of companies, because this packaged software tends to be very expensive. Rollouts, global rollouts could be like running into hundreds of millions of dollars and stuff like that. So people are worried on that particular side, whether there's going to be some downstream impact in IT services. So I think right now what we're seeing is a PE multiple contraction, not so much an immediate EPS contraction, but I think that is probably on the horizon if some of these worries do pan out.
Girish, hi, morning. So what is the compression required now to kind of sort of adjust to the new reality? What's your sense? I mean, how do you think about that?
Yeah, Prashant, that's been one big question that I've been asked by lots of institutional investors. So right now, if on current consensus estimates, I think if you look at the 10-year history of tier 1 IT services stocks, we're somewhere in the 10-year average region. My sense is that a good number could be somewhere a standard deviation below this, maybe like a 10-15% correction will probably take into account some of the compression that we'll probably see in earnings. Again, it's up in the air as to whether that's going to happen at all or not. But if it does happen, then I think probably a 10-15% lower number from a stock price perspective would be a good entry point. Again, we need to kind of watch how this kind of plays out, because on Cognizant call yesterday, the CEO there kind of brushed aside some of these worries on because of AI impact on IT services.
Sorry, just respond. So you're saying we are at the 10-year average, Girish? We are at that level already. So another 10-15% from here. That's the point you're making.
Yeah, so we are at that. We are at the 10-year average level, assuming that the earnings hold up and assuming that the earnings going forward are going to be at the same rate as what people are believing are currently kind of factoring in.
Okay.
There's going to be some downside to that.
Yeah.
Obviously, those multiples will change.
To flip that question, there is no way P multiples go up now, right?
So unless the cloud, when you say cloud, the overhang on the Indian IT service industry or the general software industry kind of lifts, which means that people should begin to believe that AI is not going to have a material impact on the revenue and earnings growth of these companies.
Should we paint the big caps and the mid caps with the same brush? And are there any specific companies, Girish, that you believe maybe, able to weather this storm and perhaps are opportunities to look at after this fall?
Yeah, good question. So I think last 3 years, while the industry is been going through a bit of a slowdown, I think tier 2 companies, selective tier 2 companies have done fairly well. The Persistence, the Coforges, and some others, the First Sources and eClerx have done well. I don't have a positive view on Persistent, Coforge because of the valuations, and Coforge because of the fairly expensive acquisition they did of Encora, which is going to dilute their return ratios in a very significant way. And obviously, there's going to be a lot of equity dilution too. I'm more in favor of the BPO companies there. AI was supposed to disrupt BPO in a very significant way. That has not happened because some of these companies have infused AI and tech in their services in a significant way, leading to fairly strong growth. In fact, Cognizant also said that they've had a 3-year CAGR in BPO services growth of something like 9-10%. So I think BPO services are kind of holding up. And right now, to me, that seems to be the space I would kind of bet on. And that's not discretionary. That is like you need to kind of spend. That's need to spend kind of an area.
That's amazing, right? BPOs are holding up. That was supposed to be the first thing which gets disrupted, right? We had this this big merger with the company which folded into Capgemini. WNS, right? So so now the evolving thought is that is not getting as disrupted as we thought. That's what you're saying, Girish.
Right, absolutely right. So we don't know. As things stand today, it doesn't look like that is going to be disrupted. And interestingly, the CEO of Cognizant said that the potential spend in that area, operations/BPO area, is like 10x, 20x of the IT spend. So the fairly large market to address. And in fact, a lot of the business is actually coming from internal spend going outward. So there's a lot of outsourcing happening here.
Yeah. You know, in your long experience, one name which kind of will be able to weather this storm, in the Indian IT space, we know we had Sandeep of Sovelo yesterday. He said he's focused on small caps, large caps, but small caps he's quite positive on, niche and those kind of names. Any names here, in your opinion?
No, we don't have coverage on the small caps, so I really can't comment on them. The ones we have coverage on, I think First Source is one and eClerx is the other, which I would probably kind of recommend at this point in time.
Yeah, Sandeep likes First Source as well, I think. Thank you very much. Good conversation, Girish, and hope you come back as this is an evolving conversation and we wake up to new things nowadays, especially with regards to what AI is doing, the impact that it is having as far as markets are concerned. You know, there's 4 minutes to go for the market open to kick off. So let me just quickly get the 9-10 calls out of the way. Sudarshan, what do you have?
I have GMR Airport. Buy GMR Airport with a stop under 95.
Okay, long GMR Airports from Sudarshan. Mitesh, what about you?
I think Eternal would be a good long trade.
Sorry, which one?
Eternal, Zomato.
Eternal is a long trade. Got that. Let's just now move on to another stock, Cummins, right? And this is a bull versus bear kind of case that we want to put out, giving you both sides of the picture. Vinny is here with what the debate is about. Vinny, take it away.
Hi, so yes, while numbers have been largely muted during this Q3 FY26, we have a couple of brokerage notes that have come in. Nomura, they're maintaining a buy call, target price of 4,780 rupees, one of the higher end of the target price for Cummins that we're seeing. They're saying that domestic demand, that is something they saw that was supported by the sustained capex cycle for the company. Near-term pressure on exports, they expect that to continue as well. But medium to long term, they see export outlook that will start stabilizing for the company. They see strong balance sheet as well as disciplined allocation that is something that they expect to support the growth for the company. Now, on the bear side, we have UBS that is maintaining their sell call. The target price is 3,400 rupees per share. For results for them, largely revenue was in line, but the stock reaction, they said, is going to depend on the management commentary of where that is going to be headed, because EBITDA front, that was a miss for the company. JM Financials too is maintaining a sell call. Target price is 3,630 rupees. Obviously, they said that the domestic sales for them was a miss coming in. They said the fall that the one saw in coming in for the exports on a sequential basis was much sharper than what one was anticipating. Q2 FY26 management had highlighted that there could be some muted performance there, but a sharp fall is not something that one saw coming in, and that is why they said that was quite surprising for them, and they do not see any benefit of depreciation of INR versus USD for the company as of now. So that is the bull versus bear case scenario from the brokerages coming in this morning.
All right, Vinny, thanks a lot for that. I'm looking at the QSR space, and Always fun to look at this, especially in the morning. But we got McDonald's numbers yesterday, Westlife Development. We got Devyani's numbers as well. And both the stocks did okay-ish. Devyani actually saw a big spike post the management commentary. And the street liked the fact that maybe January sales pickup has been good. December wasn't a very good quarter for all these companies. But Macquarie has written that, positive same-store sales growth in January is something that they liked. Normalization of third-party aggregate delivery business in the fourth quarter is something that they like. And traction in the dine-in business led by value options and innovations. However, here's where the catch is. January recovery, according to them, may not sustain given prior false starts in the industry. And we remember here at CNBC TV 18 as well, have QSRs turned the corner a couple of times. And the fact that we had to do it a couple of times means that it did not sustain that pickup. And that's what, Macquarie says on Devyani International as well. They have an outperform rating, target of 160 rupees. They're saying sustaining Jan pickup in same-store sales is key. Jefferies has upgraded the stock because for Devyani and Sapphire, it's an event-specific moment, right? The merger with Sapphire may involve short-term uncertainty, but it is a long-term positive as per Jefferies. On Devyani International also yesterday, there were management changes. So Bernstein also is positive. So it's a decent start in January. We don't know whether that sustains or not.
Okay, I think we've got market open coming up on your screens right about now. What do we have? First rates, 25,690 or so on the Nifty, which is down about 1/3%. That's 80 points. You've got the Nifty Bank, which is almost flattish, red, green, but basically unchanged, undecided. The Sensex is down about 0.2%. The mid-cap index is down about 1/3%. The small-cap index will come up as well with what it is doing, about 0.5% lower on the small-cap index. 800 up and about 600 lower. That's the advanced decline ratio as things stand right now. And that's the screen, folks, with what's happening. 45 lower on the Nifty, 25,725 at this stage.
All right.
Well, I don't think we have the heat map coming up, but maybe we'll have more individual names. Let's throw it across to Mangalam on the big wall, Mangalam.
Yeah, let's go across. It's a 60-point downtick is what we're seeing. But on the Nifty gainers or the Nifty losers, the top mover today is actually Trent. Why do I say that? Because, the stock was up 5% ahead of numbers yesterday. The street was anticipating a bit of a beat that would come by. But turns out maybe the street does not like, or maybe a large part of the margin surprise has been priced in, which is why the stock is lower. The advance decline, which opened in firm favor of advances, has now come closer as well. So we do have enough number of stocks, an equal number of stocks advancing and declining. Let's look at some of the other result reactions. Medanta and Metropolis, both of them had reported a decent set of numbers. So let's see whether the street likes it. Perhaps not. On a decent set of numbers, the stock has seen a bit of a sell-off for Medanta. Metropolis as well should come up for you. My sense is in the pre-open, it settled in the positive and now has opened about 4% higher. Force Motors, that's the stock of this morning, up nearly 4%, a very strong performance coming in. All of 2025, the stock has seen a big move, and this continues. CCL Products is the other one. Higher coffee prices has improved their realization, so 59% profit growth out there, 5% higher on that stock as well. Two other stocks, JSW Cement, it turned around the bottom line. They reported a big profit versus a loss. Let's see whether the street acknowledges that. Yes, 4% higher on that one. And Avalon Tech, the stock has been in favor of the US-India trade deal that happened, etc. The numbers are good as well. But after the up move that we've seen some profit taking out there. Cummins India, there is a bull versus bear case out there. Currently the bears are winning with a cut of almost 2.5% on the stock. All eyes will be then on what the management says in the con call. NHPC is the other one. Seasonally weak quarter for them. Welspun Enterprises, also a weak performance coming in from them. And Keystone as well as Jubilant and Grevia. Both these stocks are sharply lower. One pack that stands out on the way down today is the metals pack. The overnight volatility in commodities. So if you pull up something like a Vedanta, Hind Zinc or Nalco, the metals index down about 2%. The Nifty just about 37 points lower. Not a big worry so far. But among the sectors that are not doing too well has to be IT and metals. They're the sectors which are a bit on the downside. The Nifty Bank holding up after yesterday's outperformance.
Well, IT is actually now stabilizing. So the Nifty IT index is flattish. TCS, Infosys, HCL Tech, Wipro, all in the green now. And this is after the big fall that we had yesterday, and Cognizant's calendar year 26 guidance positively surprising the street. Hexaware, though, is taking a big knock, posts a disappointing set of numbers, decline in revenue, margin miss. Timken India is another one. Hindustan Aeronautics continues with the fall from yesterday. And on the way up, Some more earnings reaction. JSW Cement stands out, and Imami continues with a gain from yesterday. So that's added on another 3%.
Well, absolutely. Lots of single stock action right here and there, and there's more to focus on as we go along. We'll do that over the next 10-15 minutes. Devina Mehra is now with us, founder, chairperson, and MD at First Global. Devina, good morning. It was always a pleasure. And, you know, it's like being in the trenches pretty much every day if you're trading, waking up to new stuff, and then, you know, start is something, close is something, and then too much, right? I mean, the last 13, 14 months has been like 3 years compressed. And I'm sure you're feeling it too. We are certainly. Now, this IT thing, right? And we had Girish Pai, who's a veteran IT analyst. We had Sandeep. We had other people yesterday. Lots of opinion, range of opinion. We heard from Cognizant management about the disruption that they're facing. What is your sense, Devina? How to think about this particular question from an actionable standpoint for viewers who are watching? His point, Sandeep's point was P multiples will continue to deteriorate. And I think it's something similar, the point which Girish made as well. Your thoughts?
Yeah, I mean, I'm still working through the implications. I can't say I have the final answers yet. And from my discussion with some of the IT, this was before, I mean, this latest news, IT majors as well as NASSCOM, etc., was that they, in terms of employment, they expecting more like a J thing that employment might not increase, might even decline in IT for a while, but then, more opportunities will come and it will sort of go up. Just going back 20 odd years, there's been the kind of the death knell of IT services has been sounded many times from the time that it was all Y2K work and it will go away. Now that cloud has come, IT services will not be needed as much, or software as a service has come, it won't be needed as much. There'll be digitization. But all those things they have been able to navigate. I mean, I still don't think that employment-wise, they will be the driver for the Indian economy as an employer, as they have been in for the last 2.5 decades. So that part definitely will change. But in terms of businesses, whether they'd be able to pivot, I would still think that they would, because AI, it's not as if that AI has come out of the blue for them. They've been working towards gearing up for that for quite a while. So if you talk to the companies and the people heading the AI practices, they've been gearing up towards that. And I do not think, this is the time to be kind of panic selling out of IT. Yeah. Everything kind of moves in cycles. So you had banking last year after 4 out of 5 years of underperformance doing better. IT, let us also wait for what each of the companies say about. I'm sure they will also.
Devina,
but I'm not like in a panic seller of IT.
Yeah, Shireen spoke with Rishad Premji of Wipro, Salil Parekh of Infosys. We had TCS management and a few more. All of them recently in Davos. I mean, just a few weeks back, and they all kind of pushed back hard to what you're saying. That it's not new for them. They'll use it. And they'll be essentially very much required to integrate all these technologies with enterprise workflow, which is where essentially the problem happens.
Because see, enterprises are not going to hand over something
Correct.
to AI without an intermediary.
Yeah.
Even after, let alone at that stage, just look at even now how the IT services business works. It's not as if most of the time the enterprise directly only deals with the actual company doing the IT services, which is usually the Indian company. Normally, you have like a couple of layers above that with consultancies and the more high-profile IT companies also in the loop on that. So, enterprises always like to ring-fence all their risks, so they are not going to, kind of hand over the keys. But as I said, the delivery model itself might change.
Yeah. Palantir came out with numbers about 2 days back, but yesterday was the earnings call, and they're saying their AI platform is replacing third-party software and compressing large ERP and SAP implementation timelines from years to weeks. So Devina, while there's no doubt there's going to be, no AI platform is going to replace the intermediary, lack of a, simpler word, but it could compress the revenues. There could be deflationary pressure. Instead of requiring 5 engineers, maybe you require 2 engineers going forward. So that does put the pressure on IT. So I get you don't want to panic sell right now, but would you look to bottom fish right now? What is the advice that you're giving to your clients? And what is the position of IT in your own portfolio?
So we continue to be about market weight on IT, probably marginally more than market weight or about market weight is when I last looked at it was about that much. And as I said, there's been a long period of underperformance, so you might also want to look at that. But I'm not saying that this should be either panic selling or panic buying in IT right now.
So
the only point, Rima, is that this point about AI, right? And this is a thing to think about. Can they use AI? Like, using AI is, in a way, cutting your own... Is it cutting your own feet? That's the question. Because the model has been, billable seats and a number of hours spent, etc. But if effort is reducing 25-30%, that model, some new model needs to take place, right? But the business models are changing everywhere.
That's what I said.
That's all.
They have pivoted in the past also in terms of models. So that part, I'm sure they will be able to. It's not as if that they will say that we continue this. As I started by saying that the employment, IT as an employment driver for the Indian economy definitely is going to slow down, and that is the part which is a more macro thing. If you look at last 25 years, IT-enabled services, and because all those people were employed there, their whatever, drivers, house staff, security, food delivery, it has been a driver of a lot of things on the macro front. That's the part to really worry about.
So what drives the economy from here on, now that IT has done it in the past, and how do you play it via the listed space, which has acceptable valuations, if not attractive?
Actually, if you look at the industry-wide P's, they are not at extreme ends. I mean, there's no point looking at a macro index level PE because the composition of, let us say, the Nifty or the Sensex, you go back 25, 30 years, it's changed so much. There was at one point, there were no banks in all these indexes, and now that's the banking and lending is the highest weight. Similarly, I mean, at one point, they used to be dominated by PSUs. In between, I think, 15 years, all of us forgot that there were PSUs were listed and could be invested in. But that apart, if you look at, as I said, industry by industry, the P's, even if you look at a crude measure like that, are not at extreme ends. Many times they are below even the average for the last 1 or 2 decades. So, I mean, you can't say their valuations are particularly nasty right now. And even in terms of if you plot the market return trend line, we are not above the trend line. So all those things are indicators that you have, there could be, there doesn't appear to be any risk of a big crash. And whenever that is not the case, the thing is always to remain invested to the extent of your equity allocation. I always say don't have 100% in equity because equity is not predictable returns for 1, 2, 3 years. So don't have anything that you will need to withdraw in the next 5 to 7 years in equity. But other than that, remain invested in equity. Maybe not in the same old stocks that you bought in, let's say, 2024. That also is the other part of the equation. But remain invested, and that it is always, of course, bottom up. Out of that, right now for the last 2 years, we've been overweight auto components and later bit of auto also. So that still remains. Pharma and healthcare, our overweight still remains. Last 1 year, there were some FMCG picks that came in, some chemical picks that came in. Capital goods, of course, off and on. Last 4 years, we've been there, though not overweight anymore. Banking also we added last year. Still not anywhere close to overweight, but more than what we generally hold. So there are plenty of opportunities. I mean, they're like, depending on, what your worldview is. But, for the demographic dividend of India and their finding employment, the young working population that we add every year, the IT part can be a blow. further blow. I mean, as it is, we are not doing particularly well on that front.
Devina, but generally, are you surprised that after the conclusion of the India-US trade deal, or the framework of it, we only had a one-day rally, and after that, it fizzled out. We've had 2 sideways days. I mean, did that surprise you, since that was seen as a big sentiment, driver, and there was a change in that?
Sorry, which deal?
I'm saying the India-US trade deal. After that, we had only a one-day rally. So did that surprise you?
No, it didn't, because if you look at the listed space, the exposure to US exports is rather limited. That's one. The other thing is there's no deal yet. I mean, the commerce minister also said that not only has the deal not been signed, the exact contours have not been worked out. So exactly, what will be the products covered, what will happen to each of them, none of that has even been finalized, let alone signed. And if you look at the listed space, we don't have a big weight for the traditional exports of textile, jewelry, etc. Of course, engineering, auto components, etc. Now we have some significant exports. Pharma is another one. Which was like kind of not part of general tariffs. So it is not very surprising. But it also showed you that even a one-day move can be very significant, which brings me back to that whole thing of remaining invested, because it is when there are a lot of talk of risks and bad sentiment is when the market surprises you. So since the beginning of January, I've been saying that while I never give index projections, but the very fact that nowadays when you listen to anything, whether on television or on digital platforms, everybody, instead of talking the usual India growth story, is enumerating all the risks.
Well, Devina, you've been fairly candid in your perspective and advice in the past as well on a whole host of sectors, stocks issues, including that of the overvaluation of IPO. But you said one needs to be invested in equity to the extent the asset allocation allows. What's your sense on commodities right now, silver and gold? After the big rally that we've seen, the big crash, now there is volatility. Do you have a view here?
So, I mean, I've been saying that you should have allocation in silver and gold, but normally in both our India and global allocations, we have single-digit allocation, which, a few weeks ago, everybody was kind of jeering at me saying that you don't know, the world has changed and there's a one-way rally in gold on silver. And then you saw the volatility, because that's what history shows. If you go back 50 years, you will see, if you plot the US dollar chart of gold and even silver, you will find huge volatility. Actually, calculated volatility of gold is higher than the volatility of equities. That is the data which nobody wanted to look at. And also, there was this thing that gold has not seen this kind of rally since 1979. Gold made a high in 1980. That high was not crossed for 27 long years, till 2007. 19 years after that high, it was still down 60%. And this was not an aberration. After that, 2007, it made another high, and then it crashed another 40%. So that's the nature of the beast. In rupee terms, gold looks good because it's essentially a rupee depreciation chart. So, our grandmothers were not wrong to do an SIP in gold every Dhanteras, because at that time, there was no other alternative hard currency assets that you could buy. You could not invest in overseas markets. But now all your hard currency exposure doesn't need to be via gold. So please diversify your investments outside India. But gold is not the only way. As I said, have an allocation, but it should not be like 35-40% of your allocation.
Devina, always a pleasure speaking with you. Thank you very much for joining us this morning on CNBC TV 18. Moving on now, we've got a management waiting by. Hexaware is under pressure. Stock is down 6.5% after reporting a disappointing Q4. Sri Krishna, CEO and Executive Director of Hexaware, is now joining in. Thank you very much, Keech, for joining us. Explain to us first what led to the decline in revenue in Q4. And two, you're saying that the company is going through an unusually weak period, seasonality aside. Explain to us and what it means for Q1.
Sure. So, Rima, good to speak to you. Our Q4 was not very much off what we expected. It is always a seasonally weak quarter for us. If you look at number of years, we have declines, sequential declines in Q4. There were some additional kind of one-offs that There was one large client that had a reduction in quarter. There were higher furloughs than expected in quarter. But in aggregate, still, it is not very much different from what we expected. Now, your second comment, we said we are going through an unusually difficult Q1 and Q4. So Q4, I already spoke about. Some of what happened in Q4 is going to carry forward into Q1. But after that period, we actually expect that we will grow nicely and accelerate growth through every quarter in calendar 26.
So Q1 also, revenue sees a decline?
Well, it'll be, I mean, historically, again, if you look at Q1, it is always a soft quarter for us. It is flattish.
Okay, so Q1 could be flattish historically, and this time should be no different. But just coming back to the one-offs which impacted your revenue in Q4, could you put a number to it?
So there were two, and actually I'll say between the two, it impacted 60 to 70 pips of growth.
One. Okay. Now, Keech, the big worry is these, agentic AI developments from many of these big tech companies is going to put pressure not just on the software company, the package implementation companies, but even the IT outsourcing companies which help with the implementation of this package software, the application development maintenance, which is a fair amount of the IT services revenues, ADM as we call it. And that will cause revenue deflation. Explain to us how you see the impact and what exactly is happening.
So first is we agree that package software can get replaced by agentic workflows and by cloud native software. We agree. However, we see it actually as a very large opportunity for us for two reasons. One, we don't actually have too much legacy business in package software implementation. So whatever headwinds are there is very limited for us on that front. More importantly, 3 weeks ago, we were the first in the world to launch a service called Zero License. Zero License, essentially, as the name suggests, is a proposition to help our customers get off any licensed software, which includes COTS, packet software, and SaaS. So we agree with the thesis that they can be replaced, but we actually think it's a very large opportunity for Hexaware.
You know,
we were the first off in the world to
do that,
launch a service specific to that.
Yeah, no, absolutely. You know, the point, Sri Krishna, hi, morning, Prashant here, is that the argument, I mean, this is, of course, markets are jumpy and they kind of shoot first and ask questions later. So that's what, markets do. Now, using AI, is it fundamentally, in a way, deflationary? The question is about pricing at the end of the day, right? Because you're replacing something. I mean, you were earning, I'm not you, I'm saying the industry was earning, say, $100. Effort goes down by 25-30% in some cases. So that 100 is not 100, right? It's a question mark, whether it'll be whatever it is. Unless the volume of work explodes so much, and that may happen, but that's a long drawn story. Is that thesis, is that the right way to think about it? I mean, that 100 may be 90, 80, 70, 50, we don't know. And that level will... So it's basically what's the rate of growth from here we're looking at? That's the real question.
So both of what he said are correct. Okay. First is that for any piece of work that goes through transformation, often happens at the point of rebid, there'll be deflation. We actually said in our earnings call earlier today that traditional services, there will be a deflationary impact, and we've accounted for that in the numbers we're talking about. On the other hand, there will be new services and new volumes that more than make up for it. Let me give you two examples of services we've launched that have new volumes. First is a year ago, we launched a service called Legacy Modernization. This is to help modernize code written 70 years ago that nobody in the world knows anything about. Now, this is a problem that could not be solved without AI, and now customers are putting big budgets to solve for legacy. That's example one. Example two is the one that we just spoke about, SaaS. Think of that market. It's in hundreds of billions of dollars. That's all net new volume. Who can address that effectively? Because the code is not going to write itself. It's not just about the code. You really have to understand the business processes that are encoded. How do you understand those business processes? Then the last step is really generating the code, which is easier. But in aggregate, it is still a lot of work, and a lot of spend, which went into license fee, that will get translated to custom software development and agentic development.
What's the extent of deflation seen in the legacy traditional business?
See, whenever a customer is going through a process of saying, okay, now let's do it in a new way, and often it's at the point of renewal, it could be 20 to 40%, depending on the type of work. But not all of this is happening on day one or at a given point of time. So I'll say in aggregate, because these tend to get staggered over a fairly long period of time, in a given year, we think it'll be like 2%, 3% deflation, and we've accounted for that in how we think about our numbers.
And will this 2 to 3% annual deflationary impact that you're seeing today accelerate? Can that become 5 to 6% in the coming year?
I think that the new services and the new kind of work, it's not going to go to everyone, but people are focused on it, are agile, nimble, have innovation to address the new areas. That will far exceed the deflation. So in aggregate, we actually expect there'll be net positive growth because of AI.
You have guided for this calendar year growth to be better than last year, which is 7.5%. But you're a company which used to see double-digit growth, mid-teens, high teens kind of a revenue growth. Given this deflationary impact that we are seeing, do you think getting back to double-digit is going to be hard for the next, say, 3 years?
So we said, while this is the guidance that we've called out essentially as a bottom, our core thesis of growing in low teens and several accelerators to get us to mid to high teens remains completely intact. If you look at our history, every year that we've grown under 10%, the next 2 years have been outstanding growth. So I don't expect a challenge in getting to double-digit growth in the future at all.
Well, thank you very much for joining us. We wish you all the best of luck. And this is a story we want to follow, and I hope you'll come back as we do that here on CNBC TV 18. Thank you very much for joining us. Hexaware stock is down about 8% as we look at it right now. Markets are taking a bit of a knock as well. And it's maybe time to just look at the advanced decline ratio as well, right? I think 100 points lower on the Nifty, but the broader market, of course, did well. Small cap index ended about 1% higher. There is the broader market, which perhaps should be in focus. Yeah, it's down. 2:1 in favor of the number of stocks which are lower. I was talking about how we got the top Indian IT companies out of Davos just a few weeks back. So this is the latest and most current view. And I just want to play some of that out. Salil Parekh, CEO and MD Infosys.
How much of this new AI opportunity is likely to cannibalize on the existing maintenance revenue?
So there we've built some estimates which show there is some compression of revenue in different services because many of the AI agents improve productivity. But equally, we see a larger pool which is growth opportunities. And we will showcase that to show that net we see much more growth than compression.
I also want to understand from you how your contracts and your billing is being reworked in light of the fact that you're now doing AI work as part of it. So there's agents and so on and so forth. How are contracts, is pricing being changed on account of the AI influence and the AI adoption?
It's very early, but my sense is it will change. So first, as you know very well, a lot of things were moving to outcome-based. So agents will support that. And as we go through time, my sense is there'll be a mix because we work on what we call pods. Pods have engineers in them. We will also have some part of it with software agents. So the pricing will evolve, but today not a lot has changed, much more outcome based.
Okay, so what could that potentially mean as you look at repricing in this era that you intend to transition into?
Not very clear yet, meaning there is a lot more value that these agents and the joint work will deliver. But as always, at least what we've seen in the past, part of that value shared with the client and part then comes to Infosys.
So in terms of margin impact is what I'm trying to understand what it would mean.
So the margin, first, we've had a very strong margin program over the last year and a half. So we are very clear that our margin will remain at the guidance we are at right now. We don't see anything which will become negative on that.
What should the next chapter in our AI journey as a country look like?
See, if you look at from what the traditional lens, what most of the Indian companies are good at, the traditional services companies, I agree with what the minister said. Like he talked about the 5-layer approach and what in TCS we call it the infrastructure to intelligence. There are multiple layers from infrastructure. There is a model layer, there is application or the agent building layer and the experience layer on top. And while many of the IT companies in India have not built their own models, but we should not lose fact that the value actually comes in understanding the business context of our customers, ensuring the data for our customer data works for them. And I think that's our core capability. And most of us are focused on that, and you'd see us delivering value from that.
So there's going to be no change. You're not going to go the LLM way.
I'm not saying there won't be change, but don't underestimate what we are doing. We somehow seem to underestimate or brush us aside saying, you guys are not doing models, so your legacy. No. What we actually do is making a real for our customers. Model is one component, but making the models work and work for the customers is the most important. That's where the value is.
All right, the market continues to extend its sell-off at the low point of the day for the Nifty right now, 150 points lower. 25,630 is where we are right now. Yesterday's low was closer to 25,550, so that's a level that we will be tracking very closely. The reason why we're lower today as against yesterday is there's no support coming in from any of the big weights. The Nifty Bank is down about 1%. We have Reliance as well, which is down about 0.7%. The Nifty Bank down about 0.1%, and a lot of these heavyweights are selling off. The likes of Maruti, M&M, the Auto Pack, and the Metals Pack, all of them out and about down right now as we speak. Take a short break, come back. On the other side, we get chatting with the management of Tata Power to discuss their third quarter earnings. Welcome back. You're watching us here on Corporate Radar. We have with us the management of Tata Power. Reported a muted set of third quarter earnings. The business was impacted due to a base year one-off and Mundra shutdown. Praveer Sinha, who's the MD and CEO of the company, joins us to discuss the company's third quarter numbers. Thanks a lot, Mr. Sinha, for joining in. We'll be discussing the three following points. Key expectations from the Mundra resolution, power demand trends, how they are in January and December, along with Discom privatization, the UP Discom privatization, has then been delayed or not? Let's start with the Mundra shutdown itself. What kind of resolution do you expect and by when? There is some clarity awaited on the PPA with state governments. If you could give us a sense on that first, and then speak about demand, how it panned out towards the end of the quarter and the start of Q4.
So starting with Mundra, I think that we are very close to finalizing it with the government of Gujarat. All the 12 issues have been agreed on. There is only one issue, which is supply beyond 2038, till when we have the PPA. We are discussing that, and hopefully in next few weeks we should be able to close it. We also have been in discussion with all the other states, and all the other 4 procurer states have asked that once Gujarat agrees on the framework, the same framework they will also adopt. And we do expect that within this month, we should be able to close with all the other states and start the operation of the plant. It will be very good for everyone in the sense that Mundra continues to be one of the lowest cost producer of power. It will also be fully geared up and ready to supply during the summer months. So I think it's a win-win for everyone, and we should see that the Mundra operation starts within this month.
You said all 12 issues have been resolved, because the last time you joined, you said there was one issue which was pending, the government supplementary PPA. That has been resolved as well, right?
Yes, absolutely right.
So that should, provide some sort of relief to the street as well. And on the UP Discom privatization getting delayed, have you heard further or anything more than what you had told us earlier, where you said that you weren't particularly aware of this? Is there any further development?
So we have been in constant touch with the UP government. It has got delayed. What has happened is that in between, Government of India had set up a group of ministers to examine the financial viability of distribution companies in the country. And they have come up with a set of recommendations which has to be accepted by the government. We are expecting that once that is finalized, we possibly will see not only UP, but many states which will go for public-private partnerships, especially those who have financial stress. And we are quite confident that we'll play a very important role, having seen the turnaround that we have done in Odisha, where both urban and rural consumers have been taken care. So we are very confident that in next 6 to 9 months, we'll get huge number of distribution opportunities in the country.
All right, so all these factors work well for you. Quick, short conversation with you this time around. We'll have a longer one once, there is some clarity on the Mundra, and once that is resolved. But as we speak, just leave us with a guidance for the fourth quarter when it comes to overall, demand, revenue and EBITDA.
I think the overall demand is expected to increase in this quarter. Typically, the third quarter, winter months, we don't have that sort of demand, but we have already seen the demand picking up in January, and with the temperature going up in February, March, we expect a demand of 7 to 8% increase. We are also very confident that all our existing operations, whether it is the cell and module manufacturing, rooftop, our distribution business, transmission business, existing generation operations, they will all do very good. I do expect that Mundra will also start operating by end of the month. And so I think we will end up doing much better than in the third quarter, and much better than what we had done last year in the same quarter.
Wonderful. Mr. Sinha, thank you so much for joining in, leaving you with a promise to join us once the Mundra resolution is done. And, there is clarity on that as well. Good luck for the fourth quarter. With that, let's move on to another company that reported a good set of earnings. It is IKS Health. The reason why it was a good performance is because EBITDA margins, they came in at around 34%. Do note, 49% of the company's revenues coming from top 10 clients. Sachin K. Gupta, who's the founder and global CEO of IKS Health, now joins in. There was a 24% revenue growth that happened as well. Thanks a lot for joining in. You've seen 20% plus growth in the last couple of quarters. If you could tell us, what's a sustainable level from here on? And secondly, with the kind of update that has come in from Anthropic, a lot of these services companies are impacted. Do you think AI capabilities in any manner could disrupt a business like yours, or would you benefit from something like it? I think you're on mute. You'll have to unmute yourself.
All right, thank you.
Thanks.
Thank you for having us today, Mangalam, and glad to be with you all. So your first question around growth. Yes, we've had a solid quarter of growth, 24%. We don't give guidance on growth going forward, but Mangalam, I've always said it's a $260 billion TAM, of which about 34 billion has been outsourced, and that outsourced TAM is growing at 12%. And so our simple thinking is, without giving any guidance, if we're growing faster than 12% on a long-term basis, and when I say long-term, I'm thinking 5, 10, 15 years, because that's what I think this unlock is going to look like. And that's sort of the secular growth trend that is going to be witnessed here. On that basis, we continue to believe we have the right to grow faster than that 12% year on year in constant currency terms. And as long as we're doing that, we're capturing market share. This was an outstanding quarter, and we're delighted to have it. But I just want everybody to understand that this is not necessarily linear. And this market is highly volatile. There's a lot of signal to noise still happening as it relates to the hype around AI. And so we still feel comfortable about benchmarking our success on growing faster than 12% in constant currency terms over a very long period of time. As it relates to your question around Anthropic and all of this news, look, I mean, as you know, Mangalam, we are a product company in its very essence, right? We are writing technology to eliminate tasks from the provider's workflow in the US so that they can focus on patient care. We use a tool from Anthropic called Claude that has fundamentally compressed our own engineering cycles. What we were doing using 500 people in 6 months, we're now doing it in 3 months. So we welcome the propagation of these tools like Claude and others that are being rolled out. We are predominantly centered around Claude for all of our code generation activity, which is an Anthropic tool, and we're delighted by its performance. So for us, we look at these kind of code generator type progressions within generative AI as a huge tailwind for our business, and are looking forward to continuing to execute.
Sachin, good to see you after a few quarters. Good morning, Prashant here. And when did this move to Claude happen for you?
Yeah, we've been using it for several months now, Prashant, at least 2 quarters, and we're actually...
So everything is moved to Claude now, is it?
More or less. I mean, there's still some stuff that, Claude is not applicable to. It also requires a certain reorganization of the underlying data and the vectorization of the data sets for it to be largely usable, which is also a process.
So if you're saying earlier what took 500 people takes, you said 100, right, now?
No, half. I said what 500 people did in 6 months, they can perhaps do in 3 months. And that is when we are today not fully optimized.
Correct. So what does that do to revenues? I mean, it's, billable hours, billable people, billable seats, I mean, that kind of thing. What happens?
We don't have any of that, right? We're not in the business of writing code for our customers.
Right.
We produce our own technology. We roll out our technology. We get paid as a percentage of our customers' revenue. So the faster we can write technology, the cheaper we can write technology.
There's no chance that your customers put Claude to work and do it themselves?
I think there is, and there should be. And, the more sophisticated customers will use it. But, Prashant, I have an anecdote there that is important. What is the IT budget of a JP Morgan? In 2024, it was $14 billion. So when you have an IT budget of $14 billion, you would argue JP Morgan should be able to do everything themselves. And they need no GCCs, no outsourcing. But the reality is 80% of that budget is outsourced. The reality is, just because you have a large spend and a large balance sheet, that doesn't mean that becomes your core competence.
Got it.
Will there be an exceptional system or two that will leverage tools like Claude to eliminate some of their own tasks? Absolutely. And I actually welcome that. And I keep pointing to, look, there's a $260 billion TAM, of which only 34 billion is outsourced. So, there's a lot of white space for everyone.
So let's look at it this way now, because you are using Claude and your productivity has increased. Has that led to the margin expansion? Because 29% in the first 9 months of last year, 34% this year. How much of that is because of operating leverage? How much of that is because of AI? If not because of AI, how much can come because of AI?
So look, we've always guided, since we did the acquisition of Acuity in November 2023, that we will get our margins back to the early to mid 30s. We perhaps got there a couple of quarters sooner than we had ourselves imagined. But I think we're at that place now. And while we will continue to optimize gross margin through the deployment of AI, just keep in mind a metric. We grew 24% year on year, 19% in constant currency, but our headcount grew by 1.5%, which means we are able to do larger and larger number of tasks without using more people. And that is the fundamental answer. And that tells you that we are, of all the signal to noise that is happening in the market, we are a company that is actually using AI-led solutions to eliminate human tasks and continue to break the linearity between revenue growth and people growth. And that's really what I would say. As it relates to margin guidance, I've always said, one, we don't give guidance. Second, we are where we need to be, which is in the early to mid 30s. We will continue to expand our R&D spend, which is currently at 4.7%, gone up from 2% a couple of years ago. We will continue to expand that as our gross margins expand, and we will continue to expand our investments in sales and marketing, which is another key lever of growth.
Got that. Thank you very much for joining us, Sanjay. It's a pleasure, and hope you sort of come back mid-quarter, end of quarter, because I mean there's a lot to talk about with these rapid developments. And you're telling us that you've been on cloud for most of your functions for the last 2 quarters at least. Thank you for being here. IKS is up about 4%, 4.25%. 1675 is where we are at. Well, on to that big exclusive, and this is 2 big global business tycoons, Reliance's Mukesh Ambani and BlackRock's Larry Fink, coming together under one roof to discuss the art of investing for a new era. Larry Fink, of course, saying that this is India's era and Indians must invest as the country grows for between 8-10% for the next decade or so. This is the conversation, and they sat down with Shireen Bhan. Listen to a slice of that.
I would first and state that I don't believe there's an AI bubble.
You don't believe that?
Not at all. I believe the greatest risk we have is if we don't invest and continue to invest, China will win. And I believe the need to rapidly expand the AI opportunities is necessary. That doesn't mean we're not going to have some bankruptcies. We'll have some failures. That's capitalism. You're going to have some big successes and big failures. But the opportunity that companies have in utilizing AI is going to be present in everything we do. I mean, even yesterday you had Anthropic announce a new model, which is going to be threatening for some businesses, but it's going to be an opportunity for other businesses. You mentioned Davos, and you mentioned the word cloud. There's no question AI is among the most topical conversations we're having now because it is disruptive. It's going to be disruptive for some industries, but it's going to also be very advancing. I mean, the future of AI in terms of drug discovery, in terms of humanity, is real. The use of AI for the development of new sources of power or cheaper sources of power, what can that mean in the long run for the global south? Could we have abundance in energy one day? Now that's still pretty far-fetched at this moment, but the opportunities of the acceleration of science is there. Rob Goldstein talked about having the ability to use AI to learn everything about one subject in minutes now. And so AI is going to allow more discovery, more opportunities, and with that technology, like so many other technologies, it's going to be disruptive for some businesses and some economies.
Mr. Ambani, since we're talking about AI and we're talking about technology, to Larry Fink's point, how do we leverage all of this to create shared wealth creation?
Well, I think that I'm a believer, have been a believer that we have to embrace technology. We cannot run away from it. And AI is real, right? From an India point of view, it is hugely advantageous. If we think about 200 million children in our schools, and if we now think about connectivity to all our schools, and we give ourselves a goal that in 1 decade, right, with a fraction of the total GDP that others spend on education, we can deliver to each of these 200 million kids. And we shouldn't get scared of AI. It's exactly like when the Industrial Revolution came, right? Humanity moved forward. Productivity moved forward. We moved from 0.3% growth for many, many decades or many centuries to 3% growth overall, right? And at that time, if you go back 200 years and if you ask people that can people travel 2,000 kilometers a day, right? We would say not possible. Today, all of us, not two, with flying, we can travel 30,000 kilometers a day. And I think we're just at the beginning of that age. We must embrace it. India has the opportunity, and what we see, as you said, is we see that young Indians, as Kamath Saab said, old Indians, right? India just adapts to technology faster than everybody. We've seen it firsthand over the last 5 years in terms of what we want, and we should use that at our competitive advantage.
We will slip into a very short break. We'll keep getting you snippets of this exclusive and interesting conversation. Before now break, on the other side, Manisha Gupta joins in with a focus on commodities. Stay tuned. Welcome back. As promised, let's talk commodities. Manisha is now joining in with what's got her attention this morning. Manisha.
Well, thank you so much for that. I'm looking at crypto as a market right now because that really seems to be buzzing as well. There's a lot of sell-off that we've seen in the crypto markets in this year till time. Well, last year as well, we did see slippages coming in the last quarter of 2025. 26 has started on a weaker note as well. So 72,000 and below is what Bitcoin is trading at this point in time, which is the lowest level in last 15 months. The last time you saw these levels were November 2024. It's 40% down from its all-time high of 126,000, which we saw being hit in October 2nd, 2025 therein. Well, the declines also have led in various other altcoins as well, all of that trading in the negative for 2026. Positions worth $2.1 billion is what we have seen getting liquidated in matter of last few days when it just comes to Bitcoin as well. Overall, crypto market has seen a wiping of $500 billion in the matter of last 6 sessions itself. So as I said, it's not just about Bitcoin, it's about altcoins, meme coins, stable coins, gold-backed coins, all of that he's seen a very, very sharp decline. The overall market cap when it comes to crypto also has declined quite sharply, currently at around 2.4 trillion. At its peak in 2025, it was at 4.4 trillion. So almost half of what we were at just about 8 to 12 months back there. The sell-off in technology stocks, AI stocks is something that seems to be bothering crypto. And we've seen that risk aversion continue or seep into in this space as well. Well, overall, when you look at the kind of outflows that we've seen from institutions, from ETFs, has been quite on the higher side as well. For the month of January, the ETF outflow alone stands at around $3 billion. And this is in succession of $2 billion of an outflow that we saw in the month of December. November was a huge $7 billion of an outflow as well. So net outflows also is yet another reason that you have seen the cryptocurrency prices continue to decline. So when you look at the market prices this year till time, you have Bitcoin trading 18% in the negative. Ethereum is down 29%. Binance has declined by 19% as well. And that perhaps list just about continues because when you look at Cardano, Solana, Ripple, all of that is down anywhere between 15 to 30% down. Markets do believe that some sell-off could continue in the very near term. It is about government partial shutdown in the US markets, weak US data, some data not available as well, and then the kind of geopolitical tensions that you seem to be looking at, all of that weighing onto this sector as well.
Okay, all right, Manisha, thank you very much for that. Cryptos, of course, taking a very, very large knock as well. We'll take a quick commercial break here. It's our special segment, it's the economy. Lata in conversation with GTRI's Ajay Srivastava and former HPCL CMD, Mr. M.K. Surana, on the India-US trade deal and, of course, on India's imports of energy. Stay tuned.
Fly Emirates, fly better.
Welcome to It's the Economy. Until now, we have concentrated on the exports side of the US-India trade deal. Now we get to of course, we've gotten to exports at 18% tariff. But what about the import obligation? India has to import $500 billion of goods and services from the US in 5 years, or $100 billion of goods and services in a year. Now, last year, India imported 45 billion worth of goods from the US. So how do we bridge this gap? Do we buy more oil and gas, defense stuff? Do we have to buy US oil and gas, even if it is expensive? To understand all these issues that this massive import obligation enjoins on us, I have with me Mr. N.K. Surana, former chairman of HPCL, and Ajay Srivastava, founder of GTRI, Global Trade Research Institute. Gentlemen, thank you very much indeed for your time. Mr. Srivastava, India imports a lot of aircraft parts, defense, of course, technology. So this 45 billion of goods, if we add services, is it a very big gap?
If we add the services, the gap increases by 10 to $15 billion only.
Okay. So is your sense that we should be able to reach the 100 billion if we add services, or is the negotiation only for goods?
We are already crossed $100 billion, but we are missing one thing. US is saying you buy from the US. If we interpret this as saying buy from US firms based in US or India or anywhere, then we are crossing so much. So if we forget about exports and imports of goods and services for a moment, then how much we pay to the US firms who are operating in India or otherwise? So Indian students, they pay $25 billion to the US, $15 billion as tuition fee, and $10 billion as living expenses. Then US tech giants, all these Amazons and Googles, they earn about $15 to $20 billion revenue from India. Then US banks and consulting firms like BCG or Citibank, they earn about $10 to $15 billion from India. Then the GCCs, nobody talks about them. They earn so much, but they show just 1% valuation in India. They do 100% work in India, but they show only 1% valuation in India, and they shift 99% of the profit as happening in US. So if we count all these things plus defense purchases, I think already we are paying more than $120 to $130 billion to the US. So we are in overall deficit in dollar terms from US, not the surplus as is commonly believed.
That is not the impression I got when I spoke to a lot of market participants. Their fear is that US may interpret it only as goods and may not include, certainly not students paying money over there, or the other things. Maybe technological services will be included. But Mr. Surana, one of the big things that people are hoping will be used to bridge the, import over 45 billion is oil and gas. Will that be something we can increase substantially, considering that, we have just had an understanding with Venezuela as well?
So when we talk of oil, we just talk of crude oil. So I think that we should talk of the total crude and petroleum products and gas as well.
Okay.
So one of the important items which can be seen is LNG, because so far the LNG was not coming to substantial extent from US, because they had also some limitation on the export facilities, which are all maturing, and LNG terminals, liquefaction terminals are coming up and all that. And India imports almost 50% of LNG. So in a year, almost $13 to $14 billion of LNG is being imported in India. So that is one definitely a potential source. The second is LPG. So another source can be LPG, because LPG is one petroleum product which India imports. While we are more or less self-sufficient on MS and HSD, LPG we had been importing. Also, there is a plan to increase the use of natural gas in CGD and PNGs from 6% to 15%. So LNG requirement may increase over a period of time. One more important item is ethane, because most of the ethane which is being procured is origination from US. Now, many of the petrochemical plants which are coming, they can be the mixed feed plants where the ethane can be used as a input material for converting into polyethylene or that type of products, ethylene and polyethylene products.
Okay.
So I think those are some of the areas which can be looked into apart from the crude oil. Now, if we come to Venezuela, now Venezuela oil we had been getting earlier, but the quantity is limited and not all the refineries can process Venezuelan oil. So that part we need to keep in mind, and it normally goes as a mix with other oils.
Oh, okay. Okay.
So this is the context in which we can see if at all there is a need to bridge the gap, and these are the potential sources.
Okay. Mr. Srivastava, your thoughts. Will crude oil and ethane, gas, all this account for goods in case US interpreted imports as only goods coming from the US?
US will never be able to supply, even including Venezuela, the oil needs of India, Europe, or South Korea. You know, it's not only India from which US has taken this commitment. This committed energy buys from US or their partners is a part of the EU deal. EU has committed that it will be buying in next 3 years $250 billion worth of energy, which is mostly oil, LNG, etc. only. Same with South Korea, same with UK, same with Japan. US doesn't have so much spare oil, and Venezuela, we know their wells, they produce less than 1 million barrels per day. And they are not in position to supply so much of the demand. So I think hard calculations not being done, or US may have some other plans to get more oil, say by invading Iran or Iraq. I don't know. But right now, if we do the maths, US, Venezuela together, they will never be able to supply the oil needs for EU, South Korea, India, etc.
Okay, so they have overcommitted, they have taken overcommitments from their export partners, and they will not be in a position to supply so much. Mr. Surana, what may be the price differential if India indeed, I mean, at least incrementally on the margin, we have to shift from other sources to buying all the energy products that you said, petroleum products, crude oil, ethane, gas. Will they be more expensive? I heard a lot of economists pushing up their current account deficit estimates because they are pushing up import costs. Are they costlier from the US?
I think there's one point which is missing is that the refiners who are buying is not like the government budgeted money which we are spending. So the companies have to take their economic and commercial costs.
Oh, okay.
So same way, the supplier from US are not government-owned entities as well.
Okay.
So the question is, there is a private supplier, even though companies may be PSUs or the private entities, but they have to operate in a regime which is a pure commercial thinking. So we cannot just say that if it is a higher cost, we will buy. So it is a commercial decision which will be a competitive thing. So if US oil and gas has to find place in India, they have to compete with the other available supply sources. So one of the item is the freight cost. And to that extent, they have to meet the competitive arrangement which we may have.
Okay.
Now, one thing is because earlier the oil was not surplus. Now US is producing a lot of oil. If they do not export, the local cost of local price will be lower. And their realization will be lower. So there may be incentive for the supplier from US to ship it out, even if it is to give an advantage of freight, so that realization may be there. And that is one of the reasons why WTI and Brent arbitrage remains. And therefore, I would see that ultimately the competitive process may make the US oil competitive in certain situation, depending on the type of the crude and the refinery which is producing.
Okay.
And that may be one way to look at it rather than purely looking as a government-to-government supply. Oil is not a government-to-government.
No, it isn't. Actually, from the US side as well, almost everything is private sector. So
Yes.
exactly how you're, zeroing in on the same problem that Mr. Srivastava was also referring to, that, people to people, there is a lot of money that is going, and clearly India is spending much more in dollar terms. But what exactly will be the contours which are drawn by the trade agreement, we do not know what will be included. Mr. Srivastava, final question to you. Is there in trade agreements, I mean, in your previous avatar, you must have gone through this. Is there something like best endeavor? I heard this from some other ambassadors from other countries saying that we made the best endeavor to buy from you. But as Mr. Surana or you have been saying, they don't have that much oil or they don't have that much gas. Then what do we do? Are there such clauses usually in trade agreements?
We use such clauses amply, but we have to see the legal text what we have used with the US. For Europe, for example, I'll give you an example. For example, they have very precise clauses on sustainability and environment, European Union. We were not comfortable because they have a different level of development. We cannot commit ourselves to those clauses. So we said, okay, let this be best endeavor clause. But even best endeavor is not free from all the fallacies. If they want to stop imports from our side, even though we have used best endeavor, they can stop it because India is saying best endeavor, and whether you are applying best endeavor or not. So even best endeavor is not free from all the fallacies and the problems.
Okay. Point taken. Mr. Surana, just a final question for you, since this is very stock market related. Will there be pressure from the Indian government to especially the state-owned, oil companies, that because of the overall commitment, you will have to, keep US oil or US sources as the first priority when you are buying? Can such things happen and therefore impact the margins of these companies?
See, the way the crude oil is bought, number one is nobody keep all eggs in one basket. So there will always be a diversified source, and there some compromise does take place on the pricing also to ensure that our basket is widely held. That's number one. Now here, there is no doubt that the techno-commercial factors have to be considered when you select the oil. Now, the multiple iteration which we do for linear programming or our crude optimization, and that some certain constraints can be put either if there is a supply constraint or if there is some other element. But I will still say that the companies will be required to justify that decision if they are doing it.
Okay.
And therefore, I would assume that ultimately it will be a commercial decision. Maybe contour of a strategy may be there too.
Okay, fair enough, fair enough. Thank you very much, gentlemen, for adding so much color and nuance to our understanding. But clearly, we are still left with more questions than answers. Will services be included? Will defense imports be included? Will there be a best endeavor clause? All those questions we will know only when the details of the US India trade agreement are out. And finally, there is always the possibility that President Trump, going by his past record, pulls out some point which he thinks India has not come up to speed, and use it to jeopardize things in the future. All these flashpoints remain in the US-India trade deal as we understand it now. Thank you very much for joining me. That's it on this edition of It's the Economy. After a break, time for Chartbusters.
You want to talk business? Meet me in the On-Board Lounge.
Quick service restaurants surge. Devyani International records positive same-store sales growth across brands, sparking a flurry of bullish brokerage notes. McDonald's franchise owner Westlife Food World is also up 7% as Macquarie flags healthy traction in the dine-in business. The sell-off in Safe Haven and Hardy assets continues, so silver crashes 15% overnight, while prices of base metals also slips. The metal index is the top sectoral loser as heavyweights Hindustan Zinc, Vedanta and Nalco all slide 5%. Strong third quarter numbers sees Force Motors surge nearly 10%. Profit rises 3.5 times, aided by a one-time gain, while margins expand over 500 basis points. And in other earnings, JSW Cement is up nearly 10% following a strong quarter. Metropolis Health also records strong growth in a steady quarter. The management of Metropolis will be joining in shortly to discuss their numbers. And the sell-off in Hindustan Aeronautics continues. The stock is down another 5% today after yesterday's sell-off sparked by reports of the company being knocked out of the 5th-gen fighter race today. Morgan Stanley has downgraded the stock to an underweight rating and cut its target price to 3,355 rupees. Very good morning. Welcome to Chart Busters live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it is turning out to be a session where we are seeing pressure in the markets at this point in time. So we have the mid-cap index, which is down around 0.7%. The advanced decline ratio, which has been trending on the negative side, is not seeing any kind of respite. So we have only just about 1,500 stocks advancing to around 2,000 stocks which are declining at this point in time. So favoring the declining side. We do have the Nifty, which is in fact trading below 25,700 as we speak, down around 125 odd points. Hi, Vinny.
Hi, Ekta. Good morning. So today, a bit of a muted day that we're seeing for the trading session as of now. Like you mentioned, 5% of decline. Now, what is actually managing to do well or holding on to gains? PSU banks. That's seeing some bit of an uptick today. IT yesterday, which was beaten down, that's again back up 0.3% in the trading session. But yesterday, we had seen a very sharp fall coming in there. FMCG today, some bit of a green there. But what's not doing well? Metals. Sharp fall coming in for the metals pack, right? Whether you look at something like a Vedanta, Nalco, Hindalco, all of them are seeing a very, very sharp fall. Apart from that, realty and auto too are not managing to hold on to gains in the trading session. A lot of individual movers on the back of their earnings as well, Ekta. We'll discuss all of that. But I think Metropolis is what we'll highlight first.
Yes, absolutely. Well, on the show, let's kick it off with C. Surendran, who's the managing director of Metropolis, joining in. Remember, it reported what was a steady performance this quarter with strong revenue growth. Let's go across to Mr. Surendran to understand the Q3 performance. Mr. Surendran, thank you very much for taking the time out. Well, let's start with your True Health and your specialty portfolio, which did record strong growth. So, for example, you have your True Health, which is preventive testing, which did well this quarter. In fact, it did see a growth of around 25% to 69 crores. And your specialty business, which is your core business, was up around 16%, which is around close to 40% of your total sales. What is leading and driving this growth? And is this kind of growth sustainable going forward?
Good morning and good morning to all your viewers. And yes, definitely we had a very emphatic quarter. Quarter three was one of the best performance we had in the recent past. The revenues were largely driven by the True Health performance as well as the specialty. Now, what's happening on the True Health is, the overall awareness about the preventive health is increasing in the country. We have created a bigger market now, and the affordability is improving. And of course, our ability to bundle the products and create value for the customers in terms of by getting their, let's say, the basic vital test done, ECG done, and do a doctor consultation along with a wellness report. And all this is, the value creation that we have done for the consumer. And as a result, we are seeing continuous improvement in the True Health portfolio, now growing roughly about 25% for the organic business. And on the specialty side, Metropolis has always been a specialty company. All complex tests, is been done by Metropolis, and we are improving our ability and capabilities or doing more and more specialty tests. And the integration of core diagnostics have really helped us in creating a very high-end test capability on the oncology side. So all this is, really helping us in terms of improving the overall realization, and that's what we see in the manifestation of Q3 results.
Hi, sir. Good morning. This is Vinny joining in the conversation as well. You've spoken about, True Health, specialty, which is driving the growth. And most of your revenue right now, like Ekta also mentioned, 40% revenue from specialty, True Health is 17%. How do you see this contribution going on from here on as well? Will this increase further now in FY27 and going forward?
So definitely when the True Health and specialty is growing higher than the overall company level margin, these are the one which is really, driving the growth. Hence their contribution, will definitely keep improving as you go along. And our ability to convert a customer coming for a single test and then asking him or her to get a bundled test and some adjacent test being done, that capability is also increasing. So we clearly see that the True Health portfolio as well as specialty will keep getting better as we go forward.
Okay. Well, I understand that Q3 was impacted by some amount of seasonality. So what are you expecting in Q4 when it comes to, say, organic growth?
In fact, we have beaten the seasonality in Q3. Q3 normally used to be a softer quarter. And if you've seen the results of many other companies in diagnostic space, the Q3 has not been very strong. But some proactive action that we have taken at the beginning of Q3 has helped us to beat the seasonality. So we have delivered a very good performance and in Q3. And for us, the overall estimate for the year has always been about 12 to 13% revenue growth. And we are very sure about delivering the higher end of that band that we talked about, 12 to 13%. It could be a little higher than 13% for the full year basis, for the revenue growth.
So, what about your key acquisitions? How have they performed during the quarter as well? Organic growth, right, 15%. But core diagnostics or scientific pathology, Dr. Ahuja's pathology, how has all this performed for the company? How is the growth there?
Okay, let me talk about the smaller ones first, which is the scientific pathology, the Dr. Ahuja's laboratory in Dehradun and the Kolhapur one. All of them are growing equal or better than the company growth in terms of revenue, and their margins are better than the company levels of margins. Core diagnostics, we have said in the first year, our focus is basically the bigger integration that we have done. Our focus is to get the integration completed and clean up all the businesses which we really don't want to do, and focus more on margin improvement year one. So that progress, as per our stated objectives, are getting better. And as we are coming close to this year, we are definitely in a position to achieve our objectives we set out for the core diagnostics, and the next year could be a year of accelerating the revenues as well as bringing margins above a two-digit number.
Okay, bringing margins above the two-digit number for core diagnostics. Quickly, are you in a position to take price hikes based on what you are seeing in your competitive environment? And if so, to the tune of how much and by when?
Well, every year, we do a price increase in the month of January, but we haven't done this year the price increase because of the GST considerations, etc., that we could get. And hence we did not, we wanted to pass on the benefits to the consumer, and we did not do a price increase this year. And we believe that, the market is conducive for price increase and then can take a price hike. But we have not set any timelines for price increase. Maybe at the appropriate time, we will look at the opportunity to take the price increase.
Okay, sir, thank you so much for joining us this morning, giving us an understanding in terms of the price increases, what are the acquisitions doing for the company, the growth expected for the company going forward. Thank you so much for joining. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more after this break. Welcome back to Chartbusters on CNBC TV 18. Let's put the spotlight on another management who came out with their numbers. We have Century Ply that reported a strong Q3 performance, this time good growth in quarter 3, 18.4% growth there. Margins seeing some bit of an improvement around 100 basis point on a year-on-year basis. To talk to us about their numbers, we do have Keshav Ajanka, who's the Executive Director, Century Ply, but right now joining us to talk to us about the outlook for the company going forward. Keshav, good morning. Thank you so much for joining us on the show. Let's start by talking about your guidance. For FY25, FY26, whatever you had targeted, seems like you all are achieving it. There's nothing in terms to complain on that front, right? Plywood segment, 13% growth. You're managing to see a good growth even this time as well of more than 14, 15% around there. Margins over there as well are doing good. What is the outlook now, segment-wise and overall, that you have kept for yourself as an internal target for FY27?
Good morning. Thank you so much for having me on the show. I think all across, we have seen a very strong performance in a muted demand environment. Overall, we are looking at close to 20%, rather 18% plus revenue growth. And the good part is that this has been broad-based. It is not based on any particular segment. Our plywood segment has grown by 15% in revenue. Laminate segment has grown by close to 10%. MDF segment has grown by close to 20%. And particle board, of course, on a low base and with the new capacity addition, has grown by close to 80%. I think for the current year, we are well on line to achieve the revenue guidance that we have given. In plywood, the revenue guidance is likely to be a little higher than what we had envisaged at the start of the year. Whereas in laminates, it could be slightly lower. MDF and particle board, we are well on line to meet our overall revenue guidance. So I think that overall, in a difficult demand scenario, this has been a commendable performance.
Okay. Well, just a two-part question, because I wanted to touch base or expand a little bit in terms of the demand scenario, which you've referred to as challenging twice now in one answer. But separately, just also wanted to ask you to reiterate your guidance for FY26. You did touch upon the plywood, but just for the benefit of our viewers, if you could just reiterate the guidance that you're providing.
Sure. So in plywood, we would be at 13% plus in terms of revenue growth. In laminates, we would be at 15% plus. In MDF, we would be at 25% plus. And in particle board, we would be at 40% plus for the current year.
Okay, so you're sticking with that?
Yes.
All right. If you could now, Keshav, just give us a sense in terms of what the demand scenario is looking like. You said it's challenging. What kind of challenges did you face this quarter, and what are you expecting in FY27? And do you think that could possibly be a headwind for your guidance?
I think for the current year, like I've already mentioned, we are well on track with regards to our guidance numbers. Having said that, the challenge has basically been that our products go into consumption when it goes from a house to a home. So when the end customer starts buying the product, so our products start getting consumed. It is not so much when the building is being made or when the structure is being created. As such, towards the fag end of the cycle, once new inventory hits the market, that is when the demand for our products starts picking up. I think the new launches that have taken place post-COVID, they were supposed to hit the market a little earlier. I think due to a number of reasons, perhaps that inventory hitting the market has been slightly delayed, which has impacted the overall demand for building material products. But we are very, very hopeful that now with these new launches finally hitting the market, we should see robust growth across the next couple of years.
Okay. Keshav, what about the prices of timber, chemicals? How have that moved? Have they increased? Any concern comes in on that front for the margins? And then what would be your margin guidance also?
I think there is large-scale stability in terms of timber prices and in terms of prices of raw materials such as resins. However, certain pockets do face challenges. For instance, in MDF, in our Punjab plant, which is in the north, we faced acute shortage of timber due to a flooding situation that was there, that is well known, that was there in Punjab in September and October. However, on the whole, I think that prices have peaked out and now there's stability in raw material prices, which will help us achieve our current margins.
Okay. All right, Keshav, we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that's Century Ply, that stock just about lower by around 0.3%, sticking to their guidance of growth of around 13% in the plywoods business, and they are expecting growth to pick up going forward in what is a muted demand environment at this point in time. We're going to take a break, but up next, we'll get you a lot more stocks. We'll get you a preview of the key expectations from tomorrow's RBI policy as well. Stay tuned.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. Well, all eyes are on the Reserve Bank of India's monetary policy outcome tomorrow, where the central bank is expected to maintain status quo on the repo rate. Let's go across to our colleague Ritu Singh to understand what's expected.
Well, this monetary policy may not be about rates at all. It's really all about liquidity. With inflation benign and growth steady, the Reserve Bank's focus is now on ensuring that past rate cuts are transmitted smoothly through the economy while keeping its powder dry. And that is exactly what the CNBC TV 18 monetary policy poll is signaling as well, with an overwhelming 90% expecting the MPC to hold the rates in this policy despite having a room to cut. Only a very small minority is betting on a 25 basis point cut, but keep in mind the number of people that was expecting a cut was a tad higher before the trade deal was announced, although still in minority. But now the market believes the deal has eased the pressure on RBI to provide any immediate stimulus. Now, looking beyond the meeting, and the message is clearer, 70% see the RBI staying on pause throughout this entire calendar year, with barely a third penciling in even one more rate cut. At least for now, no one is talking about hikes. So if not rates, what is the RBI going to act on? Well, it is liquidity. Now, despite record open market operations this year, bond yields we've seen, they've remained stubbornly high. So the street expects the central bank to step up support, whether that comes through verbal intervention, more OMO purchases, more VRRs that are longer tenor, operation twist, perhaps even a CRR cut. Whatever it is, all of it would be aimed at cooling the yields and easing the funding conditions, and any talk on this is going to be closely watched. Now, on the currency front, rupee volatility is a concern, but markets don't expect any targeted intervention from RBI. Instead, they will likely stick to the long-standing stance of not defending any specific level. Now, our poll respondents see the 10-year yield settling around 6.7 to 6.8% by March, while improving sentiment after this US trade deal could see the rupee strengthen to below 90 to the dollar. Now, as for forecasts, don't expect any major changes on the macro front because you have a new CPI and a new GDP series that's just around the corner. So RBI is likely going to be holding its projections steady for now. Now, when the economists see the FY26 inflation between 2 to 2.5% and then rising to about 3.8 to all the way to 5% is the range we've got for FY27. The bottom line really is expect a neutral tone in this policy, a wait and watch approach, and a policy that is focused less on rate action and more on liquidity management.
All right, Ritu, thanks very much for that. On that note, we need to wrap up on Chartbusters, but stay tuned. Trading Hour will take all of the action forward.
Hello and welcome to Trading Hour, live from the CNBC TV 18 Motilal Oswal studio. I'm Ritu Singh and with me is my colleague and co-anchor Mangalam Malu. Mangalam, what a day of trade it's been after that surge we saw. Now the markets are deep in the red, trading with cuts of about 160 points on the Nifty and 490 points on the Sensex. What's holding up slightly, or while the market is still deeply in the red, IT and metals dragging them down. Bank Nifty relatively better than the broader markets. That's where we're at. But the advanced decline ratio clearly tells you there's a lot of pain. Almost more than 2 stocks declining for every 1 stock that is advancing.
It is painful in today's trading session, as against yesterday, where the decline in IT was supported by the likes of Reliance and the banks. Even the banking index right now, even though it's outperforming by virtue of not falling as much as the frontline index, is down about 0.5%. No taking away from that. And yesterday, all through the day, irrespective of how the mid-cap index at an index level was, the advance decline was firmly in favor of advances. And now, as we see, the lines are only widening far apart. 2,000 stocks which are in the red. So will be very important to track support levels for the frontline index. Yesterday's low on the Nifty was closer to 25,550.
Yeah.
Let's see whether we see that support out there or not. But couple of stocks which are bucking the trend. We have a few of these consumer discretionary names. So FSN e-commerce, which is Nykaa, which is up around 3%. AB Fashion and Retail is the other one. Pidilite, the stock's up move after good results continues. But we have earnings.
We have earnings. The stocks you were talking about, Reliance, for instance, yesterday supporting the markets today is actually dragging the markets down. So, every day you have the story changing. But let's focus on, some of the earnings, which you said. Triveni Engineering, that is trading flat, although the company posted an EBITDA growth of 73.2% on a year-on-year basis. Let's go across to Tarun Sahani to get us more on the numbers and the outlook ahead for the company. Tarun, thanks very much for being here with us. Let's start with the sugar realizations. They're up about 5.6% over the previous year. For the quarter, for the 9-month also, they're up about 5%, even though global prices have softened somewhat. From here, do you see a further upside in domestic realizations, or would you say you're closer to a plateau as we speak?
Good morning. Yes, so, we have seen over the past 9 months an increase in average sugar realizations, and that is primarily because of a very sound policy coming from the Department of Food in terms of the releases that have been given month on month. Now, going forward, I think there are some bright spots, and it's emerging that the country's production this year might be a little bit lower than forecast because of lower or actually an earlier stop to the season in Maharashtra and Karnataka, which will primarily drive that, and that might change sentiment. So I think that if we look forward next maybe 1 or 2 or 3 quarters, we will certainly see prices at these levels and perhaps inching up ever so slightly. However, that is certainly not enough. I think sugar has been one of the poorer performing agri-commodities over the last 5 years. I think over the last 5 years, sugar and vegetables have been actually at the very bottom. And with the cost increases in terms of the price of sugarcane, etc., there's an urgent need actually for an increase in sugar pricing going forward.
All right, Tarun, star performer in your numbers this time around has been the distillery segment. I remember the conversation that we had in the third quarter of last year. It was exceptionally high, the procurement prices on maize. Those have come down. So from here on, what are the kind of, operational numbers that your distillery business can do from here on? And you had a couple of distilleries which were coming on stream as well. So in terms of volumes and the likely absolute EBITDA of your distillery business, what is it likely to be?
Right. Well, we had one distillery that was commissioned last year. This year, it's on full stream. So we're anticipating full production across our 5 distillery units. Now, the reason for the uptick in profitability in our distillery business was primarily led by maize. So the procurement cost of maize fell as the average price also fell, given the massive increase in production of maize across the country. Now, the government in its ethanol blending program did support maize, and in this cycle, in the first cycle, actually, there was a reasonable quantity of maize that was actually procured over the coming year. Going forward, unfortunately, my understanding is that when the next cycle comes out, maize will no longer be a focus for ethanol blending, and that, very honestly speaking, will have some impact on margins as we are driven towards, in all probability, rice, FCI rice, which has a fixed margin that's a little bit lower. So, going forward, I think there's great potential, of course, in the ethanol blending business. We've achieved 20%. The real question in everybody's mind is what next? Are we going to look at higher levels than 20, or are we going to look at perhaps E95, E85, E100 as the government looks at the massive capacities in the country? But as far as margins are concerned, I think we've seen the best, and I think the margins will be perhaps ever so slightly downwards, given the fact that maize will not form a significant part of Q3, Q4 of the ethanol year, which is Q2, Q3 of the calendar year.
All right, that's the maize prices. What about the cane prices? They've moved up meaningfully, and then profitability is also improved on better efficiencies and better recoveries. At the current prices for cane where they are at, do you think higher recoveries alone are enough to protect your margins from here on?
Absolutely. So the massive amount of work and effort that's been put into cane development and disease eradication has really paid dividends this year, this crushing season. And despite a 30 rupee increase in cane price in Uttar Pradesh from 370 rupees to 400 rupees a quintal for the early maturing varieties, we've managed to basically bridge that gap by better efficiencies and higher recoveries. Now, going forward, the real challenge is next year is election year in Uttar Pradesh. We've got an awful lot of pressure on plantation this year. I think there's been the increase will actually lead to more plantation in Uttar Pradesh. So the signs are looking good as long as we have an excellent monsoon and we manage to eradicate the remainder of the disease that impacted some of the better performing varieties over the last few years.
Right. Beyond sugar and ethanol, what's the outlook on your power transmission business? The revenues grew 9%, but there was a decline in your operating income. And what's the update on the demerger, if at all, if that's on your, your scheme of things?
Absolutely. So the demerger is very much on the cards. We're anticipating that at some point this quarter, we will receive permission from NCLT. And that's as what one had targeted but at the very outset of this scheme of arrangement. As far as the business is concerned, I'm very happy with the progress. Yes, the last quarter, the order booking did suffer a little bit, but I think this was a function of a global trend. And the overall market and the sentiment globally has been a little challenging. But I think that the month of January has showed remarkable resilience. And now with the FTAs in Europe and the United States in place, I see a significant uptick in terms of actual order placement, both for new products and for repair business. So, I see a return to what one had forecast and imagined in terms of growth for this excellent business.
Tarun, very quickly, the outlook for your defense business as well. What's the order pipeline there looking like? And secondly, on your debt, that's increased actually to about 1,073 crores, compared to about 900 odd levels the previous year. What is the roadmap to bring that down?
So, most of that increase is, actually all of that increase is working capital. It's because we're crushing more, we have more sugar in stock. The stocks at the end of December 31st were higher than the previous year, and that accounts for the overall debt number to be a slightly higher. So that's not a worrisome figure at all. But as far as defense is concerned, we've just won a large gearing tender for one of the big shipyards. And so the business is growing. While it's a startup, I see huge possibilities as India drives for localization in manufacture. And I think we will certainly be a beneficiary of this program.
All right. Keep crushing it, as they say, literally and figuratively. Thanks a lot, Tarun, for joining in.
Thank you.
Take a short break. On the other side, we focus on the bond market action with Manisha Gupta. Stay with us.
Welcome back. It's time to get you a check on the bond markets. Like we indicated, Manisha Gupta is joining in to get us the latest on what's keeping the bond markets excited, Manisha, ahead of that RBI policy tomorrow.
Well, yes, that's one thing that the bond markets will be watching out for. And, you know, in the last 2 or 3 months, we've seen various regulators, including Niti Aayog as well, talk about the importance of bond markets going forward from here. So SEBI, in the meanwhile, also has launched a pan-India outreach to boost the corporate bond market participation. SEBI chairman made a huge speech, and I'll just take some important statements out of that. One, he said that India needs to deepen the debt markets, not just the bank credit, as the scenario has been till time. He also said that the corporate bonds make up just about nearly 16% of India's GDP, much lower than what the other countries have that in sense of number there. The capital markets are going to play a very leading role going forward from all scenarios, whether it is about financing, infrastructure development, to green transition, manufacturing expansion, even services growth for that matter. Overall, issuer participation seems to be quite limited in the market at this point in time as well. The regulator also said that out of 5,600 listed companies in the market, it's just about 770 companies that have actually raised funds from the corporate buying market. Out of these 770 companies as well, it's only 272 issuers which access the bond market repeatedly. There also is another number that's doing the rounds, and that is about the corporate bond issuances in the last 3 months. And when you look at the month of January, it hit the lowest in 3 years. So the companies raised just about $675 billion rupees in January, and this is via 272 bond issuances. If you compare this with the last year January same time, it was 789 billion, and this was via 210 issuances there. But let me leave you with a better, stronger number really. When you look at the investor participation, well, that seems to be really growing. If you look at FY20, it was just about 43 million unique investors therein, but FY25 shows a strong number at 139 million, and with the kind of push that we're looking at from apps and companies and regulator and exchanges as well, the number is expected to grow higher.
Okay, more than a 3x increase in less than 5 years, Manisha. That's a good number to leave us with. Thanks very much for joining in. We'll have to slip into a short break for now, but after this, we're going to be joined by Sandeep Garg of Wellspun Enterprises for a focus on their numbers. Stay tuned.
Welcome back. While the Nifty is down about 124 points, two stocks stand out. Formidable recovery from lows on Trent. Now is among the top Nifty gainers. In fact, the top Nifty gainer after yesterday as well and today. So 6% of lows on that stock. And the other one is Cummins, which is up 7.5% from the lows. Management commentary in the con call positive. We'll get more details on that. But Welspun Corp is the management now joining us as show today. The company has cut its FY26 top line guidance amid delay in key project awards and degrowth that was seen in the first 3 quarters. To discuss this and the quarter gone by, we are now joined by Sandeep Garg, who's the managing director of the company. Thanks a lot, Sandeep, for joining in. You had cut the guidance from what, 4,000 crores to about 3,700 crores. How confident are you of that? And if you could give us a sense on the order activity, the order winning this year could actually exceed your guidance.
Thank you. Good morning, Mangalam. Yes, we had given a guideline that we would achieve a turnover of 4,000 crores at the consolidated level for FY26. Because of certain uncontrollable events like extended monsoon, the delay in the award of one of our major projects, and some statutory clearance, I don't think we will be able to hit the revenue guideline. But the positive side is that our EBITDA is very strong. Whatever guidance that we had given at the start of the year, we are likely to meet or exceed that EBITDA guideline on an annualized basis. I think the deferment of the revenue from FY26 to 27 is something which is in the nature of business rather than anything which has got to do with the fundamental of the companies. The company fundamentally remains strong, both on the side of profitability as well as on the order book. If we had guided about 10,000 crores of order we will book in this year, so which if we are able to convert in next 50 days, which we are reasonably confident that Pune Shirur project, where we have opened L1, will get converted into an order, we would have met the guideline. And we see a lot of traction going forward on the order. So I think on an overall basis, I am very confident about the company's future and also in the profitability of the company.
Okay, so with the Pune Shirur project, you're saying getting executed in this quarter itself, Q4, is that the guidance or will it spill into the next financial year? If you could give us a timeline, and therefore, what would the guidance for the full year revenue, what is the visibility you have right now, given that you've already cut your guidance for this year?
So the Pune Shirur is a BOT project. So if it gets awarded in next 45 days, the revenue recognition for the project will start only after about 5-6 months. So the revenue recognition will be in the later half of FY27, is what we currently forecast. In terms of our guidance that will we be able to meet the revenue, will the revenue for the FY27 grow? The answer is yes, we are reasonably confident that the revenue of FY27 will grow because a couple of orders that we are now booking will start chugging along in FY27 first half.
Right. What kind of order inflow will you end this year with? You had earlier given a target of 10,000 crores with the outline, the possibility of you actually outdoing that.
So we do believe that we will be able to meet 10,000 crores for sure at the consolidated level. We may be slightly able to exceed that as well, depending upon the timing of the awards. However, we are reasonably confident that we should be closing the order book for the FY26 at about unexecuted order book of about 20,000 crores at a consolidated level.
So you may meet or even exceed that guidance. On the General Jeevan Mission receivable stress, I mean, in the last quarter, you told us there was some kind of payment delays, about 200 to 220 crores of receivables, is what you had flagged. Given the high exposure that you have to water projects and, the sharp drop in this revenue from the segment in the quarter, could you give us a sense of how the situation has panned since then? Are you seeing an improvement here?
So thank you for raising this question. Yes, we see some improvement there. The state has started releasing the funds. We did get some funds in the month of January. And the important point is that in the budget speech, there has been an allocation to the Jal Jeevan Mission, which we believe will get released before March. So we expect the receivables from UPJJM project to get realized. And we see that in FY27, there is a substantial allocation towards JJM projects. So we see a continuity of support from the center as well as the state for these projects. So it is our belief that we will be in a position to recover our receivables shortly.
What is the number? What does the number stand at right now? How much have you received since?
So we have received about 30 odd crores from the receivables. So outstanding would be somewhere in the similar range because we have executed similar amount of work. However, going forward, we expect by March, this should drop by about 50 crores. Our receivables should drop by about 50 crores.
All right, take that point. Thank you. Good luck for the next couple of quarters, and more importantly, FY27, where you do believe that you will see some sort of growth after what has been a execution challenge this year as against a business challenge. So revenue of 3,700 crores, EBITDA likely to meet guidance, and 10,000 crore worth order inflow this year so far, ending this year with about 20,000 crores in terms of unexecuted orders. That's well spun. And meanwhile, the markets, they're lower. Good time to get in, an FNO perspective. It's a big surge that we're seeing in a couple of these consumer discretionary names. So if you look at the frontline indices, the Nifty Bank, the mid-cap index, all of them are lower. The top draggers, obviously Reliance and the metals index, but the market breadth would have your portfolios look a lot worse than what the frontline index is looking like. 2,000 stocks in the red for just about 800 stocks in the green. In that as well, if you are, invested in some of these names which are earlier underperforming, the likes of Trent, Nykaa, AB Fashion Retail, a big surge is what we're seeing in Jubilant Foodworks as well. QSRs are doing well in today's trading session. Jubilant Foodworks up around 5%. The good part, however, is that the Nifty, despite its volatility, choppiness and decline from the highs, the low of today is higher than yesterday's low. So that's solid support coming in at lower levels. And, the 25,600 put writers are equally active as well. If you look at the 25,600 put writers and the 25,700 call writers, it is understandable after the decline that we saw that 25,700 call writers would, look to eat that premium of 124 rupees, which is available, telling you upwards of 25,800, there could be some sort of supply coming in. But 25,600 put writers, they haven't thrown in the towel yet. They continue to maintain their position, telling you around 25,500 is where the support comes in. And that ties in with, the technicals of the market as well. 50-day moving average, 25,819, that's where resistance comes in. 25,479 or 25,500 to round it off is where the 20-day moving average support comes in. A lot of long positions added on Cummins, and we have fresh shots on Cube Investments and for the second day running on HAL as well. So those are a couple of stocks that I'm tracking.
All right, Mangalam, thanks very much for taking us through that list. Let's take a short break on that note. Up next, we're going to discuss the big story of the day, which is none other than the IT and the artificial intelligence space. All right, it's time for the CNBC TV 18 big story of the day, and that, no surprises, is the global IT stocks downturn for the second day after fears around a new AI tool disrupting sentiment. Anthropic has launched Claude Cowork plugins, and the update has sharpened fears that AI is no longer just assisting software, but replacing layers of it. Reema Tendulkar joins in now with more details. Reema.
Well, thanks so much for that. While IT services sector faces some skepticism due to the rise of AI, all right, we'll get to that in just a bit. But before that, let's begin with who the direct impact is going to be on. And it's going to be on the software services companies like a ServiceNow, Salesforce, SAP. These are the companies which have package implementation software. And now with the agentic AI tools released by Anthropic's Claude, perhaps it's directly competing in the space of these software companies. But on the Indian IT companies, there could be a second-order impact because Indian IT companies help with the implementation, the application development and maintenance of these software package programs. And according to Jefferies, this accounts for nearly 40 to 70% of their overall revenues. So the fear is on account of two parts. One, because there's so many changes taking place in the AI workspace, will there be some sort of a decision paralysis? There's a lot of uncertainty which is currently there. So will clients be willing to commit to big budgets, big orders, or will they decide to wait it out to see how the AI architecture plays out? And secondly, it's also raised the fear of AI deflation. Now, up until now, Indian IT companies, on account of AI, were seeing an annual deflation, 2%, 3%, 4%, because of productivity. But now the fear is that this is going to accelerate. Maybe the deflation becomes 6 to 7%. So on the whole, because the Indian IT companies have gone through a prolonged downturn, it's been three bad years, slow years. And the expectation was that FY27 will be a better year, FY28 will be a better year compared to FY27. All those, that hypothesis is now going to be tested. Questions are being raised on that, and which is why the Indian IT companies are under pressure.
But there's also this counter view that perhaps Indian IT companies will be able to buck the trend?
Well, there are multiple arguments for that. One of them, of course, is the fact that the Indian IT sector has underperformed. So maybe a lot of the bad news is probably already into the price. Secondly, many argue, and even companies say that we've survived many cycles from Y2K to cloud. So this one also we will be able to pass. And at the end of the day, up until now, the commentary is that AI will be a net revenue generator. Then order books have remained strong, which means that at least over the near to medium term, there is revenue visibility. And finally, let me give you what UBS says. They're saying this agentic AI deployment and development at scale is still very nascent, maybe 5%. Firms need to work on cloud migration, data integrity, modernization before AI agents can be deployed meaningful. So this readiness work is a multi-year journey and is a big tailwind for Indian IT services companies.
All right, but there was that development that came in overnight as well. Google parent Alphabet, they've doubled down on their capex, and big business houses are also investing a big time in AI.
Indeed, that was a big headline, right? Alphabet, the parent company of Google, is doubling down on its capex. The calendar year 2026 capex spend is going to be double of that of last year, and we're looking at a number of almost $185 billion. So this is massive. Expectations were for a 30-50% increase. They've gone ahead and doubled it. So basically what it reiterates in a simple way is that AI perhaps is not a bubble. Contrary to what was feared in the market about overvaluation, that too much money is chasing, we still don't know what the ROI is going to be. But the fact that Google is doubling down on its capex, at least for now, seems to suggest that AI is not a bubble and big money is still chasing AI. And secondly, this in a way has also fueled the narrative that hardware is still doing well, but software is losing out. With so much money that's being pumped into AI, the AI brain is getting smarter, which could put software companies under duress. But the big takeaway is, if you just zoom out, is that AI is not a bubble. And this is what even Larry Fink, chairman and CEO of BlackRock, had to say. I don't believe that there is an AI bubble. If we continue to invest, if we don't continue to invest, then China will win. We must invest aggressively. And even from India, the message is equally clear. Mukesh Ambani saying that AI is hugely advantageous for India, and India adapts to technology faster than anyone else, and we must use that speed to our advantage.
I'm a believer, have been a believer, that we have to embrace technology. We cannot run away from it. And AI is real, right? From an India point of view, it is hugely advantageous.
I don't believe there's an AI bubble.
You don't believe that?
Not at all. I believe the greatest risk we have is if we don't invest and continue to invest, China will win. And I believe the need to rapidly expand the AI opportunities is necessary. That doesn't mean we're not going to have some bankruptcies. We'll have some failures. That's capitalism. You're going to have some big successes and big failures. But the opportunity that companies have in utilizing AI is going to be present in everything we do. I mean, even yesterday you had Anthropic announce a new model, which is going to be threatening for some businesses, but it's going to be an opportunity for other businesses.
All right. All that AI, tech, so much happening. But what we'll do is take a short break, come back, focus on earnings, focus on whole economy. Interarch Building Solutions joins in, post their numbers.
Fly Emirates, fly better.
Looks like a QSR day today. You know, what started with a good performance from Westlife developers, Westlife Food World now you call it, you know, in today's trading session that's moved quickly to double-digit gains, so 10% higher on Westlife Food. January has been good pickup in terms of same-store sales growth for all of them. Devyani, Sapphire continue to do well, and now that's extending to Jubilant FoodWorks as well. That stock, the only F&O listed stock in you know, the QSR space right now. So for most part of today's trading session, it was somber, and now it's suddenly perked up around 5%, the top F&O gainer, Jubilant FoodWorks. But let's talk about Interage Building Solutions. Manish Garg joins us now after that third quarter numbers. Manish, thank you for joining in. I remember speaking to you during the IPO time, and you said that you would do about 2,200 to 2,500 crores in terms of top line in FY26 with near double-digit margins. First 9 months, you're 1,400 crores on the top line, and margins shy of double digits. So would you like to revise that long-term guidance, and by when do you reach that 22 to 2,500 crore top line?
Yeah. Good morning. Sure. So I would just like to clarify that when we went in for IPO somewhere in 24, we had actually said that we will double our turnover in about 4 years. So our projections were that by FY28, we will get to double of our turnover, which was 2,500 crores, and we are on track for that. So the FY26 comes in between, and our guidance has been to the extent of 17.5% initially, which we then revised to 20, and we have delivered 40% against that till the end of Q3 this year. So this is just so we are very well on our track to
the end this year, upwards of 30%, given the run rate that you're at, because 17.5 up to 20%, and you've delivered 40. So what's the revised FY26 and 27 guidance then?
So I think our FY25-26, which is the current financial year, we should be at the run rate that we are at. We should be at about 1,900, which will be about 30% year on year. We have utilized a lot of our current capacity, and as we are building our capacity, we consider that to be coming up fast. So the next year we are being a little conservative because the capacity is still coming in, and our utilization and order execution has gone up quite substantially. So the next year we are right now keeping the projections at about 15% on the higher base of this year, which of course is 30% higher than what it was last year. So on 1,900, our projection is that we will at least grow by 15% this year. And then on top of that, another 20% next to next year, which would mean that by FY28, we will be achieving our guidance and the target of upwards of 2,500 crores, which will be double of our turnover when we went in for IPO. And that's the guidance we have stuck to, and we have been delivering quarter over quarter.
Got that. You know, in terms of order flows, where are you at currently so far? What have you done for FY26? Where do you hope to end the year? And also in terms of your capacity and volumes, you know, your installed capacity is now at about 2 lakh metric tons, and the phase 2 ramp up is also underway. Where will that take you in terms of volume execution, both for this year and for FY27?
Yeah. So in terms of our order book, we measure the order book in terms of the net order book. And if you see our order execution, that means the backlog deployment has gone up significantly. So our Q3 sales has been 522 crores. And despite that, our order book, net order book executable in hand has grown up to over 1,650 crores. Going forward, we see very good inflow in the pipeline, and our order book is going to be similar, because in our business, every building has to be delivered within a period of maximum 6 months to 9 months, except for some longish orders wherein you get a timeline of 12 months. So 1,685 at the current run rate also is a 8 to 9 months order book. And we feel that this is the right backlog of the order book that one should be having in our industry. We don't really get orders wherein people want us to deliver buildings after 2 years or 3 years. So in our industry, 8 to 9 months order book is a good order book.
Got it. And what's the update on your PEB facility in Gujarat and the Andhra Pradesh heavy steel facility? I mean, what's the incremental revenue opportunity from these? And while you're talking about that, also talk us through margins, your margin projections for the next 3 years.
Sure. So in terms of our capacity, our Kheda plant in Gujarat is well underway. It's on schedule. Also, our AP heavy fabrication facility for multi-story buildings and data centers and all those kind of steel structures is well underway. Our structure is ready. So we plan that by end of June, July, somewhere this year, we should be doing trial productions at both the facilities. And both the facilities put together, once fully ramped up, it takes about 3 to 4 months after trial production minimum to ramp up to some capacity, should be adding another about 60,000 tons to our existing 2 lakh capacity.
Okay. All right, 60,000 tons is what you're hoping to add to your capacity. A quick word on the kind of opportunity you see from, the data centers. You had mentioned that being a key growth driver, a lot of focus on that in the budget itself. Could you give us a clear target of what kind of revenue expectations you have and the opportunity you see from that business in the near term?
Yeah, so the opportunity on the data center is very large. In terms of the revenue percentage to our overall revenue, in terms of percentage, may not be very large because it is just coming up. We already did one data center a few years ago. We are building one in Greater Noida right now. We have a very strong pipeline for these data centers. But then having said that, the data center approvals do take place over 2 to 3 years because of the power requirement and proximity and other issues. So while we are very bullish about the data center playing a very significant role in ramping up the order book in that particular segment. So if I was to divide the 2 segments, our conventional segment, which is industrial and logistics, to institutional and infra segment, I would say within the second segment, the growth of data center will actually lead the growth of that particular segment of the business that now we are entering.
All right. Thanks a lot for joining in and giving us an outlook on your business. On target to double your revenue by FY28. And this year, you should grow 30%. The year after this, about 15% as well. On the other side, we'll get you more on the markets. Stay with us.
You want to talk business? Meet me in the on-board lounge.
Welcome back. Let's get you a quick check on the macro signals for the day, starting, of course, with markets as always. The broader markets trading with cuts of about 140 points. The Nifty now just below its 100-day moving average of 25,645 is where it's at. The Bank Nifty also trading with cuts of nearly 180 points, but managing to hold on above that 60,000 level. Let's also pull up the rupee. It's been on a retreat after that 7-year high that it touched following the positive sentiments from the US trade deal getting announced. But now it has been slipping, currently trading at about 90.42. And the reason for that is that there is limited clarity on the fine print of the trade deal, which is awaited. Steady today, more or less, and not far off from where the Asian currencies are trading. Those are weaker, but the rupee holding its ground for now. In the near term, it is largely seen range-bound, not much of a movement as we await more macro cues. On the 10-year bond yield, it has eased another 3 basis points is what we saw yesterday. Today, it's trading lower at about 6.68, and that's because the market is now positioning for a heavy OMO supply from the RBI, perhaps coming in the monetary policy to ease some pressure. So that's the next cue that the bond markets will be watching out for, whether or not there is a record liquidity injection and that support comes in or not. Let's also pull up the crude prices. Now, they're higher by about 2% now as we speak. The Brent crude at $68 to the barrel. After 2 days of decline, there's been a sharp downturn, and that's because of the U.S. crude inventories and the geopolitical tensions around the Iran-U.S. peace talks, the uncertainty on the scope of negotiations and what's going on there. So that continues to weigh on the crude prices. But that's where we're at on the macro signals. Big day tomorrow, RBI policy. That'll be the next one to watch out.
And, that's perhaps the reason why the Nifty Bank is holding above that 60,000 mark, because the street expects some sort of, relief or support from the RBI on liquidity. What we'll do is wrap up on this edition of Trading Hour, but you stay tuned because Halftime Report is up next. Thank you for watching.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Stocks sink back with mid-caps wheeling the heat. Metals, consumer durables and industrials are the big drags, while energy and PSU banks see some green. IT stocks see some reprieve after Wednesday's big sell-off.
BlackRock CEO Larry Fink says the next 20-25 years are India's era and it's where he will personally invest. Reliance Industries chairman Mukesh Ambani divines India will be a $30 trillion economy in 30 years. Both had a fireside chat with CNBC TV 18 Shireen Pan at Jio BlackRock event.
BlackRock's Larry Fink says AI isn't a bubble and it is necessary to invest aggressively or China will win. He adds that AI will be disruptive for many industries but also advantageous for several, and that's par for course.
India will not need to import 80% of its energy needs and will be self-sufficient in a decade, says Reliance Group Chairman Mukesh Ambani. He adds that the scale of investment opportunities in India today are unparalleled.
Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me Sonal Bhutra as well as Vinny Motiwala. Well, it is turning out to be a day where we are seeing pressure on the market. So we have the Nifty, which is in fact trading below 25,650 as we speak. We have metals as well as banks, which seem to be the key pressure points in today's trading session. And IT continues to be in focus in today's trade on the back of news. Lot of results to watch out for in today's trade. So that continues in terms of momentum. So we have ITC, KPIT Technologies, Canara Bank, Dixon Technologies, as well as the likes of Dabur, which will be releasing numbers. So it's going to be an active day in terms of news. But lest we forget, there is QSR, which is really buzzing away in today's trading session. So that's keeping some amount of sentiment on the upside and maybe talking about the hunger queues.
I was just going to say that. I think it's time to treat ourselves as well. It has been a very busy week, right? We've spoken about the budget, then US-India trade deal. We have the RBI policy meet tomorrow. So I think Ekta, Vinny and I will have a party tomorrow. But nevertheless, there is a part of the market which is doing well in trade today. Metals, that's one SPAC that continues to be on our radar. We'll discuss that as well. But consumption, that is the talking point. But, you know, Vinny, we've been talking about how mid-caps have been lagging for a long time. That continues to be the case today as well. And small caps too, giving that some company.
Absolutely. Small caps too is giving there some company. That underperformance is continuing there. I'm just going to highlight a couple of names, you know, at least some bit of a bright spot. Obviously, QSR is what you all have spoken about. We'll talk about eating later as well. But the capital goods side, Cummins, India, that's the one. They reported their numbers, muted set of numbers, but con call, they spoke about data centers. And that's what has been the highlight since the budget came in, right? The data center push, or the tax holidays, and everyone's focus is on that. So that data center commentary that came in from the company, a bit positive on that front, and that is what is keeping the stock on the positive side today. It was in the red, and now Cummins has recovered from the day's lowest point. Cummins is what I'm talking about, not Concord. So that's what we'll watch out for. 4% uptick as of now. Other names like BLS International, Imami, IKS Health, all these are also moving around after the numbers. But we have a very exciting lineup for you all on the show. Obviously, we're going to be putting the spotlight on the QSR space, which is buzzing in trade today. And in our What's Trending segment, we'll also connect with Karan Tarani, EVP in Lara Capital, for more insights on the QSR space. Now, we'll also connect with the management of Satvik Green Energies and Dr. Agarwal's haircare to discuss Q3 earnings and the outlook for the company going forward. Okay, let's move on and then bring on board the first management for today. We have Satvik Green Energy. They reported their numbers, strong performance that's continued for the company in the last couple of quarters. Yes, today the stock is a bit muted. Nonetheless, they managed to see a very good growth, right, in terms of revenues doubling, more than doubling in terms of revenues on a year-on-year basis. So the base is low, but they have continued that strong momentum. What is the outlook of the company going forward? Let's bring on board the management, the CEO of the company. We have Prashant Mathur, who is joining us right now. Prashant, good afternoon. Thank you so much for joining us on the show. I want to start by talking about, your revenue. You've seen very good growth that has continued over the last few quarters. Low base is a factor, but can you highlight how is the demand trend? And do you think this, doubling of revenue that we've seen coming in every year, that will continue in FY27 as well, given the push that's coming from the budget side as well?
Good afternoon and happy to be on the show. Yes, so if you see our past history, last few years, we have been growing consistently at a CAGR of 88%. So it's almost, we have been doubling our revenues year on year. And, this year also the trend continues. 9 months, we have close to 3,000 crores revenue with 137% growth. EBITDA also has grown by 135%, and PAT also has grown by 145%. So we have consistently been growing. Part of it is that we have continuously focused on expanding our customer base. We have focused on quality and high-tech products. We are also not only getting into backward integration of cell manufacturing, we're also getting into ancillaries and also in the allied businesses. So we have expanded our portfolio not only in module manufacturing, but inverter, pumps, EPC, and more also, in the plan. So
Prashant, does that mean 6,000 crores or more than that is what we could keep an eye out on in FY27 in terms of revenues, right? The doubling outlook that you have over there.
Look, I cannot give a firm number, but we as you know, we have Odisha project is well on track. So we will be almost doubling our capacities next year. So from 4.8 gigawatt, we will be going to 8.8 gigawatt. So module manufacturing is going to start in the first quarter of next financial year. So it's around the corner. So also cell manufacturing will be an addition which will be starting in the second half of the next year. So that will also, it will not hit the numbers, but it will give us additional EBITDA margins.
Okay. Prashant, yes, so that was going to be my next question on EBITDA, because you do have a lot of capex coming up, capacity expansion. Yes, revenues can double, but it's the profits that go back to the shareholders, right? So can you give us a sense of what the profit growth would look like? Margins have compressed this time around. Is it because of realizations going down? Can you give us a picture on that as well?
So for a module manufacturer, we have consistently been saying that anything which is about 13% EBITDA is a healthy number. And close to a 10%, 9-10% PAT is a healthy number, and we have consistently been delivering that. Once cell manufacturing comes in, and also we have started our encapsulator manufacturing also, 2 gigawatt, which was commissioned in the last quarter, which has also started adding into our bottom line. But with the cell manufacturing coming, that will give us additional EBITDA. So what we are assuming is that pure module, 13% EBITDA, and for cell plus module part, blended 18% EBITDA is something which is, and we believe in giving conservative numbers and delivering better than that. So like in the 9 months, we have delivered close to 16% EBITDA.
Okay. All right. So you are envisaging that maybe you can better the guidance at this point in time, Prashant?
Yes. So 9 months has already passed in, and we have doubled our revenue and profit. So, and the last quarter is the busiest quarter of the year, we expect to continue the momentum.
Prashant, just before we let you go, we've discussed numbers, but I just wanted to get an idea in terms of the basic customs duty on sodium antimonate, which is a critical raw material. There was a full exemption which was announced in the budget. How is that going to impact companies such as yours?
So that is a raw material that goes into glass manufacturing. Since we are not manufacturing glass, we are not able to really quantify the direct impact in the glass prices. I think that we will know after maybe a month or so. But overall, the budget has sent very strong and well-balanced signals for the Indian clean energy, especially the PM Surya Ghar Yojana, where in the additional allocation of 29%, that has given it gives us a clear visibility. The government focus is on solar, and it's going to continue for that.
take that point. Thank you so much, Mr. Mathur, for joining in. That import duty could help Borosil Renewables. That's the other player in this segment. But thank you for your thoughts today. That's the word coming from Satvik Green Energy. The stock lower in trade despite decent set of numbers. Let's slip into a short break. Up next, we'll focus on the QSR space. This is our What's Trending segment. We'll connect with Karan Taurani, the EVP at Elara Capital, for more insights.
Welcome back. Well, let's focus on our What's Trending segment on Halftime Report today. And we're tracking the QSR space with Westlife, Devyani International and Sapphire firmly in focus after earnings and a spate of brokerage notes. So brokerages remain constructive on Westlife, with both JP Morgan and Macquarie maintaining an overweight stance, citing a Q3 EBITDA beat. On Devyani International, sentiment is improving as a new CEO is taking the reins. To give us a 360-degree view on the QSR space, we have Mangalam joining in, and we'll follow that up with an analyst, Karan Taurani, who will break down what really changes for these stocks from here on. Mangalam, over to you first.
Well, three quick service restaurant stocks in particular are doing well today, and the cat among those pigeons was let out by the Devyani International results yesterday, and more importantly, the management commentary, where they said that there was positive same-store sales growth across most of their brands in January, barring Pizza Hut, and for that as well, the process of turnaround has begun. More than that, they've also achieved EBITDA break-even for one of their brands, Biryani by the Kilo, ahead of what they had guided. And then there was a management change too. We have the CFO of the company, Manish Dawar, who will now become the president and CEO of the company from April 1. So all these factors, along with the trigger, which is the merger with Sapphire, doing extremely well. And that explains why Devyani and Sapphire are doing a lot better in today's trading session. In fact, brokerages have written as well. We have Macquarie, which has an overweight rating, a target price of 160 rupees. They're saying that sustaining Jan's pickup is extremely crucial, and that's something we have to track. They announced the merger with Sapphire, and in the near term, there could be some amount of uncertainty. That's what Jefferies believes, but this is a long-term positive. They've upgraded the stock to a buy. And Bernstein weighs in on the new leadership change, where they're saying that this begins a long road to recovery for the franchise. Westlife, the operators of McDonald's, on the other hand, they too have seen positive same-store sales growth in the month of January. And there is a note coming in from Macquarie there too. EBITDA beat was on account of lower royalty payout, and at the same time, normalization of third-party aggregate delivery actually improved their performance in the fourth quarter, along with value offerings in dine-in that did well for them. So positive same-store sales in January needs to sustain for the QSR sector to actually do well from here on. The question again, is the tide turning, or is it just a false start that we've seen multiple times in the past? Stock-specific action, obviously the consolidation with Devyani and Sapphire, along with a new change of ownership at Restaurant Brands Asia, will be a key positive trigger to track.
Take that point. Thank you so much for explaining those moves, Mangalam. To take this forward, we have Karan Taurani, who's the EVP at Elara Capital, joining in now. Karan, good afternoon. Thank you so much for joining in. Well, numbers are known. There's definitely a recovery that we're seeing. But do you think this will sustain, and would it get better with the consolidation that the industry is seeing?
Hi, good afternoon. I think 2-3 triggers to watch out here in this quarter. One, obviously, is the commentary for the month of Jan in terms of SSG being positive. Now, this is coming after a really long time. Almost about 6 to 8 quarters is when the tide is turning positive in terms of SSG. So obviously, sustenance of that is a key module. Second thing to watch out here is the margins, right? So I think most of these companies did see a positive impact in terms of their raw material prices coming down because of the GST cut, which happened around 3 months back. So I think this is also leading to improvement in gross margin after many quarters by anywhere in the range of 80 to 100 bips for many of the companies. And thirdly, I think the valuations for most of these companies had come up by almost 30-40% over the last 6 to 9 months, primarily because of growth being an issue structurally. So some respite on growth with an improvement in margin and a slightly better outlook with valuation supportive is leading to the momentum in the share prices.
Okay. But Karan, welcome to the show. What is your expectation in terms of the same-store sales growth? Do you think that this momentum can continue? What are you factoring in?
So I think in terms of SSG this year, given the 9-month performance and the Q4 outlook, most of the companies will still report a negative SSG. As far as the outlook for next year is concerned, FY27, we do see some kind of respite, but we don't see SSG numbers moving towards 3 to 5%, which has been the trend historically during the pre-COVID times or in the times where actually these businesses opened up in terms of pent-up demand, in terms of dining. So that has been a major problem area. If you look at most of the QSR companies, Devyani, Westlife, Sapphire, they derive almost about 45% of the revenues from delivery. So the delivery channel growth remains to be healthy in the range of 5 to 6% on SSG, but it's the dine-in which is causing the concern here. So these companies structurally cannot expand their delivery proposition more towards 50% plus over the medium term, wherein the likes of Jubilant are favorably placed here because their delivery contribution is over 70%. So from that standpoint, these companies will continue to report underperformance versus Jubilant as far as SSG is concerned. And margins, of course, I think will sustain for the next 2 or 3 quarters because you will keep seeing benefit of lower raw material costs.
So margins will sustain while Jubilant will be doing better in terms of SSSG versus other QSR is what you're saying, right?
Yes, absolutely.
Okay. Karan, what about Devyani Sapphire specifically? Mangalam was right now highlighting as well that turnaround in Pizza Hut is coming in. What is the growth trajectory over there and how would that add on to Devyani Sapphire then?
So if you look at Devyani Sapphire, firstly, in terms of merger, there are no material synergies as far as revenue is concerned. Most of the synergies will play out on the cost front, wherein incrementally you could see a positive impact of about 60 to 70 bips in terms of gross margin. And of course, valuations could kind of come at par because Sapphire is obviously at a discount as compared to Devyani in terms of valuation multiples. But given where the metrics are, that gap could also converge. In terms of Pizza Hut, I think what is happening in the pizza category is that you're seeing a cool off in terms of competitive intensity. And that's one of the reasons in terms of why we like Jubilant Foodworks. Because whatever you saw in terms of margin compression for Jubilant Foodworks over the last 2.5 years, that is also largely behind us. Pizza Hut has seen a turnaround, but again, Pizza Hut, we don't see any strong growth in terms of store addition. Jubilant is the only one which could potentially grow the store count at 8 to 10% number, whereas Pizza Hut will be far lower in terms of store growth. Another important point to note here is that for all these QSR companies, their margins have become almost half over the last 2 years. So if you look at something like a Westlife, their pre-Ind AS EBITDA margin was more towards mid-teens or high teens, which has now come to below 10%. So clearly, whatever they're getting right now in terms of a positive SSG, it is coming heavily at the cost of margins, which may not see a recovery, from a medium to long-term perspective.
So, Karan, quickly, so do you think somebody should look at these stocks currently, the run-up that we've seen, but there's still risks going forward, right? And quickly, if you can tell us on Trent as well, what did you make of that?
So on QSR names, one should definitely look at it from a tactical perspective, or like a Devyani, Westlake, Sapphire, still offer upside of 15-20%, not beyond that. But we still prefer Jubilant structurally because of higher delivery mix and lower competition in the pizza space. As far as Trent is concerned, again, some minor signs of recovery there, but it's majorly led by the portfolio of Westside. Westside has seen very strong growth in terms of store count, and that's led to overall revenue growth in a better manner. Margin surprises also come because of Westside, because Westside margins are far higher as compared to Zudio. But again, there are risks on that as well, because Zudio is a far more scalable model, and Zudio is the one which was actually going very high in terms of LFL as well. So if Westside growth rate is not sustainable going ahead in the next 2 years, you could see negative surprises for Trent as well as far as revenue growth is concerned.
Okay, all right, Karan, we're going to leave it on that note. Thanks very much for that comprehensive take in terms of what's taking place in the QSR space, as well as Trent, which is in fact the top gainer on the Nifty today. There's been that margin improvement which has come in for Trent at around 20.2%, which has really enthused the street this time around. We'll take a short break, but up next, Vivek will take us through all of the stocks that are moving around and buzzing in trade today. Stay tuned.
Welcome back. You're still tuned into Halftime Report. Mid-caps are sulking in trade. So let's go across to Vivek. He's here to take us through the stocks that are moving around in trade. Vivek.
Well, thank you so much for that. Again, a very volatile trading session. Select stocks have seen a bit of a rebound from opening lows, key amongst them being the entire metal pack. Quite a few of the names, news reports around a possible price hike is something that the street is anticipating. And most of the names, after a sharp gap down, have recovered quite sharply in the session today. Trent is the other name on the radar. Margins have surprised positively against the street expectations, one of the top Nifty gainers today. And the entire QSR pack, after a very long time, you're seeing most of the stocks do well. So Westlife, Devyani, Sapphire, most of them came out with results in this particular week. Jubilant Foodworks too, up over 5% today. Cummins, one name from the capital goods space that's doing quite well, opened mildly lower, but that particular stock has recovered quite sharply after the analyst call. And Lupin, one of the sole pharma stocks today that's doing quite well, has cooled off a little bit, but one of the top gainers today. On the other hand, IT stocks, especially mid-cap IT names, have slipped further. Names like Emphasis, Persistent down over 1.5%. TI India came out with results during market hours yesterday. They held the analyst call presentation, post-market hours, that particular stock down over 8% today. Pharma stocks, quite a few of them are under pressure. Look at names like Aurobindo, Laurus, PPL Pharma. Most of these names down anywhere between 1% to 3%. And lastly, Redington India, this particular name, one of the top laggards on the NSE 500, unusually high volumes for this time of the day today.
Okay, Vivek, thank you so much for listing out all those stocks that are moving in the trading session today. Thanks for that. But on that note, we're going to slip into a very short break. After the break, we'll come back and Manisha Gupta will join us, and who will be joined by Kunal Jha of Nirmal Bang Securities discussing commodities on the other side.
Welcome back. Kunal Shah of Nirmal Bang Securities now joins in for his sense on all of those commodities there. Kunal, thank you so much for joining in. I want to start with silver because every day is more than 8 to 10% of a move, and currently 11% of a move is what we are looking at in case of silver prices. 65% margin, 10 to 15% of a move on a daily basis. How are you reading this market?
Okay, it's a very difficult time if you're a trader in this market because this kind of volatility is something which nobody has seen. Every day there is a $10 movement, which is absolutely unpredictable. The way the price moves up or down, this is not something which is tradable right now. So this is not a tradable instrument because it's so fast. So today morning, I saw and I was looking at the CME. The prices were trading at $83, and after 15 minutes, I saw prices were like a $73, and I was refreshing. I thought that there may be some error, but it indeed was $73. So this is unprecedented volatility. I've not seen it, and this is not a trader's market. First, number one. Number two, after the 40% crash, what we saw during last Friday, I think one thing one must realize that any asset class which corrects by 40% in a day, even because of the margin hike and any other technical reasons, this I think temporarily the bull run is definitely over in silver. Even though there are a lot of reports indicating that there are shortages in the physical market, well, if there are shortages, why that is not reflected in the price of exchange and not just on CME, in other exchanges also. I believe that even though after 40% crash, I'm getting a constant call from people that is this the right time again to re-enter, you know? So the mindset has become such, nobody is willing to accept this kind of parabolic rise in the silver prices were not sustainable. And I think every rise from here should be used as a selling opportunity. If you are stuck, if you bought silver, if you have silver, if it goes up to say 2 lakh 90, 3 lakh 1,000, these are that will be amazing opportunity from booking your profit from the short-term perspective. It's not a buy at dips market, and I'm not bullish in near term. I'm not expecting prices to revisit those levels what we saw a week back anytime soon. So $65 is my target going forward in silver, and on MCX that should translate somewhere at 2 lakh or even perhaps below 2 lakh rupees. So don't buy right now, stay away from it. Don't trade in this instrument right now. It's so volatile, and the outlook is definitely not very bullish.
Cautious note,
Strong,
Kunal,
strict
just
caution
coming
mode,
in. Absolutely, Manisha, in terms of silver prices. But Kunal, you mentioned that the prices on the upside now that you see for silver is around 65. But what is the range? What is the downside that you see on silver?
Yeah, so on the downside, I see range as a 65. On the upside, I see range as a $90. I don't expect prices in the near term to go above $90. Even max to max $95, not above that. So 65 to 95 would be the range, and the downside and the view will be the sell at rise, and very likely to see that silver will test 65, India below 2 lakh rupees.
Kunal, the physical buying, as you said, with every dip, there's a lot of calls coming to me as well on whether this is a good level to buy in sense of investment or buy a brick or buy it in some sense. Well, yes, the euphoria is just settled in. There are just so many people that have bought. And with the kind of move that we've seen in case of silver has been very, very big. I just want to take you through on what Bank of America, Citi, Goldman Sachs seem to be saying. $85 to $110 an ounce on the higher side are their targets for the second and third quarter of this year.
During the third quarter, it may, but I think the way prices rose in December and January, it is very difficult because with the 65-70% margin on India, and even on CME, the margin is as high as 35%. It is very difficult for the bulls to take these prices up. And another thing, the most important thing is the demand destruction from the industrial sector. So there are many reports indicating that many solar producers in photovoltaic cells, instead of silver, they started to use copper. So the substitution effect has already started to come in. So at 1 lakh, at 3 lakh 50,000, 4 lakh rupees, the industrial demand was collapsing. And that's the precise reason during last Thursday in London AM PM fixing, in London PM fixing, gold and silver fixing was much lower than the actual price trading on CME. So the demand is definitely faltering at a higher levels. So if the prices goes down, then only the industrial demand is likely to revive. Supply side still remains weak. So that's the reason it has not come down to $50.
Okay, all right, Kunal, thank you so much for your thoughts. And Manisha, thank you for taking us through that conversation. We cannot afford silver right now, so we'll go with QSR and buy burgers for everybody. I think that's our plan
You're
for now.
buying us, no?
I'll buy, don't worry about that. All right, with that, we'll slip into a short break. When we come back, we'll connect with the management of Dr. Agrawal's Healthcare to discuss their Q3 numbers. Stay tuned for that.
Welcome back. You're still tuned into Halftime Report on CNBC TV 18. Let's talk about specific companies now. Dr. Agarwal's healthcare reported what was a strong Q3 performance. The revenue grew around 23%, while the margins did remain healthy this time. Growth was driven by higher patient volumes as well as improved performance from their mature centers. We have Dr. Adil Agarwal, who's the CEO of the company, now joining in to discuss the performance and the quarter gone by. Dr. Agarwal, thank you very much for taking the time out. Well, just wanted to start by asking you about your margins. You did open 14 centers this quarter, but you did manage to maintain your margins at 27% despite that. What's the secret?
Ekta, firstly, thank you for having me on your show. So we are very happy to report a very healthy growth in Q3, where our revenues have grown over 22%. Our EBITDA margins also have grown 23%. So this just shows that we have been able to grow our margins healthily despite opening 14 new centers. What this shows is that the brand visibility is slowly increasing since our listing. We also have stronger ops teams right now, so we've been able to ramp up our new centers a lot faster. So despite that, despite opening this many greenfields, if you're able to ramp up your centers faster, you're able to maintain your margins. That's a very healthy sign in terms of how we are ramping up operations. Another important thing which has happened pretty well is our same-store sales growth has been north of about 14-15%, and that is actually helping you bring in a lot more flow through your bottom line, which is again helping you retain your margins.
All right.
I think these two factors have actually helped us maintain our margins, not just in these 3 months, but over the entire year.
All right.
We see our margins have hovered around the 27-28% EBITDA margins, despite opening about 38 new centers this year. Right, so I think that's a significant achievement, and kudos to our operations team and our doctors for the fabulous work that they've been doing.
Okay, so same-store sales growth stood at around 14%. What I wanted to understand was your surgeries. Your surgery volumes, I think, were up around 11 to 12% this quarter. Just take us through, cataract as well as robotic cataract. What is the difference when it comes to margins between the two surgeries? Because we understand robotic is more complex. Do you charge more for that? Is that where the trend is now moving?
So Ekta, if you see our overall business, about 65% of our business comes in from surgeries, out of which a sizable chunk of our business comes in from cataract surgeries, which is obviously a very prevalent disorder in India. Now, cataract surgeries can happen in two forms. You can do your traditional cataract surgeries, which is phacoemulsification, or you do something what we call as femtocataract surgeries, which are robotic cataract surgeries. Robotic cataract surgeries, now we have about 8 to 9 machines which do these surgeries across the country. And they obviously are priced a little higher compared to your traditional cataract surgeries. Your margins in your traditional cataract surgeries are relatively healthy. They're anywhere between 77 to 78% gross margins. Your robotic cataracts will be slightly higher, given that you are charging a slight premium for doing femtocataract surgeries.
Okay. Dr. Agrawal, you spoke about how you added 39 centers in the year so far. You have around 60% presence in North, and you are expanding, South, and you're expanding in North now as well. How much of the addition came in from North, and what is the outlook going forward in terms of center addition? How will you fund that capex?
So we launched 3 new centers in Delhi this year. So this was our first entry into Delhi. We started off with one large facility in Southex, and then we have launched a facility in Gurgaon, a third one in Preet Vihar. So this particular region now is going to be a big focus for us over the next 4 to 5 years. Given the kind of response we have had in the Delhi market, we are very happy to share that the patients are responding well to us, and we are having a good response from the local market. So we will be seeing sizable expansion in this particular market. Most of the capex for our new centers, and we are looking at adding about 55 to 60 new centers every single year, at least for the foreseeable future. Most of this capex expansion will happen, which will be funded by internal accruals, and we will be raising some small amount of debt. We also have some funds available from our IPO proceeds, which is again being deployed towards setting up these new centers.
All right. Just narrowing down on guidance, revenue growth of 20% as well as profit growth of around 35%. I think you're in line to achieve that?
Yes, Ekta. So I think, by God's grace, we've been able to do well. So we have been able to meet our revenue guidance of 20%. And if you look at our PAT growth has been about 74%, which has been quite sizable.
Yeah.
So we
So
are.
what does that mean for FY27, Dr. Agarwal? You know, FY26 looks steady, but FY27?
Look, our endeavor for FY27 is to maintain this kind of growth, and that's what we're focusing towards. This will come through a combination of both, same-store sales growth, where our existing centers will continue to grow, and we will be adding about 20% new capacity. So if you're at about 200 centers, we're looking at adding about 50 to 60 new centers over the year, so which will cater to the remaining balance, about 5 to 6% of growth. So we should be able to maintain a similar guidance in terms of what we have provided in FY26 for next year as well.
All right, so maybe assuming 20% growth in terms of revenue as well as 35% growth in terms of profit for FY27. We'll take a short break. Dr. Agarwal, thank you very much for joining in and speaking with CNBC TV 18. We'll take a short break on that note. Lots more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV 18. As of now, the Nifty is at 25,620 levels, almost near the day's lowest point is what the Nifty is trading at. Nifty IT, I would like to pull that index up as well, because at one point of time it was trading in the green, and post 11 we saw that decline coming in. As of now, Nifty IT too is trading at the day's lowest point. Broader end of the market too, there's no respite on that front as well. There's that underperformance coming in from the Nifty mid cap as well as the small cap in the trading session as well. So we'll watch out for what's going to be happening in the second half of the trading session. As of now, a bit of a dull day that has turned up for the markets so far. But with that, we're absolutely out of time on this edition of Halftime Report. Thank you so much for tuning in. Up next, a business lunch to take you through all the market action.
Stocks sink back with mid-caps feeling the heat. Metals, consumer durables and industrials are the big drags, while only PSU banks see some green. IT stocks too slip after a slight rebound.
BlackRock CEO Larry Fink says that the next 20 to 25 years are India's era and it's where he will personally invest. Reliance Industries chairman Mukesh Ambani divines India will be a $30 trillion economy in 30 years. Both had a fireside chat with CNBC TV 18 Shireen Bhan at a Jio BlackRock event.
BlackRock's Larry Fink says AI isn't a bubble and it is necessary to invest aggressively or China will win. He adds that AI will be disruptive for many industries but also advantages for several, and that's par for the course.
India will not need to import 80% of its energy needs and will be self-sufficient in a decade, says Reliance Group chairman Mukesh Ambani. He adds that the scale of the investment opportunity in India today are unparalleled. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I am Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormuz. You know, this week started obviously with that big budget fall on Sunday. Then we saw 3 sessions of gains, but today back in the red all across the board.
The question is, when did the week ever end? That's
true.
the bigger question. But yes, it's par for the course, you could say that, because after 3 days of gains, there is some bit of profit booking that's coming in at higher levels. The index still trying to hold that 25,600 mark at least. That is one support that's coming in from the lower side. And we are counting down to a very, very earnings heavy day. We have just come out with a couple of results just a few minutes earlier, but there are some big names that are going to be reporting numbers today. Bharti Airtel being one of them. PFC being another one, LIC, Keynes Technologies, Hero MotoCorp, the list is endless almost when you look at possibly the last big day when it comes to results. Of course, the result season continues into next week as well, where there are a lot of results that need to still be reported. But for now, the index is down. The IT index has also turned lower as we speak, but trying to defend that 25,600 mark for now.
Absolutely. Like you pointed out, big day for earnings. But, you know, there is no place to hide. Leading that fall is the metal pack. We've got Vedanta, Hindustan Zinc and Nalco, all of them trading between 3 and 5% in the red. We've also got those private banks that are seeing deep cuts, IndusInd Bank, Kotak Mahindra Bank and Axis Bank, all of them down around 1%, a little over that. IT, as Hormuz pointed out, continues to fall. It saw some respite in early trade, but now it's again in the red. We've got Emphasis, Persistent and Coforge leading that fall, and they're all down 1%. And unlike yesterday, we don't have any other sectors to sort of offset the big cuts we saw in IT. However, there are some names in the green. We've got those QSR stocks making some sort of a comeback. We've got Westlife Food, Devyani, Sapphire, all of them over 5% in the green. And as we pointed out, the PSU banks is the only sector that is seeing some gains on the index. Now, global IT stocks down for the second day after fears around a new AI tool disrupted sentiment. Anthropic launched Claude Cowork plugins, and the update sharpened fears that AI is no longer just assisting software, but replacing layers of IT. Rima tells us more. Rima?
Thanks so much for that. Well, there are 2 sets of fears which are coming in for IT right now. Because of the rapid changes in AI, will there be some sort of a decision paralysis? Will the customers be willing to take big decisions, or will they delay that? For instance, large orders, or, you know, just committing to any kind of, order till we have clarity on the kind of AI architecture. Secondly, there is also fear of revenue deflation. Now, on the back of AI, we've already seen a regular revenue deflation of 2 to 3% because AI is so much more productive and therefore you need fewer people. But now with the rapid developments, will the AI deflation move up from the current 2 to 3%? Can it be as high as 5 to 6%? And therefore, that brings you to the question, is that earnings were expected to improve for the Indian IT companies after 3 very tough and slow years. But will that expected earnings improvement take place? Let me run you through what brokerages are saying. Jeffrey says that Anthropic's Cowork plugins and Palantir's claims of faster SAP migrations highlight how AI could potentially erode application services revenue for the Indian IT companies, which currently stands at about 40 to 70% of their overall revenues. So therefore, companies could face growth pressures. Consensus growth estimates do not fully reflect this, posing downside risk to valuations, and therefore they have a selective stance. UBS, on on the other hand, says, and they have a constructive view, they see agentic AI deployment at scale is still very nascent. And for that to happen at scale, you will require cloud migration, data integrity, modernization. And this readiness before you can actually apply agentic AI is a multi-year journey and a big tailwind for the Indian IT companies. Kotak has also written, and they've titled the report as saying, plenty of panic over a little flutter. They believe the market reaction has been disproportionate to the actual near-term impact. The progress in generative AI has largely been in line with expectations, which is that 2 to 3% revenue deflation peaking out in FY27. They're saying the downside risks remain from unknown future breakthroughs, not from current proven disruption. And all the claims about how ERP, SAP timelines, which Palantir said in the earnings call, according to them, may not be universally applicable given the real-world complexity. So according to Kotak, the reaction, the sell-off in IT stocks seem to have been overblown, and the downside risks come in from the unknown future breakthrough, not what we know so far. Back to you.
All right, Rima, thank you so much for summarizing that for us. But the IT index has taken a turn lower, as we just highlighted at the start of the day. The analyst community too being completely divided from where it was. So at the lowest point of the day is the Nifty IT. On to a mega CNBC TV 18 exclusive. Then two global business tycoons, Reliance CMD Mukesh Ambani and BlackRock chairman Larry Fink, came together under one roof to discuss the art of investing for a new era. In a conversation with Shireen Bhan, the industry stalwarts spoke on a broad range of topics ranging from India's growth potential to AI. Listen in.
Excites me the most is the startup industry. When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, right, 100 new Reliances in terms of where and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India.
Let me come back to you on the investing in India's growth opportunity and this new era that we're speaking about, and the role of making strategic choices today, which will require patient capital. And I want to understand from your perspective what it will take actually to build patiently with patient capital over the next 2 decades.
Well, I think that the Indian opportunity, as we stand at about $4.5 trillion of GDP in a $110 trillion world. Right? I see us outgrowing the world and finding our right place. So I am one of those believers who think that this 4.5 in a 20, 30-year period, right, will outgrow the rest of the world, and we will hit $25, $30 trillion. It's going to be 30 years from now, but as we do that, the India opportunity is a 10, 20, 30-year opportunity. And when you think about solving India's energy problems, I am a believer that in the next decade, India will not import 80% of its energy. We have a path, and God willing, with technological breakthroughs, we will be reasonably self-sufficient in energy.
So when you think about the growth of India, it's not a quarter, it's not a day or a week, it's not a year, it's over a long horizon. And you could say maybe this is the era for India and over the next 20, 25 years.
What excites you the most about India? You referenced the tariffs, and we've had a deal with the US overnight. President Trump and Prime Minister Modi have signed off on that reciprocal tariff agreement. So the overhang has lifted at least on one aspect of that relationship. How crucial a development is that, and what excites you the most about India today?
Well, let's be clear, over 20 years it had no bearing. Maybe over the next 6 months or a year, it had some significant bearing. But over time, the foundational issues of India, how it's able to leapfrog. I mean, you watch what has, over the last, I would say, since the era of the smartphone. And I think that's a pivotal point. 2012 was, think about your life before the smartphone here in India. But the beginning of the smartphone, the rollout of 5G and how that transformed India in so many ways. When you think about how the Modi administration digitized the rupee and how it transformed commerce in India across the board. I am very worried about other countries. Even the United States is falling behind.
On that note, it is time for us to head into a short break for now, but more news and updates coming up on the other side. Stay tuned.
Welcome back. Now all eyes are on the RBI monetary policy outcome tomorrow, where the central bank is expected to maintain a status quo on the repo rate. Let's go across to Ritu Singh to understand what is expected from the MPC.
This monetary policy may not be about rates at all, it's really about liquidity. With inflation benign and growth steady, the Reserve Bank's focus is now on ensuring that past rate cuts transmit smoothly through the economy while keeping its powder dry. And that is exactly what the CNBC TV 18 monetary policy poll is also signaling, with an overwhelming 90% of the respondents expecting the MPC to hold steady despite having the room to cut, with only a very small minority still betting on a 25 basis point reduction. Interestingly, the number of people that were expecting a cut was a tad higher before the India-US trade deal was announced, but now the market believes that the deal has eased the pressure on RBI to provide any immediate stimulus. Now, looking beyond the meeting, the message is even clearer, where 70% believe that RBI will stay on pause throughout this calendar year, with barely 1/3 penciling in one more rate cut. And for now, no one is talking about hikes. So if not rates, what is RBI going to focus on? That is liquidity. Now, despite record high open market operations this year, bond yields have been stubbornly high, and the street expects that the central bank will step up support either through more OMOs, possibly even a CRR cut, longer dated VRR operations, Operation Twist, everything is on the table to cool down yields. Any talk on liquidity is also going to be keenly watched. Now, on the currency front, rupee volatility has been a concern, but the markets don't really expect any targeted intervention. Instead, RBI will likely stick to the long-standing stance of not defending any specific level. Now, our respondents see the 10-year yield settling around 6.7 to 6.8% by March, while the improving sentiment after the US trade deal could see the rupee strengthen to below 90 by March. Now, as for the macro forecast, don't expect any major change because you have the new CPI and the GDP series that is just around the corner, so RBI will leave these as is. Now, economists on their end see the FY26 inflation inching up to about 2 to 2.5% on the new base, and then rising towards 3.8 to 5% kind of a range for FY27. The bottom line is expect a neutral tone from the RBI this time, a wait-and-watch policy, and a policy focused less on the rate action and more on liquidity management.
So policy focused on liquidity and not rate action. Thank you so much for those details, Ritu. But moving on, External Affairs Minister S. Jaishankar is in the United States and met with U.S. Secretary of State Marco Rubio and U.S. Treasury Secretary Scott Bessent, where both sides formalized their cooperation on critical minerals and discussed ways to grow the economic partnership. The foreign minister, speaking to the press, also commented on the India-U.S. trade deal. Take a look at what he had to say.
Not directly with me, because that's being handled by Commerce and Industries Minister Piyush Goyal. So what we have is, the Prime Minister and the President had their conversation. There were some announcements which came out of it. So thereafter, I think there's a detailing of the trade negotiations, which is sort of underway as we speak. So that's really where things are.
Just before we move on, pull up PB Fintech, and the way the stock has seen a recovery from the lows of the day. The company has informed the exchanges that the board meeting that was supposed to be held to discuss the potential QIP has been cancelled. Of course, they have not specified the reasons as to why the meeting has been cancelled, and they have also not specified as to whether there will be any further date as to when the board meeting will then be held to consider a potential QIP. Remember, the company had confirmed a CNBC TV 18 news break that they are going to be raising funds to fund an inorganic acquisition. The board meeting was supposed to be held today, which has now been cancelled. The stock now at the highest point of the day, 4.5% higher, near to that 1500 mark yet again. But let's move on, listening to Commerce Minister Piyush Goyal outlining the timeline for the deal and the way forward.
हमारा पहला ट्रांच बायलैटरल ट्रेड एग्रीमेंट का लगभग तैयार हो गया है. हमारी उम्मीद है कि अगले 4-5 दिन में हम एक जॉइंट स्टेटमेंट यूनाइटेड स्टेट्स ऑफ अमेरिका और भारत के बीच में फाइनलाइज करके साइन कर देंगे, और उस जॉइंट स्टेटमेंट के आधार पर शुरुआत हो जाएगी हमारे दोनों के बीच में इस समझौते की पहली कड़ी. साथ ही साथ एक फॉर्मल एग्रीमेंट ड्राफ्ट हो रहा है जिसको शायद महीना भर 1.5 महीना लग सकता है, और उस फॉर्मल एग्रीमेंट को मिड मार्च तक साइन करने का अंदाजा है, लेकिन 18% जो यूएस टैरिफ्स घटने हैं वो जॉइंट स्टेटमेंट अनाउंस होने के बाद एग्जीक्यूटिव ऑर्डर द्वारा यूनाइटेड स्टेट्स ऑफ अमेरिका कर देगा.
On that note, it's time for another short break, but more news and updates on the other side. Stay tuned. Welcome back. You're still with us on Business Lunch. Iran and the United States are set to hold talks in Oman on Friday, While the venue is fixed, the agenda of the meeting remains uncertain. The next report tells you more. Take a look.
The U.S. and Iran have agreed to hold talks this Friday in a rare diplomatic opening as tensions rise between the two nations. Both sides confirmed the meeting after disagreement over the agenda and venue. It's now set to take place in Oman. On Wednesday, there was little sign of any common ground of what would be talked about. Tehran says it will only discuss its nuclear program and that its missile arsenal is off the table. U.S. Secretary of State Marco Rubio took a different view Wednesday.
As far as the topic of those discussions and what the agenda needs to be, look, I think in order for talks to actually lead to something meaningful, they will have to include certain things. And that includes the range of their ballistic missiles. That includes their sponsorship of terrorist organizations across the region. That includes the nuclear program, and that includes the treatment of their own people.
The talks were originally planned for Turkey, but were moved to Oman's capital Muscat, a location Iran prefers because earlier nuclear discussions were also hosted there. The meeting comes after Tehran's deadly crackdown on protesters last month, and U.S. President Donald Trump then deploying thousands of troops to the Middle East and threatening military action against Iran. Trump has repeatedly warned that he is prepared to strike Iran if diplomacy fails, telling NBC News this week that Iran's supreme leader, quote, should be very worried. Iranian sources told Reuters that clerical rulers saw Trump's demands on limiting Tehran's ballistic missile program as the biggest obstacle. An Iranian official said the country is ready to show flexibility on uranium enrichment. Since U.S. strikes on Iranian nuclear targets last June, Tehran has said its work enriching uranium has stopped. But tensions rose again this week when the U.S. military shot down an Iranian drone near the USS Abraham Lincoln. In a separate incident, the Pentagon says Iran's Revolutionary Guard threatened to seize a U.S. flag tanker in the Strait of Hormuz.
And with that, we take a leave on this edition of Business Lunch. We leave you with the index looking to recover from the lows of the day. Don't go anywhere. Midcap Radar takes the action forward on the other side.
Nice.
Good afternoon. Welcome to Midcap Radar, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Continues to be a down day. So I think that one-day rally that came by for US-India trade deal, that was short-lived. Investors are looking out for more details and the fine print there. But mid-caps, they are sulking. But the headline index is actually reacting more than the broader markets.
That's right. Good afternoon, Sonal. So all the positivity as far as the US trade deal is concerned has been tempered on the back of the sell-off that we've seen, especially as far as the IT pack is concerned, and that's taken the market low for the last two trading sessions. But a lot lined up on the show today, some important corporate conversations. Let's start off with the top headlines. Stocks sink back with mid-caps feeling the heat. Metals, consumer durables and industrials are the big drags, while only PSU banks see some green. IT stocks too slip after a slight rebound.
Auto components maker Uno Minda posted a good Q3 number. Profit rises 19% to 277 crore rupees. Company also announces 7.64 billion rupees investment for all new weather four-wheeler manufacturing plant in Maharashtra.
The sell-off in Hindustan Aeronauticals continues. The stock is down another 5% today as Morgan Stanley has downgraded the stock to an underweight rating. The management reiterates that it will meet its guidance for FY26.
Shares of Godrej Properties fall despite reporting a good set of December quarter numbers. The company achieved 74% its annual booking guidance and is on track to beat the 32,400 crore booking value for FY26.
PB Fintech shares surge over 5% intraday after the company announces that the board meet scheduled later today to consider a fundraise via QIP for an acquisition has been called off. Remember, the stock fell over 12% in the last 3 days on concerns over the deal as well as the fundraise.
All right, those are the top headlines that we are tracking. Mid-caps are lower, but they are not falling as much as the benchmarks. So this is our special segment. We are going to be talking about all the mid-cap movers we have. And we have Gaurav to take us to the mid-caps that are moving around in trade. Gaurav.
Well, yes, if you look at the mid-cap index, it is currently under pressure. But if you look at the company-wise, we have got some companies who are still seeing some kind of upside. And this is not just an upside. They're also seeing strong volume. So we have got the companies in the likes of Westlife Foods, Rane Madras, JSW Cement, Aztec Life Science. If you look at the moves, they are up more than 8%. And it is not just a movement in the stock. But if you look at the volumes data also suggests 2 to 3 times higher volumes than the 10-day average. Other than that, on the losing side, we have got Tube Investment, Zuari Agro, Satvik Green Energy. Remember, Satvik Green Energy came with the numbers, and after that we are seeing some kind of reaction on the stock. And at the same time, let's also not forget about Car Trade, because this stock is also currently under pressure, and not just a pressure from the pricing point of view, but in terms of volumes as well. From the mid-cap index itself, we are seeing some stocks which are trading with a higher volume, and they are also actually buzzing up around. And we have got companies like Dixon Tech. Now remember, today we saw Dixon Tech actually going as low as 4%, but we are seeing some kind of recovery there. Persistence System, if you look at the stock, it is not moving much, but the volumes are very high. But at the same time, we have got Cummins, Jubilant Food, and lastly, PB Fintech. Just the recent announcement, which has pushed the stock more than 5% in a day itself. We are seeing higher and stronger volumes in all these stocks in a day today.
Okay, all right. Some interesting names there. Thank you so much for joining us with all those details, Gaurav. The big story that we've been tracking is global IT stocks. They are declining for the second day after fears around a new AI tool which disrupted sentiment. Anthropic launched Claude Cowork plugins, and the update sharpened fears that AI is no longer just assisting software but replacing layers of IT. To discuss the impact and more, we are now joined by John David Lovelock from Gartner. John, thank you so much for joining in, and we are speaking at a time when there's so much happening in the IT space. Tell us how is AI going to impact IT services growth? Do you think it could impact your growth forecast as well?
Overall, the forecast is doing very well. We're seeing the transition into the new super cycle of intelligence away from digital business. The forecast reflects that. The growth in overall AI spending is a bit of a mixed bag. Technology providers are still leading the way, investing in the data centers that are required to build up the infrastructure required to do all the inferencing work that we're going to be seeing coming online. And of course, companies bringing out new products and services built around AI. The new announcements don't change our forecast. We were expecting these introductions of new products. It's built into the idea that spending is going to be going from information technology to intelligence technology.
Well, we take that point completely. The next important question we want to ask you is, can AI impact productivity if the employee-agentic ratio isn't balanced?
There's going to be a lot of rebalancing going on to the workforce globally. Every industry is going to be accepting new levels of productivity needs, and there's going to be a lot of job change coming in the next few years, particularly as AI and agentic AI roll into just about every job. Every piece of software, every piece of technology, everything that we own and operate is going to get an AI component to it. Remember, AI is a technology. It's not an application. It adds to everything that we do, and it's going to make everything that we do a little bit better.
So, John, do you think there is pricing pressure which is already coming in due to these new products from the AI segment?
AI is changing pricing in just about every market that we are tracking. Within the devices market for PCs, tablets, and mobile phones, as NPU chips and TPU chips are added to make these devices AI ready, that's adding a certain price increase to the premium product lines, and that's changing buyer behavior. When it comes to software, AI is adding new feature and functionality and certainly new costs from the provider's point of view, and they're passing that on as price increases to CIOs and the end users. And that's changing the way that they're interacting with the software, and it's driving most of the software growth that we're seeing in the 12% range. In the services area for consulting, managed services, application implementation, it's a little bit of a mixed bag. We're seeing the consulting services add AI to their delivery, and CIOs are expecting a price decline or a cost decline because of it. So where software is getting more money because they're adding AI, services in many ways is going to be getting a little less money because they're adding AI.
Well, that's right. So cost definitely will be low, but pricing also is expected to be under pressure. So what does this spell for profitability growth as far as IT services companies are concerned?
The traditional services line is one of the slower growing lines within our forecast. Consulting services is only growing at 2.9% this year, application implementation around 1.4%. Part of that is down to that pricing that we had talked about, where CIOs are looking for concessions because AI is being used. And they're looking for that concession whether AI is actually being used or not. So services companies are in this pressure situation of having to invest in AI delivery and getting penalized when they are able to deliver it. And they're also getting penalized if they're not putting it in. They're still looking for the same levels of price pressure.
So, John, in case we have to summarize, what is the key takeaway? If an investor is looking at the tech space, what should they keep in mind when it comes to IT services versus AI? How is it going to change their viewpoint from an investment perspective?
Top line AI spending growth globally is not a robust industry this year. It is in the 3% range. So looking for top line revenue growth, you're going to have to be looking for companies that can actually make market changes and take growth from competitors. AI is in the trough right now. Generative AI is in the trough of disillusionment. CIOs' expectations for what it can do are at its lowest point. The IT services companies that can pivot and make sure that their clients are getting the best value out of AI by using third-party applications, point solutions, and working with the software companies that are providing AI so that CIOs can implement that which is available to make incremental changes to their product line are going to be doing the best this year. Those that are looking for traditional implementation services may not do as well.
Well, thank you so much, Mr. Lavlock, for joining us and giving us all of the details. Definitely a developing story and having a significant material impact on most IT companies across the world. Well, we'll now slip into a short break. We'll get chatting with the management of Transport Corporation of India on the other side on their Q3 results. Welcome back to Mid-Cap Radar. Well, one stock from the broad end of the markets that has seen and taken quite a bit of a beating in recent times was Policy Bazaar. Despite a very strong set of Q3 results, the company's intention to raise funds via the QIP route, and it was a large fundraise that the market was fearing. It was a QIP, so equity dilution was something that the market was fearing. But some time ago, the company has informed the exchanges that the board meet for a fundraise via the QIP has been cancelled, also potentially indicating that they will not go ahead with the planned acquisition. Now, clearly, a relief rally being seen on the stock. That stock high by almost 9%. In fact, analysts had also raised concern on capital allocation on the company going away and diverting its capital away from the core India market to an external European-based company that they were targeting to acquire. So, significant relief rally. Sonal almost 9% higher, and this is after a 3% gap down opening.
Yes, that's a big surge in that stock. So we'll keep an eye out on this one. But you know, there are a lot of earnings which are coming in as well. Talking about Godrej Properties now, because remember, this was one stock which took a lot of beating when we did see that real estate index falling from the highs happen. Reported good set of numbers. Their quarterly bookings are up 55% on a YY basis. Collections are up 40%. Their operating cash flows are up 73%. And they say they are on track to beat their guidance for FY26. That was already at 32,500 crore rupees. If you look at the 9-month numbers, they're sitting at 24,008 crore rupees in terms of bookings. Collections are up 19%. Their operating cash flows, though, are down. Now, Godrej Properties is one of the companies which has a major exposure to NCR as well, and that is where weakness trends are coming by. Company says they added 3 projects in Q3, and in 9 months, they added around 12 projects with 22.36 million square feet of area. They said sales growth is around, across markets, be it NCR, be it Mumbai, be it the other regions as well. And it is on the back of strong volumes and pricing growth. And they're going to see FY26 as the best year across all metrics. Important because it is coming from a player which has seen a big fall in terms of stock price. So management commentary is very important here, but it has failed to soothe any nerves. The stock is still lower, despite them saying that they will be able to exceed their guidance. Maybe the ground reality is something more different, and markets are preempting the demand concerns. But of course, we'll keep an eye out on that one.
Well, thank you so much, Sonal, for taking us through all of the key highlights as far as the results of Godrej Properties as well as the management guidance is concerned. But moving on, it's a good time to welcome Vineet Agarwal, MD of Transport Corporation of India, to discuss their Q3 results and the way going forward. Thank you so much, Mr. Agarwal, for joining us. The first question we'd like to ask you is, you had earlier given a full year guidance of 10 to 12%. 9 months, you're tracking at close to a 6% uptick. Now, if you intend to maintain your guidance, it indicates a very steep ask rate as far as Q4 is concerned. So would you be revising your guidance, or are you sticking to it?
It's always good to be here. Actually, the guidance was for the consolidated results, and the consolidated results are at 9% in terms of top line growth. So 10 to 12% in terms of the overall top line growth should be maintainable and achievable. Q4 is always the best quarter for us. There is a lot of push for demand, and as well as a lot of companies are closing their books. So sales are typically higher. So we will retain the guidance of 10 to 12% on the top line. On the bottom line, we are on the console level, we are already about 13-14% up, and the guidance was about 15%. So we should be able to reach that as well.
Okay. Mr. Agarwal, what was the mix between LTL and FTL now that LTL is a higher margin business, and you had indicated that you could reach that 50% target by FY27? What is the mix currently, and how much higher are the margins here?
So that LTL is really part of our freight business, and freight business is now our second largest business. It is a little flat this year. The growth in LTL has restarted for us. We had about 37% versus 35% a year ago. It's inching forward, so I think the target was perhaps for 2-3 years later hence. So we think we should get to about 40% or so in 27, and then subsequently we will take further targets. But the other businesses, freight business is the one which is a little bit under stress right now because of MSME is not doing too well in the economy, but the other businesses seems to be doing quite well.
Understood that. Mr. Agarwal, so give us a sustainable level for margins as far as the Seaways business is concerned. You've targeted at 28 to 29% in the past. How is that particular segment panning out? And overall, are volumes picking up?
Seaways, as you know, we operate with 6 ships. These ships are container ships and they operate only on the coastal waters. It's great news for us also from a perspective from the budget also, where the finance minister has indicated that India should move from 6% to 12% of its freight cargo by 2047 by coastal shipping and inland waterways. Now that really will give a flip to our industry over time, because ultimately multimodal is going to bring down logistics costs as well, and also it's green logistics. So our business is doing reasonably well. We are adding 2 new ships this year. They are under order in China and they should come in the second half of this year. And that will help in adding capacity. So in terms of margins, we are at about 40% odd at EBITDA levels. I think those should probably moderate at about 30-ish%. Those would be the guidance for the next year as well for our shipping business. Revenues will not go up too much simply because we've not added new capacity. That should probably start closer to the end of Q4 of FY27.
Take that point, Mr. Agrawal. Thank you so much for joining in today and giving us all those details. That's the word coming in from Transport Corporation of India. They stick to their guidance in terms of revenue and profit growth. By the way, some important flashes at the bottom of your screen. It's an exclusive. There were concerns from the shareholders and the feedback indicated that they should not go ahead with the acquisition that they were planning. Vivek was just mentioning that, and that is something which they may undertake wider understanding and this will be discussed more before they actually go ahead for this particular acquisition.
That's right. That's led to a significant relief as far as PB Fintech is concerned. Well, we'll now slip into a short break. We'll get him on the market on the other side.
Fly Emirates, fly better.
Welcome back to Midcap Radar. Well, clearly the stock of the last hour has been PB Fintech. Yash, our colleague who's been on top of this particular story, joins us with more details.
Well, quite an extreme reaction as far as the stock itself is concerned from the time about 2 days ago when the company announced its plans for a large fundraising to support a large acquisition. The stock had corrected about 15%. The latest update which the company has given to the exchanges is that the board meeting which was supposed to happen, which was for the purpose of fixing the amount for fundraise and maybe give more clarity on that acquisition, has been postponed, and you see a completely opposite reaction on the stock coming in today. What also we've been given to understand from our sources is that for now, PB Fintech is likely to have put its fundraising as well as the acquisition plans in abeyance. This move is followed by concerns and feedback from various shareholders which expressed their desire against this particular fundraise and acquisition. Now, what we've been given to understand from our sources is that the company is likely to undertake a wider deliberation before proceeding with anything. We've written to PB Fintech. A response from the company still remains awaited.
Well, that's right, Yash. Thank you so much. Remember, Q3 results were quite strong from PB Fintech. The only overhang on the stock was the likely dilution, and it's a sharp recovery that the stock continues to hold on to. But with that, it's all the time we have on this edition of Midcap Radar. MF Corner when we return.
Hello, good afternoon. You've tuned into MF Corner on CNBC TV 18. I'm Vinny Motiwala. With me is my colleague Sonal Bhutra as well. Sonal, good afternoon to you. And obviously, this has been a very busy week. A lot of announcements that have come in. But we started with the union budget, and that's what we'll be discussing in terms of updates.
We will be. And, you know, not a lot of changes that came by in the budget for the mutual fund industry, but we have to talk about the STT hike that could impact one category of asset class or fund category, that is arbitrage funds. And going forward, we'll also discuss how one can look at the arbitrage between arbitrage funds, liquid funds versus savings fund for short-term investments. But of course, that is the STT hike that came by. To discuss this, we are now joined by Mohit Gang, who is the CEO and co-founder of Moneyfront. Mohit, good afternoon. Thank you so much for joining in. Let's start with the most basic question. What's your take on the impact of STT hike on arbitrage funds? How much would the impact on returns be?
Thank you so much, Sonal and Vinny. It's a pleasure to be on your show. Look, I think arbitrage as of late as a category has become considerably large in India, almost about 3.5 lakh crore kind of an AUM. And this impact of STT will be extremely visible on the returns of the category per se. If I were to just take an illustrative example, the arbitrage fund per se buys in spot and sells in future. So when you sell in future, there is an increase of 3 bips. So futures earlier were costing you around 2 paisa, and now the charge per future contract is around 5 paisa. So that's the increase. The increase in the trading of futures will be roughly around 3 odd bips. If you were to annualize this cost, it typically tantamounts to around 36 odd bips. The arbitrage fund will have an arbitrage component of around 60 to 75 odd percent. If you assume a 70% arbitrage component in the fund, the average decline in the return or increase in the cost per se would be around 21 odd bips annualized. Now, they also do a lot of churn in the portfolio. So assuming there is a 10% churn in the portfolio, there's an incremental hit which the arbitrage funds will take. So cumulatively, Sonal, if you were to just put all these together, the rough hit on the returns of an arbitrage fund annualized basis would be in the range of around 30 to 35 bips, right? Now, 30 to 35 bips is considerably high when you compare the category along with your liquid funds and other debt funds, because that's arbitrage as a category primarily is used by investors to park their short-term money, right? So it's a considerable hit considering what you were getting in liquid post-tax and now what you will get in arbitrage post-tax.
Point taken there, Mohit. You know, at such a time, what is better then for a short-term investment? Liquid funds or arbitrage funds now?
Okay, so look, for this to answer this question, we have to just take the post-tax returns from both the categories. Now, let's assume the return from both the categories is 7% pre-tax. So previously, the differentiation between a liquid fund return and an arbitrage fund return was roughly to the tune of around 1.23 odd percent post-tax, because arbitrage was taxed like your equity, which is 12.5% after 1 year, and debt funds or liquid funds are taxed at marginal rate of taxation. So here, if you assume the 30% tax bracket, and if we assume on the arbitrage side that the holding was for over a period of 1 year, then the differential return was around 1.23% post-tax return. Now, if you reduce that differential by around 35 odd bips, or let's say an average of 32 odd bips, then the differential return now is only 91 odd bips. So the return differential between arbitrage and liquid is still in favor of arbitrage. The margin of difference has squeezed quite a lot from a previous margin of around 1.23 odd percent. It's now come down to around 90 odd bips, right? So that's the difference. But I think still arbitrage as a category will continue to be a favored category for short-term parking.
Okay, take that point. So despite lower returns, it is still higher in terms of differential return when it comes to comparison with liquid funds. A lot of times what happens, Mohit, somebody thinks that I will not park it in savings fund, I'll put it in liquid funds or arbitrage funds for a period of 1 year or short-term period. And after being there for 1 year, they realize, okay, maybe I do not have a long-term investment planned yet, and I would like to continue doing it in liquid funds or short-term funds. How do they go about it? What is the best instrument in that case? Do they continue, revise their tenure there, or do they look somewhere else? How would you suggest someone who has this question while they're reaching the maturity for such fund?
Oh, absolutely. Look, once you realize that your corpus is meant for a longer tenor, then you have to park the corpus immediately into instruments befitting that tenor, right? So let's say if after a period of 1 year, you realize that you have another 2 or 3 odd years, then I think the best category to flip that across would be hybrids. Hybrids again have a different ladder of risk return matrix. So you can start at the lowest level of the hybrid matrix from, let's say, an equity savings fund, which is typically 15% naked equity and around 50 odd percent arbitrage, and the remaining portion in debt. You can go the next level, which is a conservative hybrid. You can go a step up above in a balanced advantage fund, or maybe a step ahead to a multi-asset fund or an aggressive hybrid fund. So that's the whole ladder. Depending on the time frame which you then think is optimum for you, it could be anywhere from a period of around 2 to 5 odd years. If you are tending more towards the 5-year band, then you go the highest ladder. And if you're tending more towards the 1 to 3 year kind of a bucket, then perhaps an equity savings or a conservative hybrid is more the choice for you. One can also decide to stay put in the arbitrage or debt category as appropriate. I don't think so any category in debt, barring the credit risk funds or the corporate bond funds per se, have the capability to outdo the arbitrage returns as of now. The long end of the curve also isn't looking very attractive as of now. I think the only category where you need immediate liquidity perhaps would then be, in a tax efficient way, would then be arbitrage only. If you compare it with the overall fixed income basket.
Mohit, is it always better to park money in short-term saving funds versus saving banks? How should we be viewing both these?
Oh, absolutely, Vinny. I think that's like a very clear answer from my end, honestly. Keeping money in your savings account or current account, in current, you don't fetch anything. In savings, you can fetch anywhere between 4 to 6%, depending on the bank at which you're parking. But these are all completely taxable interest incomes to you, right? So from that perspective, it's always better to flip that fund across into varying category of debt funds, depending on your time horizon. So if you have a horizon less than a week, then overnight is the category. If you have a horizon from within a week to a month, then perhaps liquid is the category. From 1 month to around 3 odd months, then maybe an ultra short-term fund. From 3 to 9 odd months, a money market. From 9 months to, let's say, 15-month kind of a duration. Then perhaps a low duration fund. And beyond that, maybe you go into short-term debt fund, so on and so forth. That is advisable only if you are at the lower tax brackets. If you are at the highest tax brackets, then for a duration above 1 month, you might just want to flip into an arbitrage fund.
Take that point because of the taxation arbitrage or the differential that would be helpful for an investor. Quickly, before we let you go, because budget, of course, STT was one thing. The other thing is that interest cannot be adjusted against dividend payouts if you're buying a mutual fund. How do you view that? We had done a conversation around loans against mutual funds and a lot of other aspects, but this is something we've not covered so much. Why do you think this would have happened, and is it a positive move? It of course would impact somebody's returns if they are into a dividend fund. Dividend also gets taxed now at slab rate.
Well, I think a very marginal category of investors do get impacted with this. I think those were all short-term traders who were wanting to make arbitrage or kind of a dividend stripping game, I were to call it. You borrow funds at a low cost, pledging your mutual funds and financial assets. Then you buy stocks which are likely to declare higher dividends. Immediately grab that dividend, and you could set off the interest expense against the dividend income to the tune of around 20 odd percent. So that was a very big arbitrage play in the market, which was available to only handful of investors who knew about this, right? It wasn't a very prominent clause. It's just that this budget had made it more popular now. But I think this was a very open and clear case of trying and misusing legality of this entire thing and trying and doing a quick dividend play on the stocks. So my sense is in the long term, it just gives market a little more stability, plus takes some amount of speculation out of the market, because RBI and SEBI pers have always been fairly against usage of borrowed funds to lever up and invest into equity. From that perspective, I think it just cleanses the system a little bit.
Okay. Mohit, thank you so much for joining us this afternoon. It was a shorter conversation. We have a lot more questions. But today we're absolutely out of time on this edition of Mutual Fund Corner. So Mohit, thank you so much for joining in, as well as thank you viewers for tuning in as well. With that, we'll leave you here today. But closing bell is up next to take you through the last hour of trade.
Welcome to India's #1 budget headquarters. Decoding key policies, delivering market-shaping insights, and unlocking the potential of India's growth blueprint. Beaming live from the CNBC TV 18 Motilal Oswal Budget Headquarters.
Taiwanese index is trading lower by 0.6%. The Hang Seng is down 1%.
The India opportunity is a 10, 20, 30-year opportunity.
This is the era for India and over the next 20, 25 years.
A support zone, 25,450 to 25,640, 25,690 or so on the Nifty, which is down about 1/3%. That's 80 points.
The P's, even if you look at a crude measure like that, are not at extreme ends. Many times they are below even the average for the last 1 or 2 decades.
Traditional services, there will be a deflationary impact, and we've accounted for that.
It's deep in the red, trading with cuts of about 160 points on the Nifty and 490 points on the Sensex.
Because of the rapid changes in AI, will there be some sort of a decision paralysis? Mid-caps, they are sulking, but the headline index is actually reacting more than the broader markets.
Okay, well, that is the day so far, and I mean, it's not a great screen to report on. We're down about 0.75%. We're coming to you from the CNBC TV 18 Motilal Oswal studios, and I mean, we're starting closing bell a little early. I'll just tell you why, because we've got a management waiting by 25,600 or so. So this is a 180-odd point knock. You know, Tuesday, of course, was a great day. Yesterday, we managed a green close. That's about it. And today, I mean, that strength is not lasting, and that is not exactly a great thing to see. Advanced decline is pretty poor as well. There are 2 down for every 1 stock, which is higher. This is, I mean, the across the NSE universe. Well, let's bring in the PVR management, which is waiting by. Ajay Bijli is Managing Director at PVR, and Gaurav Sharma is Chief Financial Officer at the company. Gentlemen, great to have both of you here. Thank you very much. And if I can call these results, you know, Dhurandhar-style results, Mr. Bijli, and absolutely, you know, stunning performance by the movie, and I think you are a reflection of what it has done. I mean, just tell us how impactful this has been for you.
It's incredible, and you know, that's what I like about the Indian market and our business. That you know, there's so many movies that come. It's like the Indian cricket team in the IPL and T20. You know, there's so many players packed. That you don't know who's going to perform and win the match, and that's what is happening with the content flow, where you know, you anticipate that this movie will do that much. Even if it doesn't perform, it gets compensated by another film that basically succeeds, you know, exceeds all expectations. So I think that's what happened last quarter. Diwali was subdued. We had some big movies which didn't click, but suddenly came Dhurandhar, and you know, we've had the highest sort of footfalls in the last quarter, and first 9-month performance as well has been the best post-pandemic. And the other good thing is that it's not just Dhurandhar. Even movies which were like with brand new stars like Sanyara and you know, Mahavatar, Narsimha, so many films that came. There was no blockbuster written underneath them, and yet they performed very well, which only goes to show that consumers they want to come and watch the movies. If the content connects with them, then of course there is no end to where the performance of the movie can go.
Mr. Bijli, Dhurandhar, is it possible to say what percentage of the numbers are on account of Dhurandhar? Just to get a sense. I mean, it's just a yeah.
Well, it came on the 5th
of December.
December. Yeah. So the quarter, it still did only 24 days of business. So I don't know exactly what percentage it is. Gaurav, you know what percentage would Dhurandhar be of the overall box office of the 3rd quarter? Is that what your question is?
Yes.
Yeah.
So for PVR INOX, Dhurandhar would be nearly in the range of 28 to 29% of our total box office collections for the quarter.
Okay, so that is in line then with the quarter. I mean, basically, it's about a third, right? In that sense,
slightly less than a third.
Slightly less than a third, because then it's kind of evenly split. My other question is, this is to you, Mr. Bijli. It's already on Netflix, I noticed, about 5 days back. It's been about 5 days that it's on OTT, the movie.
8 weeks after the release.
Yeah, so I think 30th or something, 30th of Jan or something, it's on... So is that like a rule or, I was just wondering because it was still going strong, I think, at that point. Could you have, in that sense, juiced it more through in screens and cinema halls before it hit OTT, or that's all pre-decided?
No, it is decided, but it was tapering off.
Okay.
Towards the 7th week, which is a lot for a Indian film, which has been carpet bombed in so many screens. Let's not forget, it was not just playing at PVR Inox, it was playing in so many screens. So I think eight weeks window is after which it has come on Netflix, and that's pretty much the standard and the norm now, which is fine. I don't think it cannibalizes our business. In fact, it makes everybody, all the stakeholders coincide and coexist.
And not to forget, Prashant, Dhurandhar 2 releases on 19th of March. So Q4 is going to have a 12-day bump up on account of Dhurandhar 2. So should we expect another blockbuster, Mr. Bijli? And also separately, finish that off and then tell us about the ad revenues, because that declined by 21%. Despite the higher footfalls, was it on account of the GST changes? What happened exactly? And what can we expect in terms of ad revenues going forward?
Yeah, firstly, I just want to talk about the positive things. Definitely, Dhurandhar coming in the fourth quarter. The second part is a brilliant boost to our fourth quarter revenues are going to be. And also Toxic is coming, which is another very big movie. So typically last year, in fact, in February, we had Chava. So this new trend that we're seeing that even in quarter four, people are releasing big movies. Border 2 also got released on the 26th of January. And that was also a great film and good performance there. So that's the first part of your question. The second is, yes, ad revenue has been disappointing. Not on the 9-month period. 9-month period was still even Stevens as compared to last year, 9 months. But this particular quarter, because Diwali was a bit subdued. Now, Diwali is a very, very important time for ad revenues. Typically, very big movies get released. Last year, we had Singham and we had Bhool Bhulaiya. Both were blockbusters. But this year, we only had one movie called Thama, and which didn't perform at the box office. So that had a big impact on our ad revenues. And also, Dhurandhar, in the first 2-3 days, wasn't perceived to be as big as what Pushpa 2 was last year. Pushpa 2, on the back of the success of Pushpa 1, already a lot of anticipation was there that it's going to be a big movie. So therefore, you had advertisers lining up to advertise on the big screen. But in this case, what happened that first few days of Dhurandhar, people didn't know that it'll become such a big sleeper hit. So the ad sales got impacted. So I think these are the two reasons why ad sales on quarter 3 in particular have been less, but we'll make up for it in quarter 4.
So Q4 ad revenues have been strong. You said you'll make up for it.
Yes.
What kind of growth are we looking at?
Well, I think year-end probably will be close to how we did last year. Is that okay, Gaurav? Fair comment to make?
Yeah, I think we will be slightly better than what we did in full year financial year 25.
Yeah.
Okay, so FY26 ad revenue growth should be higher than FY25 by mid-single digits? I mean, what numbers are we looking at?
So I think we are not looking at any specific numbers around that, but what we can definitely say is that we will finish the year higher than what we did last financial year in terms of the overall ad revenues.
Okay. Now, Mr. Bijli, the divestment of 4700 BC, right? So talk to us a little bit about the thinking there, because FMCG in a way earlier kind of was sort of cited as a bit of a growth pillar. So is this like a pivot away from all non-cinema consumer brands? Because you still have things, I mean, in-house brands like Dogfather, etc.
Yeah, those are just, small, within the cinema. Although we may take them out a little bit, but that's more a QSR type strategy rather than an FMCG. I think 4700 BC had a good run with PVR. Still 50 cinemas of ours continue to sell the brand within the circuit. Only 1%, less than 1% of our revenues in the F&B space. 1800 crores roughly is our revenue. This was only 13-14 crores of revenue inside the cinemas was represented by this gourmet popcorn. But I think after taking the brand to about 100 crores, I think the real journey of the brand was with an FMCG company, and we found Marico to be the perfect fit. And it did become a non-core business for us. So we thought that let's monetize it, sell the subsidiary, and whatever cash we do get in, and we do proper capital allocation for it towards our core business of cinemas, and also look at debt reduction from this cash inflow. So I think it had 10 years or whatever journey that they did, this brand did with us was more than enough. And now with Marico as a specialist, I think this brand will do well on its own.
Yeah, no, I mean, I think did a phenomenal job with that one. Gaurav, on that, what Mr. Bijli said about the debt reduction, so this infusion has come through, and are you on track to be net debt free by the end of this year, this financial year? And once you do it, once that happens, what's the plan? Will you, would you stay on track to getting to that 2,000 stream number? Or in terms of capital allocation, will you return cash to shareholders via dividends? I mean, any thoughts?
Look, we are already, when we finished December 25, we are already at about 350 crores of net debt, which is substantially lower than what it was when PVR Inox merger took place. And I think this cash proceeds which have come in will further accelerate the journey towards a negligible net debt level by the time we finish the financial year. We will use this capital and cash proceeds to pay down some debt. We'll also use it to fund the growth, because we feel that there are pockets in the country where the multiplex penetration is low, and we would like to grow in those markets. And, at an appropriate point in time, the board will take a call on in terms of, distribution of cash to the shareholders. But I think in the near term, we want to pare down our debt, reduce it to negligible levels, and reinvest this capital in growth.
Just one final question. The Competition Commission of India has also initiated an investigation into the levy of virtual print fee. Can you tell us what exactly is this, and how much does it roughly contribute to your revenues?
So virtual print fee contributes less than 1% of our total revenues. And, Competition Commission of India in the month of August had asked its DG to conduct an inquiry in terms of, how this fee is levied. And, because this matter is sub judice, so we would not like to make any further comments on this. But, the discussions with CCI are ongoing, and, the process is underway right now.
Got that. Mr. Bijli, looking forward to 26, calendar 26 with the lineup? There is Dhurandhar 2, but I mean, I guess there'll be more. As you said, I mean, I think you've mentioned this phenomenon of sleeper hits, I mean, right? And word of mouth is a big one, and it really picks up momentum sometimes.
Yeah, I mean, all stakeholders are back on the table. I'm very excited. I mean, the biggest stakeholder is a customer. He's given his verdict that he wants to go out and watch movies on the big screen. Film fraternity still believes in the theatrical business. It continues to pay more than any other platform, and it becomes a harbinger for the journey of the movie. So, they are very determined to make movies. All these movies, post-COVID, pre-COVID, not even 2 movies had done more than 500 crores. And post-COVID, there's so many films that have done more than 500 crores. And this fact is not lost on the film fraternity. So they do realize that once you release the movie theatrically, there is no cap to how much the movie can earn. So with the results, some very big movies are coming in 26. Shah Rukh's King is coming. The biggest movie ever produced, Ramayan, is coming in Diwali, which is going to be fantastic. And we've also got Love and War. A lot of Hollywood films are coming. Again, Hollywood has been fantastic last year. Lots of movies crossed the 100 crore mark. Big regional films are coming. Rajinikanth's film is coming. So I think if you look at the lineup, obviously it leaves us with a lot of optimism. So that's an incredibly important stakeholder, which is the film fraternity consumer. Even the shopping center developers, real estate, every single mall which is coming up, big town, small town, have again continued to allocate enough space for multiplexes, which means the relevance of multiplexes is there as well. So as I said, still remains and will continue to remain. So these are the indicators to tell you that, there's reason to be optimistic. in the coming years.
All right. We'll leave it there, Mr. Bijli, and look forward to good movies in PVR. Thank you very much, Gaurav. Appreciate your time here, as always. Thank you. Good luck.
Thanks, guys.
Okay, 160 lower on the Nifty, 25,610, and it's not a good look so far. Market breadth 2:1 on the declining side. Take a quick break. We're back with Pankaj Tibrewal, founder and CIO at Ikigai Asset Managers. Pankaj has done some numbers, put together some numbers in terms of what the third quarter is looking like, and numbers looking good, especially on the smaller end of the company curve. Coming up in just a bit.
Welcome back. Still down close to about 0.5% on the benchmark indices. The Nifty is below 25,650. Mid-cap index in the red. The advanced decline ratio is in favor of the losing strike. One stock advancing for 2 in the red. IT has been fairly volatile, but as we speak, the Nifty IT index is holding up with a minor green. Metal index continues to be the biggest drag. How should you position yourself? 1 hour to go before we wrap up the trading session. Mitesh is now joining in. Mitesh, in the morning you were telling us that 25,500. If we get closer to that, it would be an attractive buying opportunity. What have you done today in terms of trades? What's the advice?
I think that view remains, we're still above about 100 points and the day's lows around 25,560. So I think I would still, want to buy if we get close to about 25,500, take a 70, 80 point kind of a stop loss, and then, hope that we'll possibly retest 25,820 or even 25,900. So I think that's the kind of view I have. Positive, but, given the fact that we're still absorbing the gap up which happened 2 days back, I think it might be 1 or 2 days more of volatility. And in that volatility, as I said, I think buying on declines would be a better idea.
Yeah. What about individual stocks, Mitesh? What do you have?
Yeah. On the individual stock side, I have a buy on Wari Energy, and that's Premier Energy, and that's a stock I would recommend buying with a stop just below levels of 750 for targets of around 815 to about 820, and HDFC AMC. That's really done well after a correction. It's trying to regain its uptrend. So buy here with the stop below 27.15 and a target of 28.40 is what I.
Okay, all right, Mitesh, thanks very much for that. There are some numbers at the bottom of the screen. Minda Corp numbers, I think, are flashing as we speak. But, the other space is the QSR space, which has been in focus. Westlife, I think Devyani Sapphire, there is Jubilant Food, and there is perhaps a little bit of green coming through. JP Morgan, Macquarie, etc. coming through with a view as well. Mangalam is here with a quick snapshot view in terms of what we saw. Mangalam, take it away.
Well, 3 quick service restaurant stocks in particular are doing well today, and the cat among those pigeons was let out by the Devyani International results yesterday, and more importantly, the management commentary where they said that there was positive same-store sales growth across most of their brands in January, barring Pizza Hut, and for that as well, the process of turnaround has begun. More than that, they've also achieved EBITDA break-even for one of their brands, Biryani by the Kilo, ahead of what they had guided. And then there was a management change too. We have the CFO of the company, Manish Dawar, who will now become the president and CEO of the company from April 1. So all these factors, along with the trigger, which is the merger with Sapphire, doing extremely well. And that explains why Devyani and Sapphire are doing a lot better in today's trading session. In fact, brokerages have written as well. We have Macquarie, which has an overweight rating, a target price of 160 rupees. They're saying that sustaining Jan's pickup is extremely crucial, and that's something we have to track. They announced the merger with Sapphire, and in the near term, there could be some amount of uncertainty. That's what Jefferies believes, but this is a long-term positive. They've upgraded the stock to a buy. And Bernstein weighs in on the new leadership change, where they're saying that this begins a long road to recovery for the franchise. Westlife, the operators of McDonald's, on the other hand, they too have seen positive same-store sales growth in the month of January. And there is a note coming in from Macquarie there too. EBITDA beat was on account of lower royalty payout, and at the same time, normalization of third-party aggregate delivery actually improved their performance in the fourth quarter, along with value offerings in dine-in that did well for them. So positive same-store sales in January needs to sustain for the QSR sector to actually do well from here on. The question again, is the tide turning, or is it just a false start that we've seen multiple times in the past? Stock-specific action, obviously the consolidation with Devyani and Sapphire, along with a new change of ownership at Restaurant Brands Asia, will be a key positive trigger to track.
Thank you very much for that. Pankaj Tibrewal, founder and CIO at Ikigai Asset Managers, is now joining in. Pankaj, great to have you today with us. 10 days to go before we wrap up the earnings season. Before we begin and talk about the way forward, how has the earnings season been versus your expectation? What stood out for you, the trends that you noticed?
Good afternoon. I think we are halfway through the earnings season, and till 2 days back, about 263 companies out of the top 500 companies have reported their results. The heartening fact is that after a long time, we are seeing a double-digit top-line growth. So the top-line growth is about 12%, and the bottom-line growth, adjusted for the labor codes and a few one-offs, is again about 12.5%. So that's a very heartening number. And if we break down these 263 companies into two parts, one is BFSI, which is about 73 companies. The PAT growth is about 9.5%. And if you look at the non-BFSI, which is the bulk of the top 500 companies, which is another 190 companies which have reported, the PAT growth is 14.5%. So I think for the last 2 quarters, even in the September quarter, we saw a very healthy improvement on the non-BFSI space, which continues as we speak halfway through in the non-BFSI space for December quarter as well.
The Pankaj, afternoon and good to see you. The small cap space is where the earnings growth has been much faster. Can you confirm that for us? The smaller companies.
So if you look at this 263 companies in terms of market cap, Prashant, so large caps, about 59 companies have reported. Their PAT growth is about 8.7%. When you look at the mid cap space, about 87 companies have reported. Their PAT growth is 17.8%. And when you look at the small cap space, 117 companies have reported and their PAT growth is 39.9% as we speak. So obviously there are some stocks on the oil and gas, metal and mining, cement, which has lifted the growth. But the heartening fact is that this is 5th quarter in a row where mid caps are delivering very high double-digit growth. And small cap, this is a 2nd quarter in a row where the earnings growth is moving towards 25 to 35%. So I think after a long time, things have started to pick up. And Prashant, few things I would like to share with all of you is that our team and myself have been on the ground for the last 20-25 days. And across sectors, we are getting very positive feedback that most of the companies are saying we don't know what has happened post mid of December, but demand has clearly shown a very sharp rise. And this is across, I'm talking about auto ancillaries, it's talking about auto OEMs, cement, steel guys, ancillary to steel, which is the steel tubes companies. I'm talking about consumption. You saw just before this, all the QSR guys talking about good January. So I think ground reality is showing something else. And I go back to 2024, if you remember, Prashant, that valuations were very sky high, but the ground reality was very bad. Now it's just the opposite. Market till 2 days back was not believing that anything can happen in India. But I can only tell you that last 1.5, 2 months, the ground reality across sectors has started to show very strong momentum. And that's our feedback across different sectors, different companies. And we believe that March quarter, if it sustained in February and March, would be a big surprise for the markets going forward.
And I want to ask you, in this kind of an environment, what should one do? And good to get that feedback from the ground. Obviously, you've met lots of companies who are giving you this feedback, right? So just coming to you, let me just go across to bring in Yash as well and that PB Fintech story. We put out that story first, that they're going to do a fundraise and perhaps looking at acquisitions northwards of 3,000 crores is what we put out, the number, all confirmed. The board meeting notice was put up, etc. Now, and then of course, the stock went into a bit of a tailspin, fell about 10%, 12%. And Yash is with us. There was a notice saying that the board meet has been cancelled essentially, but Yash has got more. Yash, take it away.
Well, a complete seesaw, right? When, of course, we reported and the same evening company informed the exchanges that they're looking at a fundraise. According to our sources, the fundraise was quite large in size to support a strong acquisition, a large acquisition. The stock from that point in the next 3 days corrected about 15%. And just with this announcement today of that board meeting for deciding the quantum of fundraise being cancelled, the stocks covered almost about 9-10% in trade today. What we've been given to understand, of course, the company over the last 3 days got a lot of investor feedback, shareholder feedback, which was largely not in favor of this large fundraise and the large acquisition which the company was planning to make, after which the company has put the decision of making that large fundraise and the acquisition in abeyance. What we've been given to understand is that PB Fintech may undertake a wider deliberation before proceeding at all on this particular move of the fundraise or the acquisition. We've written to PB Fintech as well on this particular query. A response from the company is still awaited, but that's the limited point which the company has informed the exchanges, that the board meeting which was scheduled for today to approve that fundraise has been postponed.
All right, Yash, thanks very much for that. So that's PB up about 8-9% in a market which isn't looking all that great. Now, Pankaj, so this is so what you're telling us basically is that there is a disconnect, right? Because you've done your channel checks, the reported numbers are looking stronger, 39% for small caps. Could be, you know, a few resource companies skewing that numbers on the upside, but still overall it's looking up. But market still not despondent anymore. Maybe, you know, same time last week they were despondent, a little better, but there is still a large disconnect in that sense where prices are and where and what the feedback and the numbers that you are seeing. And so how do you make use of that disconnect, Pankaj? What should one do?
I think, Prashant, the market always, like a pendulum, swings from one end to another. Our job as money managers is to identify inefficiency in the market and take that as an opportunity. I believe that after a long time, the broader market space has started to look attractive. There are many companies, good quality companies, which are now available across the board at free cash flow yield of 4 to 5%. And they have not done anything over the last 3-4 years. And growth is starting to resume back in those names. So we believe that it will be a bottom-up stock pickers market, but the breadth of the market, which has been so bad for the last 15-16 months, starts to improve as earnings growth starts to come in. And across the board, we believe that there are opportunities now emerging. When I look at a large number of companies, there are opportunities where I believe in 3.5-4 years, the earnings can double. And that's what we as a team were discussing last night, that which are the opportunities which are the markets are completely disconnected with. And I think that's where we have to go in and put in our money to work. And I can only tell you that valuations after a long time, not across the board, but many pockets have started to emerge quite attractive. So from here till the next 3-4 months, we are advising most of our clients to increase their equity allocation. And the volatility which you have seen in the precious metal also, warrants that everything can't go just up. There has to be drawdowns also along the way. And the drawdowns are much, much sharper than equities. So till a week back, if you used to speak to Panwala also, he was saying ki Sona Chandi khareed lo sir aur baki sab bech do. So I think that has now tried to kind of change with this kind of a drawdown. And my belief is that FIs will also come back. You will be surprised to know, Prashant, Microsoft over a 2-year period has given you almost zero returns now. So one of the Magnificent Seven has started to, flatten out on returns. And our sense is it's early days, but AI bubble, which we have been talking about for almost 5-6 months, has started to show some signs of weakness across the region. Look at a company like Alibaba, 5 quarters of massive downgrades. And now when I look at the valuations of Alibaba, for example, 80% is coming from SOTP, which is AI. So I think finally markets will find its way and say that AI, there is a reality and there is a narrative. And sooner or later, I think that bubble will pick up. And FIs will return back to India. This year is my view, if earnings growth starts to pick up. And next year, we are thinking about 12 to 14% earnings growth for the broader market for the whole year.
12 to 13% earnings growth for FY27. FIs will come back and seeing some signs of weakness in the AI momentum. What does that mean for Indian IT? Pankaj, we've seen the Indian IT stocks get pummeled yesterday. There are fears that at least it's not that the business model goes out of fashion completely, but there will be perhaps accelerated revenue deflation. How have you all understood the impact on Indian IT?
So if you look at our portfolio positioning, and this is not from yesterday, but last 12 to 15 months, we have been underweight IT. So initially we got hit when IT did well, 2024, if you remember. But last year, I think IT showed a lot of weakness and it was one of the worst performing sectors. We believe that large caps, most of the large 4-5 names will have a tough time in terms of growth. And at max, these companies will be between 5 to 7% growth companies. But when you look at some of the mid-cap companies which are doing extremely well, I think they have embedded AI quite nicely in their workforce. I was looking at one of the mid-cap companies which has been the leader in the last 10 years in terms of market cap creation. And over the last 2-3 years, their revenues have grown up by 40%, but their headcounts have only grown up by 10%. That means higher productivity and using technology as a tool. So I believe that we have to be very stock selective. I don't completely agree to the fact that it's a doomsday. Finally, to implement every software, AI, everything, you need people. But maybe the magnitude of people may come down. And at certain point, the space will start looking again attractive from a valuation perspective, because don't forget, they throw a lot of cash over a period of time. So we will be selective, and as you move ahead over the next 12 months, I think there will be opportunities to cover our underweight. And maybe at some point of time, if opportunity presents itself, we might go overweight also. So I think we have to be very, very selective in this space. There is no one single answer. And I firmly believe that many stocks will start looking attractive on a cash flow basis.
Got that. Maybe you just want to leave us with one stock to chew upon, to think about. Pankaj, anything?
Nothing. I mean, just...
Not an IT, generally, overall, whatever. I mean, something looking...
See, one thing, Prashant, our framework is that look at companies where the margin is below the average over the last 5-7 years. And if growth starts to come back and balance sheet and cash flows are not compromised and business model is not compromised, I think that warrants a look. Two sectors which are clearly emerging there is one is the consumer durable sector. I think if the summer goes well, I think many companies will see a very strong rebound. And I think one should be looking at that sector, and margins clearly are way below the 4-5 year averages, and valuations have pulled up as well. Even in the home building products, whether it be tiles, plywood, you are seeing some companies available at a replacement cost as well. When you look at the chemicals part, I think the tailwinds have started to emerge. We track a index of 12 chemical, which gets imported into the country. And for the first time after many quarters in the December quarter, the index showed a decline in terms of volume, which means that the import intensity has started to come down by the Chinese, which has been a concern by most of the chemical players. And with all the FTAs and their deals being done, I think India will manufacture for the rest of the world. And Prashant, you take it for granted. If everything goes well, there's no devil in the finer details with US or with EU. Next 12 to 24 months, you will see a large amount of JVs being done by Indian companies with their founder counterparts. The sense we are getting on the ground is that a large number of companies, global companies, wants to come and set up their operations or the back end out here, or Indian companies manufacturing for them. I think this will become a reality in the next 12 to 24 months. I think today there's so much of noise, there's so much of doomsday that nobody wants to focus a little ahead in the curve. But I can only tell you that if the trade deal is okay, EU trade deal is okay, you will see a large number of JVs being set up in India. And India will be a big, big beneficiary of the manufacturing renaissance which is going on. So I may sound a little positive this time, but I'm just giving you a flavor at the ground, what is happening. And I feel confident that after a long time, things are coming back. Promoters are thinking scale. Companies are thinking about innovation. I went to one of the factories, and the kind of AI automation they have put in, I can tell you no other manufacturing unit in India, at least I have seen of that kind. So companies are thinking aloud. And I think that's a very, very good news for all of us.
Okay, well, good to hear, Pankaj. And it's not some short-term kind of flip because of the India-US or anything. There's really, and it's good to hear some fundamental optimism and work which is happening in your travels and feedback and company visits, etc. Thank you very much. Useful chat as always. Thank you for joining us. We'll take a break. Sunil Kaur of Goldman Sachs is with us. On the other side, we get a slightly more top-down view on what foreigners made of the last two big events, which is, of course, the budget and the India-US deal and what's been done there. So coming up in just a bit.
Fly Emirates, fly better.
Welcome back. Sunil Kaul is with us. He's Global Emerging Markets Equity Strategist at Goldman Sachs. Sunil, great to have you with us here. Thanks for joining in. You know, you upgraded your view on the market a few months back. And when you upgraded it, you only had, you cited a bunch of factors, the sharp underperformance of India. The steepest underperformance in 30 years, I remember. You cited, the tax cuts and the credit cycle which has turned, right? Now, you have more factors which have come through which were not there when you upgraded. You've got the India-EU deal, US deal. You got a budget which, despite the STT hike, there's other stuff in it which is pragmatic and perhaps provides continuity. And yet, look at the market, Sunil. Just look at the reaction this week. I know it's very, very short term, but the thing is, it's not holding, right? Tuesday morning, we got a 1,200 point gap on the Nifty. We closed 600 points higher. I'm not nitpicking here this day, that day. But broadly, my point is, I'm just using that as an example to say that interest levels perhaps still very much on the back foot in that sense.
No, look, Prashant, I mean, to be fair, I mean, obviously we are seeing a pullback in the global markets, right? I think some of the other markets in the region that went up much higher or have done much better, not just year to date, but last year, are actually seeing quite a bit of pullback this week, right? Obviously, not just the momentum unwind in US and the tech sort of route in the US, but also I think markets like Korea, Taiwan, some of the other markets in the region are actually got down quite a bit. So it's a weak tape, and India relatively is holding up pretty well. Obviously, there was a negative reaction on Sunday on the back of the budget, specifically around STT. But the Monday, I think market was reasonably up. You had a couple of down days on Monday, Tuesday in the global markets, but the market kind of pulled up. So I would say I think it's a weak tape, which is why it feels like the market isn't doing as well. But overall, I think India is starting to outperform relative to many of the other markets in the region. And I would say, I think on our side, we have in fact seen a noticeable pickup in client interest, client queries over the last sort of few days. Our sort of flows on the desk have also turned more positive. And so maybe it doesn't show up as much in the headline index, but I would say I think interest levels on India in the last week or so have clearly picked up. Again, maybe if you step back, I mean, you mentioned some of the catalysts we had when we upgraded the market a couple of months back. But really, I mean, there were three main drags to the Indian equity market in terms of the relative underperformance, right? There was the earnings down cycle, which we have been in the last 15 months or so. There was the very steep tariffs with the US, and then there was the anti-AI trade in terms of India being used as a funding for some of the AI pockets in the rest of the emerging market. And I would say, I think two, if not three of those factors have clearly reversed, right? I think earnings, we have clearly seen a bottoming out of the revisions there. Things have started to see some upgrades. Numbers are coming in pretty much in line with our expectations. So I mean, the demand is improving. The top lines are actually at 3-year highs from the current reporting season. So we are kind of, everything we are hearing on the micro side in terms of earnings is pretty much in line there. And then obviously with the trade deal, you have a major overhang which is removed. So 2 out of those 3 factors are already reversed in India's case. Yeah, I mean, there is the AI trade, but you can also argue that given the steep rallies we have seen there is some signs of weakness there right now. And maybe people are realizing that it makes sense to diversify a little bit away from AI trade to some of the other domestic demand pockets, which has been our view coming into the year for emerging markets. And so I would say the setup for India is actually looking pretty reasonably positive here.
Sunil, zooming out, is there a risk of a deeper correction in emerging markets? We're seeing some signs today. Kospi closed down nearly 4%. Hang Seng has lost 3.5% so far this week. And you referred to a weak tape across Asia this morning. As an EM strategist, what is the call on emerging markets? And is there a risk of a deeper correction considering the valuations and the way these indices had run up?
I mean, you look, there certainly is to some extent, right? I think the risk appetite levels have been running pretty high, not just sort of for emerging markets overall, but our global risk appetite indicator, basically a couple of weeks back, hit levels, which is a cross-asset indicator, hit levels which it has only seen 5 or 6 times in the last 35 years, 2007 being one of the periods. Doesn't mean that we imminently have a correction or a deeper correction in the market. In fact, on that indicator, over the next 3 to 6 months, markets are still sort of fine, and then things start to mean revert a little bit. So my point is that there was a pretty strong levels of risk appetite in the market, and valuations had reflated. And so in that sense, some of this correction we are seeing is healthy. The only sort of point I would make is that, look, the periods wherein the risk appetite can still run a little bit higher is when there is a generally positive global macro backdrop, and that's where we are right now still in. So we still have a decent growth backdrop in US. We still have China growth improving. We are seeing a recovery in India. So the overall growth is holding up. We are seeing rate cuts in many pockets of the region. Inflation so far has not been a problem. And so that environment where growth is fine, rates are generally kind of trending lower, or at least not tightening, that's generally a pro-risk environment and generally positive for risk assets. And so I wouldn't think that it's a sharper correction we are seeing. You're right, I think multiples did expand globally, but even there, I would say that if you look at emerging market pack as a whole, we are trading at 13.5 times for earnings growth, which is close to 20% for the aggregate EM pack. Whereas Japan, Europe, they are trading at much higher valuations, 16 to 17 times for much lower growth. Obviously, US is at 22 times or so. So yes, valuations are high, but I would say some of the developed markets are at even higher valuations than emerging markets. So on a relative basis, as a house, we still have a preference for EM outperformance over DM. And I would say you might see a bit of pullback, but we are not expecting a deeper correction in the markets.
Like a what? Like a 5-7% kind of a pullback possible?
Yeah, that's possible. I think we had a 30% rally in emerging markets last year. We are 9% up for the year as well. So you could see a sort of 5% pullback or more.
This is for MSCI EM, not US. This is not US led in that sense.
This is for MSCI EM, but again, I think what we are seeing in this week is that pockets that have run up too much. That's where people are lightening up their exposure. I mean, even year to date, if you look at some of these moves, Prashant, I mean, we had pretty steep rallies, right? And some of those, that was obviously commodity led, copper proxies, Peru up 40%, Chile up 20%, Brazil up 20%, even Korea is up 30%, just year to date, which is a month of moves. So we have seen steep rallies, both on the back of AI continuing to press higher, and commodity rallies. And so there is a bit of sort of multiple sort of correction that could happen in some of these pockets. But again, bringing it back to India, it's a market, as we just discussed, the sentiment was pretty bearish. We hadn't seen as much built up in length in India over the last 12-15 months. If anything, as we know, foreign flows were negative. And so I wouldn't think India has a large pullback on the back of this correction.
Yeah. So it'll be down 2 when MSCI EM is down 5. So relative outperformance in that sense, right? I mean, it's not going to go in the other direction, Sunil. Rarely does, right?
Yeah, that's true. But look, I think it's tough to, as you said.
Yeah, of course. But all of this, I mean, this 5% also may not happen. I mean, and also the point is things rarely settle exactly at the equilibrium, right? I mean, markets overdo things and then. But yeah, that framework is constructive.
I would emphasize, if you zoom out, we are still expecting about sort of 15% upside for Nifty or MSCI India as a whole for the full year. That's pretty much what our earnings growth expectations are. So even without sort of tweaking with the multiples too much, if and we are comfortable with those numbers, if we think the underlying earnings do come through this year, I think the market should be higher by mid-teens over the next 12 months. In the near term, yes, with the global risk off, you could fall a little bit, but I think that would be a buy on dips in case of India.
Yeah. I had with more questions, but Sunil, come back soon again, because these are very, very interesting times, hectic times, and so much happening. Thank you very much for joining us for now. Appreciate it, and really thank you for your time here. So yeah, I mean, looking a little wobbly as the global trend, that is, as we've also been pointing out. And Sunil Caller, Goldman Sachs, saying that perhaps, after a furious move in emerging markets, is just red hot. So it could let off some steam. And MSCI EM, he says, could see about a 5% kind of a pullback. Nimesh is here with D Street Chatter with what he's picking up from dealing rooms. Nimesh, what do you have?
Hi, Prashant. Down day, but again, it doesn't look like it's a very large selling or a big selling pressure from the large institutions. We actually recovered from the intraday lows as well, but from a flow perspective, I think it's a positive day of trade, and within that, my sense is that even from the domestic, while the FIs have turned positive, even within the domestic mutual funds, the sense I'm getting is that there is a bit of churn happening from large caps to small and mid caps. So that's clearly the theme of late, and that seems to be the day today as well. Even today, the broader market, the breadth is quite positive. The mid-cap index is relatively outperforming. So in that sense, this outperformance in the broader market names, especially the small-cap names, is backed by some bit of institutional flows as well, both domestic as well as some bit of HNIs and retail activity picking up in some of those small-cap names. So barring commodities, which is under pressure on the back of global cues, I guess broadly the flow seems to be positive, and there is a bit of momentum back in the broader markets, which I've been saying for the last couple of days.
Nimesh, what about stocks? What bars have you picked up?
So the first stock on my list, Rima, is JSPL. That's been buzzing in trade today among the metal names, and that's because there is a bit of buying interest back, and I understand one of the leading domestic mutual fund has been an active buyer. So that explains that JSPL is relatively outperforming in today's market. The second stock is Crompton Consumers. Now, we haven't spoken about this name for a long time now. Institutional investors have lost some bit of interest in this particular name because of the underperformance. But looks like ahead of the earnings, there seems to be a bit of momentum and a bit of institutional flows back in Crompton Consumer as well. The third name is Ion Exchange. Again, as I said, some bit of institutional buying seems to be flowing back into the small and mid-cap names. Ion Exchange stands out because I understand one of the leading AIF has been accumulating at current levels into Ion Exchange. And the last is Radico Khaitan. We've seen a bit of a correction in Radico Khaitan of late, but at these levels, some bit of consolidation happening. But also there is a buzz that maybe you'll hear some corporate development in Radico Khaitan very soon. The buzz is that maybe they'll hire somebody very senior at the top level. So that's something to do with the top rejig is the buzz as far as Radico Khaitan is concerned.
Okay. So that is Radico at this point in time. The others are also interesting. This JSPL, Crompton Consumer. Ion Exchange, of course, had a very large rally and then, of course, a decent sized correction as well. And then there is Radico, perhaps. There's a corporate development as well. Nimesh, you want to come in?
No, I just wanted to check with you, Prashant. What happened to PB Fintech? It's up 10%. Board meeting got cancelled. Acquisition seems to be off now. I don't know. I haven't heard or anybody explaining what happened. But anything that,
Yeah, no, it is. If you remember, Nimesh, when we put that story out, right? And I think you had sort of pointed Yash in the right direction with that lead that there perhaps is the plans to do an acquisition afoot. And we put that out. The company, of course, put that notice up for a board meet, for a fundraise, for a potential acquisition. Generally, the feedback was quite negative, right? And the next day, Nimesh, yesterday we put out information that the fundraise size could be anything upwards of 3,000 crores, could be between 3 to 4,000, 5,000 crores, but north of 3,000 crores for a decently large-sized acquisition in UK or Europe. I mean, it was generally the feedback was quite negative. I mean, if you read Suresh Ganpati, Nimesh of Macquarie, I mean, he put it out pretty bluntly. He's not the one to mince words. I think I have the thing with me here, but not very appreciative, saying India market is large enough, so why do you need to go outside? So yeah, it was just pushback, I think, Nimesh, across the board. And Yash has basically now put out just a follow-up saying that it's been put into abeyance. So wider consultation, etc. I think it's in cold storage now, Nimesh.
But Prashant, just to add to my feedback, I spoke to a couple of guys and the feedback is that yes, today there is a bit of a recovery, but I guess today's recovery is more to do with the short covering. Correct. But this will not go well, if there is some bit of pressure from institutional investors and back out a large plan, back out a large acquisition, it won't generally go down well from a long-term investor perspective. So again, a bit of feedback that I picked up from a couple of investors whom I spoke to.
Yeah. No, that's useful. It's one of those things, Nimesh, right? You can't, you do this, there's no way you can do something. You move ahead, that's wrong. But if you cancel, that's also, you're in a bit of a quandary. But I think I'll tell you this, Nimesh, right? Unlike other companies, and we've seen this with companies across the board, with many companies, they've announced something, there's been pushback and they've called off. But I think with PB, the founder, CEO, he's a ambitious guy, I think well respected, and he's done wonders for the company, right? From the word go. So, I mean, I think in this particular instance, it's not some shady company which tried to do something, which has a kind of dubious past and has tried to do something. There's pushback and they call it off. So I don't think this is one of those instances. Yeah. So we'll see. There are other issues with PB Fintech, which is distribution cost and insurance related, the commission costs, etc. Yeah. That is the reason why the stock corrected in the first place. And then, of course, I mean, this fundraising plans was the last 10%, which is getting reversed today. So yeah, I mean, that is that's my sense of looking at it. But thank you very much, Nimesh. And that's the chatter. Keep an eye out on some of the stocks that Nimesh put up. We'll take a quick commercial break here. We'll come back and we'll get you some buy today, sell tomorrow ideas on the other side with our technical experts.
Welcome back. Last leg of the markets. Mitesh is back with us. Mitesh, any interesting ideas that catch your attention?
Yeah. So I think Talent Power is closing at a fresh swing high. BTST here at the stop at 1404 for targets of 1440, and Prestige. That's another one which is trying to reverse. It gave a bounce back and then completed a pullback. But after today's low, it's bounced back nicely on the hourly chart. So BTST here with the stop at 1510 for targets of 1545.
Bandopadhyay is also joining in on the show. Sudeep, your thoughts on QSR? We've had multiple false starts. There hasn't been a durable recovery in QSR stocks. So every now and then you get these one-day spikes, which makes you believe that the worst may be behind, and it's an attractive opportunity. This time, once again, Devyani, Westlife, Sapphire, all higher in trade. What is your read?
I think this time it's a little different with the consolidation which has happened in the industry. Devyani is definitely becoming stronger, and the opportunity for it to scale up and provide much better return for the shareholders is real. Also, in case of restaurant brands, the acquisition by a new set of investors who have some experience in this space definitely should augur well going forward. So I'll be watching this space very carefully, and there is genuinely a scope for incremental earnings to accrue to these brands and these companies. Obviously, the market is definitely supportive of these companies at this stage.
Okay, so sorry, you're saying this time it's different for QSR stocks on account of the consolidation seen in the industry. But which is the stock you're betting on? I missed that.
Devyani is something which I'm definitely betting on. I think it's been a very good transaction as far as Devyani is concerned, and I definitely like the stock. I've been liking it for some time, and I like it more now.
Any other mid-cap earnings which catch your attention this time? So on the way up, you've got even a JSW Cement, IKS, Page Industries numbers look pretty good, came out a while back. Have you been buying anything in the mid and small cap universe?
Well, I think some of these earnings you talked about definitely look good, but post the India-US deal announcement, I have been focusing on chemical, specialty chemical, and agrochemical space. I believe that the good times for this industries should be here very soon. Look, most of these companies have significant exports to US, and the 50% tariff would have been a huge challenge. Now the tariff coming to 18% and China +1 remaining a valid argument. I think time has come for these companies to provide better returns. They were absolutely bombed out sector and companies. Performance also had been terrible, but things have started improving and green shoots are clearly visible. So an Aarti Industries does look good. UPL does look good after quite some time. And many other companies in this space do look good from a 1 year plus kind of a perspective.
Yeah. Thanks very much for that. Just coming back to you in just a bit, Sudeep. Take a quick commercial break here. We're going to come back with more. 9 minutes to go for market closing. It's not looking any better. About 0.5, 0.6% lower on the Nifty and the Sensex, respectively.
Fly Emirates, fly better.
Okay, welcome back. 4 minutes to go for close. Sudeep is with us. Sudeep, you know, the IT damage we've seen recently on top of the underperformance, anything looking interesting now?
Well, I'll be definitely cautious, Prashant. I think the AI challenge, which the Indian IT companies unfortunately face, is real. A lot of kind of restructuring, a lot of adjustments will be required for them to get back their mojo. And I've been maintaining this view for quite some time, and their margins will be under pressure, definitely, with AI bringing down margins. So I'll be careful. I will focus on the niche IT companies, which are catering to specific segments like travel and tourism, or a transition which is happening in the automobile industry from ICE to EV. So Tata Technologies, Persistent Technologies, Coforge, RateGain Technologies. These are the companies which I would rather focus on with a specific objective of an industry which is going by leaps and bounds, and they are the service providers to this industry. But the general IT service providers will have a challenge, and they need to adjust their models. I have confidence in our leading IT companies. I'm sure they will get back their mojo very soon, but I will wait and watch.
Any stocks?
Yeah, the stocks I was mentioning, Rima, is RateGain Technologies, Coforge, Persistent Technologies, Tata Technologies, with a very, very specific focus on a sector and catering to specific clients whose businesses itself are growing by leaps and bounds.
You know, Kotak came out with a note. They call it plenty of panic over a little flutter. And they're saying that the downside risks stem from unknown future breakthroughs and not current proven disruption. So they believe the sell-off was a bit overdone. The market reaction has been disproportionate to the actual near-term impact basis, even what's come out from Anthropic's Claude. But the index per se is more on the flattish side. Sudeep, HAL, that's one stock. We'll be chatting with the management very soon. What is your own view on it?
Look, I've always been very cautious on this stock. There is no problem in their order book. So yes, what was announced yesterday, they have not been shortlisted, was a disappointment, and the stock corrected. But I don't think order book is a challenge. Execution has been a challenge for quite some time. And I'm pretty confident that if they can execute well on their orders, I think the company will provide handsome returns to the shareholders. Now, the question is, are they there to really deliver performance? That's what we'll have to watch. As far as the new orders are concerned, an L&T consortium or a Tata Technologies consortium or a Bharat Forge consortium getting probably is good. And probably even good from a Hindustan Aeronautics point of view also, because too much of order getting accumulated at their end and they not being able to manage would have, created problems for the company. So I'm actually, in a way, positive on the company post yesterday's news flow.
Okay. Sudeep, thank you very much for joining us. I think we're about a minute away from market closing. Thank you for being with us here as always. And speak with you soon again. By the way, just to wrap out things here and where we finally ended at, it is losses and Nifty down, the Nifty Bank under pressure, small cap index down 1, mid cap index slightly sideways as well. Defense saw some losses and HAL management coming up in a bit. Small cap index was down, as I said. The capital market space was down as well. PSU banks, perhaps the only large sectoral index which was up in the green in terms of what was up. Hindalco, Eternal, Bharti, BEL are the top Nifty losers, and Trent and Max Health and Tata Steel are the top Nifty gainers right now. Lots of action in terms of single stocks. QSR is a theme. Policy Bazaar, there was that story, and so on and so forth. So that is the market close which is coming through, and it's slightly disappointing because we didn't have follow through. I mean, the follow through fizzled out on day 1, day 2 was weak, and day 3 actually we end in terms of with losses today. It's a wrap on closing, but don't go anywhere. The HAL management comes up on the other side in just a bit. Welcome back. I think the big story from the defense space, which I think has kept everyone busy and focused, is the fact that Hindustan Aeronautics has been in the news, and it is out of the race for the prestigious 5th generation fighter aircraft project. Dr. Sunil is the chairman and managing director at HAL. He's joining us now to talk about this and more. So thank you very much for your time here on CNBC TV 18. Good afternoon, Prashant this side. I mean, you know, first I want you to talk about this particular news development. How do you read it? You know, the worry from an investor standpoint is that it kind of sort of signals the end of HAL's monopoly in fighter development. So if you can answer that, sir.
Yeah, thank you for having me on the show. Let me just start out with a disclaimer that yeah.
Go on, sir. We can hear you clearly.
Yeah. See, let me start with a disclaimer. This news about HAL being out of the AMCA race is what we are hearing on the, seeing in the newspapers. So let me, at the outset, say that we don't have anything in writing that we are out of the race. So that's a disclaimer I would like to make up front. Notwithstanding that, you see the AMCA contract that is right now, which has been which was a RFI, was for prototyping, building 5 prototypes. So this contract is essentially 15,000 crore for the design and development, and is for building 5 prototypes. So eventually, once the prototypes are done and the aircraft is certified, it will come up for production again. And again, it will be an open competition. So I'm sure that even in the worst case that we are not in the race for building the prototype, we will definitely be in the race for building the aircraft during the production phase, because we have the plants, we have the capability, and at that point of time, we will also pitch in. So I don't think this has perhaps been a misreading that we will not be in the AMCA. The way I see it is, this comes into production 10 years down the line, 2035. So even in our revenue plan, today the AMCA doesn't figure, because we know that this comes up into production in 2035. So I think this is a misreading. Even in the worst case, we get prototypes.
Yeah,
we will definitely be.
We get that. Even if the worst were to be true, I just have 2 questions. Are you saying, you said that you've not received anything in writing, sir, from the government suggesting that, well, you're not part of it. But do you have a sense that that is correct? I mean, the news itself is not wrong, or you will wait for it. It's still possible. I mean, this entire thing may actually be wrong. Is that what you're saying?
Yeah, I don't know, because, you know, all our sources say that this is still not final. So perhaps this is speculation, I don't know. So that's why I would be cautious to say that unless we see it in writing, it would be premature for us to comment.
Okay, and we'll wait for that. Just one more question on this particular thing.
Yeah.
If this is true, as you called it, the worst case, sir, how would you read it? I mean, it's an extremely sensitive area. HAL is the sort of dominant monopoly here. If HAL is out of the race, I mean, and you're absolutely right. No one has factored in revenues from this order for in terms of ordering, etc., for HAL. But it's not about counting the revenues on this one now, but basically it's just sort of a bit of a fear that maybe the government prefers private sector players in a sector like this, in an extremely sensitive area where HAL had monopoly. So how would you read that?
No, I think the government's intent is clear. They would like to have a more robust, competitive kind of sector. So I don't find anything wrong in that. So if you look at it, the Tatas are producing the C295 and many other tie-ups are happening to produce helicopters and other aircraft. So I think that's going to happen. We are going to have competition, and there will be more players in the defense and civil aircraft sector. So I think that's something that is going to happen over a period of time. So if you look at HAL's strength today, I think we have the unique capability that we can build our own products. We build our own helicopters, we build the aircraft. You have seen the HTT, the LCA, the helicopters, the LUH, the Prachand. So I think we are uniquely placed that we have a very strong R&D and we are producing our own aircraft. So when we look at our revenues over the next 10 years, they are coming from our own in-house designed aircraft, and we have huge orders for that. Our order book is very, very solid order book that we have, which we will execute over the next 7 to 8 years. So in our year-on-year growth or projections or performance, it is really not going to make any difference, because this, even if it kicks in, the AMCA kicks in only after 2035. So HAL, I don't think we are really worried about competition. We have inherent strengths in our production and our design. So I would say our revenues are quite solid, and the future is very good with our R&D and the projects that we are designing. We are working on a deck-based helicopter now, which will, we are in certification, we will come out in 27. We have the Dhruv NG, which is a civil variant of the Dhruv, which we have now got an order of 10 numbers from Pawan Hans Limited. They will be deploying it for ONGC in the for the offshore transport, and that will be a new area for us of civil helicopters, which we see a growth area. Similarly, we have our Hindustan 228, which is a civil certified 18-seater, which we are seeing good traction. And as you know, recently we have tied up with UAC of Russia, and we have a MOU for producing the SJ-100, the 100-seater civil commuter aircraft. So we have the military part today, which is dominant, but we plan that in the next 10 years, the civil component of the aircraft is going to be a significant part of our portfolio. About 25% is the target. So we have these 3 platforms which we will be building, which will be for the civilian sector. And we have so many exciting new products which are already in design. The light utility helicopter, the utility helicopter maritime.
Yes.
And so I don't think the pipeline is an issue.
No, indeed. And I remember at Wings India 2026, you also spoke about how you plan to increase the share of civil aviation to 25% in the next decade from the current 5%. We'll get to that. But just coming back to this AMCA, reports say the reason for the disqualification is that your order book is more than 3 times that of sales. Is that a signal to you that you need to execute faster, speed up your execution? It's sort of penalizing you for sitting on such a large order book. And if that is the case, sir, you stand to risk other big orders in the future.
No, if you see the...
Go ahead, sir.
If you see the order book that we have, the Prachand starts deliveries in 27. So we are on the LCA also, we have already built the aircraft. So I think this, this narrative of HAL delaying is not correct. All our projects we have delivered, whether it's the Dornier or the Sukhoi or the helicopters. In the peculiar case of LCA, because of this lack of engines, we are having an issue. Otherwise, this narrative that HAL is delaying projects is not correct. Secondly, if you look at the particular RFI, there was a condition that if you had an order book more than 3x of your turnover, you would get 0 points, which we felt was quite unfair, that for a project of this kind of magnitude, it obviously means that a company with a better order book and better financials will be able to do it, it is more competent to do it. However, that was one of the conditions where we would perhaps have not got marks. So I would not speculate as to what are the reasons, if at all, if we are out. But I am really not so worried because, as I said,
so if at all, sir, you're out.
Revenue calculation.
Sir, if at all you are out, would you look to challenge the decision?
No, I think let us see when it comes out because there has been a committee of DRDO which has evaluated. So let's perhaps we will take a call. But as I said, we are not really disturbed as far as our revenues are concerned.
Okay.
Now, sir, the private sector with global tie-ups, right, is building capabilities. Do you think, and I mean, I'm sure it's already the case as you hinted at it, the government will look at the pace of execution before it starts, before it hands out orders. Will you kind of, focus on executing faster internally? I mean, as you said, the narrative perhaps may be wrong. The LCA thing is because of the engines, but overall, in terms of delivery, timelines, etc., will the focus be on execution? Because order book is not a problem at all.
I can assure you that the focus is on execution. For example, we were to produce, we produced 16 engines last year. The Sukhoi engines, we produced 16 last year. This year, we have ramped up, we are producing 34. Right? Last year, we didn't have any helicopters because of the unfortunate grounding. This year, we are making 19 helicopters. So execution is not an issue. We are producing. Today, I can tell you, as of now, I have 5 LCAs flying with engines ready, and there are 9 which are already produced and tested and ready, 14 aircraft on the tarmac today. And by the end of the year, we will do 24. So I will not have the engines, but the aircraft will be ready. So there is this narrative that execution is not happening is not correct. We are building the aircraft. You can please come to our factory. We will show you those. By March end, we will have these 24 aircraft lined up with 5 with engines and the balance waiting for engines. I have interacted with GE recently when I went to their plant, and they have now, I think, fixed a lot of problems, and the guidance is that in the second half of the year, we will get good deliveries of engines.
Dr. Sunil, we certainly want you to do all of that and more. I mean, HAL, of course, occupies a place of pride as far as local manufacturing of aircrafts is concerned, and wishing you all the best at HAL, your team, and of course colleagues, etc., as you do it. Thank you very much for joining us, sir, with that clarity. Very useful, and we hope to speak with you again soon.
Thank you.
Thank you. Okay, we'll take a quick commercial break here. Don't go anywhere. We'll sort of wrap up and do a quick, punchy markets forward in the 15 minutes on the other side.
Markets snap a three-day winning streak with the Nifty slipping below 25,700. The Sensex and Nifty both fall over 0.5%. The benchmark indices underperform.
The sell-off in Hindustan Aeronautics continues. The company's chairman says they don't have anything in writing to suggest HAL is out of the 5th-generation fighter jet project. Adds even in the worst-case scenario, HAL will be involved in manufacturing the aircraft.
PB Fintech shares surge after the company calls off today's board meeting that was scheduled to consider a QIP fundraise. The stock had fallen more than 12% in the past 3 sessions amid concerns around the proposed acquisition and fundraise. Hello and welcome to Markets Forward. What a day of trading it's been. The market snapping their 3-day gains today, ending in the red. The Nifty with cuts of about 133 points and the Sensex with cuts of more than 500 points is where we ended the day. The jitters, from the IT pack continuing over the last 2 days. And that was the story of the day today as well. Of course, tomorrow as we start the day, there will be other cues to look at.
There will be other cues. And like you mentioned, the MPC policy is something you track very closely. That particular outcome is also expected. You spoke about the benchmark indices, but the pain actually lay even in the broader end of the markets. The mid-cap and small-cap space also seeing significant cuts. The small-cap index down over 1%, 1.4% to be precise, and the advanced decline ratio was quite muted in favor of the declines. A whole host of stocks, in fact, the IT pack continued to see some amount of selling pressure in the second half of the trading session after the sharp decline it witnessed yesterday, and individual stocks on the back of news flow as well as results continue to see significant and volatile trading moves on names like a PB Fintech, for instance.
With the update coming in on their board meeting for the QIP getting cancelled. So stocks reacting to specific news that's been coming in. The likes of Trent, Tata Steel, JSW, ONGC were some of the top gainers, despite how the market has been. And of course, on the downside, Hindalco, Eternal, BEL, SBI Life, all of them. But we're now joined by Sudeep Bandyopadhyay of IndiTrade Capital and Richard Jain of Motilal Oswal Financial Services to give us a sense of the day that's been and what to watch out for. Sudeep, starting with you, we're going into Friday with the monetary policy. What is your base case expectation? What is the market going in with? And what do you think they'd want to hear from the governor?
Well, definitely market wants to hear a little bit of easing, but I'm not sure whether that's going to come at this stage. So I won't be surprised if there's a bit of a disappointment from the market's point of view post the policy announcement if the 25 basis point cut, which some of us in the market are factoring in, doesn't get actualized. So I'll be very cautious for tomorrow's trading, and we'll wait and watch. However, having said that, I think there is no genuine reason to be too perturbed with RBI policy at this stage. The other macroeconomic factors are perfectly in place. And we had the India-US trade deal announcement, which has taken a lot of pressure off from the market. So by and large, half of the corporate results are out. Other half should be coming soon. And we are doing reasonably well compared to the expectations. So I would expect positive bias to remain in the market going forward. A little bit of correction here and there once in a while is absolutely par for the course.
Well, thank you so much, Sudeep, for that. Well, earnings season, more than halfway, we are past the halfway mark, and not a very bad season, like you mentioned. But Richard Jain of Motilal also joins us. Richard, are you a little worried that the sharp gap up we saw post the trade deal announcement hasn't seen further buying? In fact, we're off quite significantly from those highs, mainly led lower by the IT pack. So where do you see the Nifty headed from here on, and where are the supports and resistances?
Generally, whenever we see such huge gaps, then those gaps tend to act as a support on any retracements. So I think the good thing is that before the event itself, the broader markets have already seen decent pain from the highs. So I think on lower side, 25,400 to 25,500 should be seen as a good support now. So we do not expect any significant price-wise correction now to happen anytime soon. There may be some consolidation in the near term because of the pressure that we are seeing in certain heavyweights such as IT. But 25,400 to 500 would be seen as a good support, and any dip towards that zone should be used as a buying opportunity.
Richard, any view on HAL? I mean, the sell-off continues, and now we just had the management telling us that they don't really have anything in writing to suggest that they're out of the 5th generation fighter jet project. What are your near-term targets here? Is that something that you'd be looking at?
The kind of selling pressure that the stock has seen in last 3-4 days has been supported by very good volumes. And generally, whenever we see volume-based selling happening, the stocks can see some underperformance over short to medium term. So on the lower side, major support for the stock is placed around 37.50. So we could see some more correction, price-wise correction in the coming days in HL. But that's for sure that until there is any such clarity on this news, I don't think there would be further buying interest which would come in very soon in HL. So some short-term underperformance can be expected.
Well, thank you so much, Ruchit, as well as Sudeep for joining us. It's a short market check that we've done in this edition of Market Forward. With that, it's a wrap on this edition of Market Forward. We will be back with more news and updates on the other side.
Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty snap a 3-day winning streak. Nifty ends below 25,700. Broader markets fare mildly better. ID stocks extend losses. Rupee gains 8 paisa against the dollar. Global markets tread with caution as tech stocks remain under pressure. Silver prices plunged 13% after a short-lived rebound. Cryptocurrencies crash, with Bitcoin dropping to its lowest level in 14 months. Commerce Minister Piyush Goyal says the first tranche of its trade deal with the United States may be inked by mid-March, adds that the tariff reduction would come into effect once a joint statement is signed in the next 5 days. Also clarifies that India would be looking at a potential to procure American goods worth $500 billion over 5 years. This includes the Boeing deal as well. 90% of market participants expect the RBI to hold rates steady in the monetary policy tomorrow. 30% expect just one 25 basis points rate cut in this calendar year. Policy Bazaar's parent PB Fintech cancels a board meet to discuss potential fundraise. Sources say the company has put acquisition plays in abeyance after concerns and feedback from shareholders. The sell-off in Hindustan Aeronautics shares continue. Company's chairman says they don't have anything in writing to suggest HAL is out of the 5th generation fighter jet project. Adds even in the worst case scenario, HAL will be involved in manufacturing the aircraft. Indigo shares decline after competition watchdog launches a detailed probe on mass cancellations of flights. The airline loses 4% market share in December last year due to the disruptions, but Indigo remains the largest airline in India with nearly 60% market share. The 16th Finance Commission report lays bare a pitched battle between states and the central government on sharing tax revenue. States seek higher share in central taxes and call for the inclusion of cess and surcharges in the divisible pool. Central government rejects the demand, says the view on cess and surcharge is settled, adding even the current devolution is not fiscally sustainable. Lok Sabha passes the motion of thanks on the President's address without the Prime Minister's customary reply amid opposition protest. This is the first such instance since 2004. The opposition walks out of Rajya Sabha after Leader of Opposition Kharge not being allowed to quote from an unpublished memoir of former Army Chief Naravne. US President Donald Trump and Chinese leader Xi Jinping hold a phone conversation. Trump claims it was an excellent, long and thorough call, highlights Taiwan, Iran, Russia, Ukraine war among talking points. Beijing claims that President Xi pressed on Taiwan as the most important issue in China-US relations. All right, let's start with the day's market action. The Wall Street snapped its 3-day winning streak. Nifty and Sensex ended over 0.5% lower, with Nifty closing below the 25,700 mark. The broader markets fare mildly better than the blue chips. Prashant Nair is here with the day's trading action. Prashant.
Today, I mean, the market in a way is slightly rolling over, right? I mean, 140 odd points down on the Nifty by close. It's news flow has all been positive, but the fact is the global screen has been a little poor as well. Nasdaq is down about 3% in the last 2 sessions. Asian markets, which have had a blistering run in 26 so far, they've been on the back foot. So I think that perhaps also weighing in on the sentiment more than anything else. It's not as if India and the market here participated any which way this year, or of course last year as well. I'll just take a quick look at indices and where they kind of sort of ended. So defense saw some profit booking, down about 2.25%. HAL, of course, is a story that we followed through the day. Capital market stocks were down about 1.3%, and the small cap index was down about 1.3 as well. On the upside, the PSU Bank Index, of course, the winner last year, about 0.33% higher once again today. Now, the Nifty 50 stocks coming through, and I'll start with a few losers. Hindalco down about 3%, Eternal down about 2.5%, and Bharti, which was down about 1.8% or so. And if you look at the gainers, Trent, sharp recovery from the lows, was up 4 yesterday, 3 today. And of course, it's lost quite a bit, and big loser last year. Max Health was up about 1.25%, and there was a Tata Steel, which was higher by about 1.25%.
Right. Thank you, Prashant, for that. Global markets remain cautious as well after a sharp AI-led sell-off. Anthropic's new automation tool has rattled IT and software stocks. It raised fears that AI could replace not just support, core outsourcing and software models. The shock triggered steep overnight losses in US tech, with pressure being seen across Europe and Asia. Tech giant Alphabet beat Q4 estimates, but unsettled investors with heavy capex guidance. The firm has projected a $175 to $185 billion in spending for 2026. This is more than double of last year. The stock fell over 3%. Big tech is now expected to collectively spend over $500 billion on AI alone this year. Let's talk about silver now. Silver prices plunged after the recent rebound. Bitcoin has dropped to a 14-month low. Manisha Gupta is here with more.
Well, the volatility refuses to die down when it comes to metals and crypto, and every uptick is getting sold into, at least when it comes to silver prices therein. So what we are looking at is a $70 to $90 per ounce of a range, a $20 of a range that silver almost seems to be trading in on a daily basis right now. So when you look at the last 1 week, we've seen 30% of a decline come in for the silver prices. From its all-time highs of $121 an ounce, we've seen nearly 45% of a decline come into the markets therein. Well, silver prices even now are 13% higher for 2026, but most brokerages will tell you that it really is going to be about $65 to $95 an ounce of a range that silver prices can trade most of the February going forward. It is crypto which really seems to be looking at no stoppages or no support levels right now. We're looking at the overall market cap continuing to decline as well. At one point in time in 2025, the peak was $4.4 trillion. The overall crypto market cap right now stands at $2.4 trillion, almost half of where it has been in its peak in last year. Bitcoin, in the meanwhile, is trading at around 15-month lows right now. We have seen 72,000 breach on the lower side as well. Bitcoin, remember, hit an all-time high of 126,000. This was on 2nd of November. From there, we're trading at 71,000 right now. So a sharp decline coming in for this one as well. If you look at the last 1 week itself, whether it has been about Bitcoin, which is down by 15%, Solana, Cardano, Ripple, you have Binance, all of these crypto declining anywhere between 20 to 30% as well. On an YTD basis, all of these cryptos also are trading in the negative. Bitcoin is down 18% for the year, with markets anticipating that if 70,000 of a level breaks, then you're looking at lower lows coming in for this one, at least for the near term.
All right. Thank you, Manisha, for that update. Shifting focus now. Commerce Minister Piyush Goyal has laid out a timeline on the much-awaited India-US trade deal. Now, addressing a press conference post the signing of terms of reference for the Gulf Council FTA, Goyal said that a joint statement will be issued in the next 4 to 5 days, and an executive order from the president formalizing the India tariff reduction should follow. He added that the formal agreement will be signed by mid-March.
पहला ट्रांच बायलैटरल ट्रेड एग्रीमेंट का लगभग तैयार हो गया है। हमारी उम्मीद है कि अगले 4-5 दिन में हम एक जॉइंट स्टेटमेंट यूनाइटेड स्टेट्स ऑफ अमेरिका और भारत के बीच में फाइनलाइज करके साइन कर देंगे। फॉर्मल एग्रीमेंट को मिड मार्च तक साइन करने का अंदाजा है, लेकिन 18% जो यूएस टैरिफ्स घटने हैं वो जॉइंट स्टेटमेंट अनाउंस होने के बाद एग्जीक्यूटिव ऑर्डर द्वारा यूनाइटेड स्टेट्स ऑफ अमेरिका कर देगा। When we estimated what we will need from the USA, we came to a figure of at least $500 billion. We can clearly see before our eyes as potential that we can procure from the United States of America over the next 5 years. Our aircraft demand alone, orders placed on Boeing and yet to be placed but ready, are nearly $70-80 billion. If you add the engines and other spare parts, it will probably cross $100 billion. Just aircrafts alone.
The External Affairs Ministry says energy security is the supreme priority of the government. This was in response to President Trump's post on the trade deal earlier this week, where he had claimed that India may stop buying Russian oil and instead source crude from Venezuela and the United States. Now, External Affairs Ministry spokesperson Randhir Jaiswal said India is open to exploring new crude supply chains, including Venezuela.
Insofar as India's energy security or energy sourcing is concerned, the government has stated publicly on several occasions, including me here, that ensuring the energy security of 1.4 billion Indians is the supreme priority of the government. Diversifying our energy sourcing in keeping with objective market conditions and evolving international dynamics is at the core of our strategy to ensure this. All of India's decisions are taken and will be taken with this in mind.
Now, shares of defence major Hindustan Aeronautics dropped over 4% in trade. The sell-off continues after reports suggested the company is out of the race to develop a fifth-generation fighter jet. Speaking exclusively to CNBC TV 18, company's chairman D.K. Sunil said they don't have anything in writing to suggest HAL is out of the fifth-generation fighter jet project. He added that even in the worst-case scenario, HAL will be involved in manufacturing the aircraft, if not design it.
This news about HAL being out of the AMCA race is what we are hearing on the, seeing in the newspapers. So let me at the outset say that we don't have anything in writing that we are out of the race. So that's a disclaimer I would like to make upfront. This comes into production 10 years down the line, 2035. So even in our revenue plan, today the AMCA doesn't figure because we know that this comes up into production in 2035.
Now, shares of PB Fintech rose sharply after the company cancelled a board meeting that was scheduled to consider a fundraise. The company did not disclose the reason for cancelling the meeting. However, sources say that this will now put the company's acquisition plans in abeyance after concerns and feedback from shareholders. Indigo shares decline in trade after the competition watchdog launched a detailed probe on mass cancellations of flights. Now, more than 9 lakh passengers were affected after thousands of flights were cancelled in early December. Indigo's market share also dropped by 4% in December. However, it remains the largest airline in India with nearly 60% market share. Now, the 16th Finance Commission lays bare a pitched battle between states and the central government on sharing tax revenue. States sought higher share in central taxes and call for the inclusion of cess and surcharges in the divisible pool. Central government rejected the demands and went on to say even the current devolution is not fiscally sustainable. As things stand, 28 state governments get a 41% share in central tax revenue. Sapna Das is here with more on the Finance Commission report and its implications. Sapna, please take us through the key highlights.
Well, 18 out of the 28 states, or close to 2/3 of the states, had sought a 50% share in the centre's tax kitty, while still others had asked for a 41 to a 48% share of the central taxes. While 2 of the states had sought a 48 to 50% tax devolution, however, inclusive of the centre's cess and surcharge collections. Now, this particular demand stems from a constant claim by the state governments that the divisible pool or the resources available for sharing with the states are shrinking, because the centre's cess and surcharge collections have been increasing and these are not shareable with the state governments. This takes us to the next ask of the states from the Finance Commission, which is to include the centre's cess and surcharge collections in the divisible pool or compensate the states by increasing the vertical devolution. In fact, some states like Madhya Pradesh have even suggested to make it mandatory for the central government to seek the ratification of at least 50% of the states before the introduction of any new cess or even continuation of the existing ones. Not just this, some states have even pitched for a share of centre's non-tax revenues like money earned from the sale of spectrum, offshore oil, even CPSE dividends and proceeds from asset monetization. The last ask from the states, but probably the most crucial, is greater fiscal flexibility under the centrally sponsored schemes. The state governments also want a higher contribution from the centre in the CSS and have sought rationalisation and consolidation of the schemes. The centre, of course, has been very clear in its response to state demands. It has said even the current level of devolution is fiscally not sustainable. In fact, the actual sharing of resources with states works out to as high as 49% of the centre's gross revenue. The centre has also said its non-debt resources have been declining over the years. Plus, it is contrary to the constitution to include cess and surcharge inside the divisional pool. Finally, in the centre's view, the cess matter is a settled one and the debate on this should end.
Right, thank you Sapna for that. On that note, time for a short break. Coming up next, Lok Sabha passes the motion of thanks on the President's address. Opposition walks out of Rajya Sabha after Leader of Opposition Kharge not being allowed to quote from an unpublished memoir of former Army Chief Naravne. More details when we return. Welcome back. The Lok Sabha passed the motion of thanks on the President's address without the Prime Minister's address for the first time since 2004. Lok Sabha proceedings were marred by multiple forced adjournments throughout the week. At the core of it was opposition leader Rahul Gandhi not being allowed to read an excerpt on the Galwan Valley clashes from former Army Chief Naravne's unpublished memoir. The Prime Minister's Lok Sabha address was cancelled at the 11th hour yesterday. The opposition staged a walkout from the Rajya Sabha today. This after Leader of Opposition Kharge was not allowed to quote from the former Army Chief's unpublished memo.
I'm sorry, but the Prime Minister is now hiding behind the Speaker. They are making the Speaker say all this. Because yesterday he did not have the guts to come in the House. What? Because 3 women were standing in front of his bench? What nonsense is this?
उस आदमी को खादी के प्रति, स्वदेशी के प्रति, अपने कांग्रेस पार्टी के प्रति कोई सम्मान नहीं है, तो वो पार्लियामेंट के प्रति उसको क्या सम्मान होगा? इसलिए पार्लियामेंट को बंधक बना लिया और मुझे लगता है कि इससे बड़ा दुर्भाग्यपूर्ण इतिहास कांग्रेस का न कभी होगा न कभी हो सकता.
The massive traffic jam on the Pune-Mumbai Expressway has finally ended after commuters were stranded on the road for over 30 hours. This after a tanker carrying highly inflammable gas overturned on a slope. The state government said that quick response vehicles and ambulances were rushed to the spot. The government added that toll-free entries and exits were opened and central barriers between the two carriageways were removed. FMCG giants are betting big on wellness brands, with Marico picking up majority stake in Cosmix. Now, as health-focused consumption gathers pace, legacy companies are stepping up their acquisitions to get a bigger piece of the wellness pie. Shilpa Ranipeta joins us now with more. Shilpa, what are you picking up?
Well, the 60% stake in Cosmix values the company at about 375 crore rupees. Now, Cosmix is a digital-first functional wellness brand that makes plant-based protein powders, functional superfood blends, and more. And the brand has scaled to an ARR of about 100 crore rupees with a high-teen EBITDA margin profile. Now, Marico has also the option to acquire Cosmix's remaining 40% stake by FY29. Now, remember, this move is in line with Marico's strategy to scale emerging consumer brands in the health and wellness space, as seen with its earlier bets as well. A 60% stake in plant-based nutrition brand Plix in 2023 and a 54% stake in True Elements, which makes clean label snacks and breakfasts, in 2022. Now, what's clear here is that India's large FMCG companies are making a decisive push into the protein and functional nutrition space as demand for everyday health-focused foods and supplements has been accelerating. Now, look at what the moves have been over the past couple of years. Legacy players have increasingly chosen acquisitions and strategic stakes over building brands from scratch. Most recently, in 2024, Zydus Wellness acquired Right Bite Max Protein for about 390 crore rupees, and that helped strengthen its presence in the protein bars and snack space. ITC acquired Yoga Bar in 2023, and it has also been increasingly highlighting the protein content across its various product portfolio, especially in staples, including in atta. HUL made this bet much earlier, and for it, the strategy was focused targeted bets in the high-growth nutrition formats. As early as 2022, it picked up a controlling stake in Oziva, which makes plant-based supplements, protein powders, and more. It also picked up nearly 20% in well-being nutrition. Now, Imami too invested in True Native, which makes high-performance nutrition and protein blends, and that was in 2022. Meanwhile, some companies have chosen the organic route. Take Amul, for instance, which disrupted the everyday high-protein space with an entire range that spans protein powders, buttermilk, dahi to even ice creams. Tata Consumer Products also forayed into this space in 2022 with GoFit, but this has seen limited expansion and limited success so far. Now, industry executives point to convergence of trends that is driving this protein rush: rising fitness awareness, higher disposable incomes, urban consumers actively tracking their protein intake, and growing acceptance of functional foods beyond athletes and bodybuilders. And so, as India's health conversion and the conversation shifts from cure to prevention, protein and functional nutrition are moving from being niche categories to mass market FMCG shelves. Back to you.
Right. Thank you, Shilpa, for that. Pakistan's Prime Minister Shehbaz Sharif has confirmed that the Pakistan cricket team will boycott its match against India at the upcoming ICC Men's T20 World Cup. Sharif said the move was a show of solidarity with the Bangladesh team, which was ousted from the competition after the refusal to travel to India. The T20 World Cup begins on February 7th. And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC TV 18. Thank you for watching.
Welcome back to the Citizens Monetary Policy Committee discussions. We did have our discussion on Monday, but the massive US-India trade deal came on Tuesday morning or Monday night, and that's game-changing. The rupee itself went up by about 1.7% this week. And since our MPC members are top-rung economists, I thought we should ask them if the trade deal completely changes the ground for the Reserve Bank and for the Monetary Policy Committee. Let me welcome our members, Sonal Verma of Nomura, Sajid Chenoy of JP Morgan, Samiran Chakrabarti of Citi, Shaumika Ghosh of State Bank, and the chairman of the Citizens MPC, Dr. Pranab Sen. Gentlemen, and Sonal, I'm deeply grateful that you all have agreed to come again and oblige me. Let me start with the lady. Sonal, now that the deal is signed, two top things that changed for the Reserve Bank.
Things change actually significantly and much for the better for the RBI. I would say there are mainly three ways things change. One is with this deal in place, it does add some upside risk to FY27 GDP growth projection. I think the biggest positive will be in terms of sentiment and flows into India, but also less trade policy uncertainty, improved exports. So there is some upside on growth. Second, this should actually enable better policy transmission, because in the last few months, managing FX and rates has essentially, undone some of the policy transmission. So with an improvement in flows, better liquidity, this should enable policy transmission going forward. And third, inflation in India, of course, was already quite benign, but to the extent that we do not see further currency weakness, any upside risk to inflation from weaker currency should also be offset. So it does make the growth inflation dynamic much better and enable better policy transmission for RBI going forward.
Okay, that sounds like even more Goldilocks, Sonal. Let me get on the budget. Samiran, do you think the change for RBI in terms of managing this 17.2 lakh crore borrowing program gets any easier because of the trade deal and likely dollar flows, or is that still going to be a big point in the upcoming MPC?
I think I'll just extend the point that Sonal was making. I think the debate is between how much MPC will focus on being slightly hawkish because of the higher growth expectation versus how much dovish they can become now that there is less pressure on the currency and there is going to be better transmission of any future rate cuts. And that's where our bias is towards the latter, where we think that the MPC could turn a bit more dovish now compared to where they would have been if the deal was not in place. So from that perspective, the challenge for the bond market is twofold. One is that dovishness might, in the policy rate direction, might help the bond market. But on the other hand, these flows that are coming in would imply that RBI will have to do less amount of OMO, which is a negative for the bond market. So it will be a bit of a tussle on the policy day for RBI to balance this, that to what extent they are going to guide on the rate front versus to what extent they can still continue to signal a large amount of OMO. I think that's where the big debate is going to be, that can RBI on February 6th again announce a massive amount of OMO, or would they be now somewhat more, I would say, cautious in their announcements?
Okay, you suspect they may not announce such a big OMO. Actually, I'll come back to you, come back to the others on this, because after the budget, Samiran, I remember you telling me that it's not that 17.2 lakh crore, it is just that the demand side is very weak at this point in time. As you point out, let's discuss that later. But I'm even more worried about not just US trade deal. The thing that has changed this week, Sajid, is the global backdrop. I mean, the swings we have seen in dollar itself, in commodities, and now in the AI stocks, or even the next rung of IT stocks. It's volatile, I won't say chaotic, but volatile global scene. How does that impinge on the MPC?
Absolutely, Lata. Good morning. I think, even though the trade deal is very constructive for India's outlook, we must be very mindful that the global backdrop remains very precarious. I think there are at least two tensions that the global backdrop is seeing. The first is that, for the longest time, we've seen the threats on US exceptionism, and that's caused the dollar to weaken. And because of that, commodity prices have actually gone up because there's this inverse correlation between the dollar and commodities, which then also stokes inflation pressures in some economies. But what we've seen over the last week is the fact that underlying growth in the US, and in fact in large parts of the world, remain very resilient. And I think that's the tension, that US growth is holding up very nicely. Chairman Walsh, who was appointed by President Trump, is much more mainstream than was feared. And with this growth inflation, and inflation in the US is sticky, there is a growing belief that the 50 basis points of rate cuts that markets have priced in for the Fed will not happen in 2026. And so the longer that belief continues, the more the pressure on the dollar to regain some of its losses. And that's what we've seen in the last week, that the dollar has begun to rebound. And if that process continues, that will put more pressure on emerging market currencies. So we're not out of the woods just as yet. The second tension, as I mentioned, is the AI tension. Yes, technology is doing very well in December and Jan. Tech exports are still doing well. CapEx is doing well. But there is now a growing belief every month that has this rally been overdone? Are we approaching bubble territory? And as 2026 goes on, those questions will only get more acute. So I think we have to be mindful here that the global backdrop is very precarious. If those Fed rate cuts get priced out and the dollar were to strengthen, that will put more pressure on emerging market currencies. Conversely, if the dollar were to continue weakening, then commodity prices go up, and that creates pipeline inflation pressure. So, there is no free lunch here.
Oh, yes. I'll ask you about the Asian inflation or disinflation in a bit. Soumyakant Ghosh, I wanted your view on the currency. When we spoke on Monday, we were worrying whether it come to a point where the Reserve Bank has to announce even some NRI bonds or resurgent India bonds. Now, what is the view? Will RBI actually move to stop appreciation? This is not an MPC question; it's an RBI question. Do you think they will have to stop appreciation? Will it come to that?
No, thank you, Lata. I think the larger debate is that the US trade deal is very positive from the currency perspective. But I would just like to add one thing, that we have to be cautious enough, because the things actually globally has not changed anything fundamentally in the last 2 days, or not it is going to change in the next month or so. The global debt levels become precarious. The movements in US dollar could be sideways. It could either appreciate or it could depreciate. And we have seen in the past that the rupee actually has been depreciating along with the dollar, which has been never happened. And while this news of US trade deal has actually created a positive sentiment in the market in terms of a rupee appreciation, but I think that given the precarious uncertainties, globally, the uncertain nature of the dollar movement, and also of the capital inflows, I think the central bank will get a very well-meant reprieve in terms of not thinking about the liquidity, that impossible trinity at this point of time. But my sense is that we have to be cautious, because the volatility in the market is not yet done yet. So if your specific question that the RBI should actually stop appreciating, I think the time has not come. Okay. Maybe the central bank could look through the data in the meanwhile and then take decisions accordingly.
I take your point. It's too early, but there is that expectation in the market whether Reserve Bank should stop appreciation. That changes the arithmetic even for how much currency, how much reserves are available in the system, the liquidity in the system. Dr. Sen, if you can bring all this together, sir, for the MPC member, post this deal, do the growth inflation dynamics become easier to manage? You would be less worried as a central banker.
Not necessarily, Lata. Let me just try. One thing that we seem to be not putting enough focus on, as far as the trade deal is concerned, is we've talked a fair amount about what it means about our exports. But there's going to be a huge amount of rejigging of our import.
Yes.
On the import side.
Yes.
Now, that is going to have monetary consequences. We don't know how large or how strong this is going to be, but given the fact that we've been running a large trade surplus vis-a-vis the US, what this is going to mean in its essence is we're going to have to import a lot more from the US. And that means that we will be diversifying our basket of imports across the world. Now, this has consequences not just for the Indian economy, it has consequences for an already uncertain global economy. And that becomes problematic.
Yeah.
So as far as uncertainties are concerned, one major source of uncertainty is gone, which is what we had talked about the last time we met. But the uncertainty is still very much there, simply because now you're going to see us changing the way we trade with the rest of the world. Now, this is something that one has to be a little careful about.
I take your
And
points.
in the context, one has to keep in mind the movement that was happening towards moving to a BRICS currency kind of arrangement. That is going to be taking a bit of a setback as of now. Which means that, again, we really now need to, in a sense, batten down the hatches, look internally, because the rest of the world is still going to be volatile. We will not know how it's going to change. And we have to look for internal sources of growth. And therefore, to my mind, at the moment, the trade-off is that growth imperatives have become more important than they were earlier.
Oh.
Not the other way around.
Okay, sir, that's very, very interesting. Actually, we should invite you all for a separate discussion on this import rejig that we will have to do and the potential impact it can have on current account deficit. It's early days yet, we don't know. But, you know, we have a MPC coming up. And so first, lady and gentlemen, let's take up your pens and do the first vote. What will the MPC do to the repo rate on February 6th itself? Sonal, I'll start with you.
On hold.
On hold. Samiran?
On hold, but a bit more dovishness than expected before.
Okay. Dovish, pause. Soumya?
No change.
Sajid?
No change, on hold.
Okay, all of you are on the same page. Dr. Sen, you want to change your vote?
Hold.
Hold. Okay. So by a majority, by a unanimous vote, no change. But we will have to ask you a lot more questions about the new CPI basket, the new GDP number series that we will have, and you know, a host of other things that the MP that will bother the MPC. Those questions after the break. Welcome back to the deliberations of CNBC TV 18 Citizens Monetary Policy. I have been speaking with members of our committee, Sonal Verma, Sajid Chinoy, Samiran Chakrabarti, Soumyakanti Ghosh, and the chairman of our committee, Dr. Pranab Sen. Gentlemen, and Sonal, thank you very much for waiting on. Sajid, Dr. Sen referred to the global, the rejig of imports. What will global inflation be this time? There is a fear that even if the tariff fears die down somewhat, Chinese dumping is going to take its toll. So do you think core inflation may be less of a problem than some people fear?
So what you're seeing, Lata, actually is, there's no such thing as global inflation. Okay. We're seeing, a dual, dual economy or dual price pressures. Developed market inflation in some cases is still sticky, right? And so what you're seeing is a growing belief that with solid, resilient growth and sticky inflation, the Fed is going to remain on hold for the foreseeable future. What we're seeing is some developed market central banks actually begin to hike rates in 2026. Now, the situation is completely different for emerging markets and in particular what's happening in Asia. There's massive Chinese excess capacity. And if you look closely at where that excess capacity went, it was not consumed at home because domestic demand and consumption is weak. It was actually exported all around the world. Asia, of course, has been the recipient of a lot of Chinese imports over the last decade. But in 2025, you saw this widen to Africa, to Latin America, to the Middle East, to Europe. So what you're seeing in Asia actually is goods inflation remains very benign because Chinese disinflationary pressures are putting a lid on that. The thing to focus on, however, is that commodity prices have picked up. So I think the outlook for inflation in Asia is you've got the comfort that goods inflation will not spike, A, but you've begun to see some pipeline inflation pressures in terms of commodity prices. And three, despite Asian growth doing very well, India's currency was not the only currency under pressure. The Korean won and the Indonesian rupiah were under much more pressure, and that's translating into inflation pressure. So there are many moving parts at this point. In general, the sense is many countries in Asia will have the comfort to stay on hold because inflation will be benign. A couple of countries like Singapore and maybe Malaysia will be forced to hike because their economies have done better. They're part of the tech supply chain. So I think in 26, just to echo what Dr. Sen was saying, the concern for Asian central banks and policymakers will not so much be inflation. It's going to be how to navigate growth in what is still a turbulent global backdrop.
Fair point. Thanks for that, Sajid. Samiran, our inflation dynamics is not just queered by what may happen, Chinese dumping, but our own series on Feb 12th is going to change things a bit. And all of you have written reports that the new CPI will be about 20 to 50 basis points higher. What will the MPC do about that now? That unknown?
Yeah, on a lighter note, not just the future is uncertain, but even the past is uncertain for us because we will not know whether how much the previous inflation trends will go up. So our estimate is that the previous inflation trend, the FYTD 26 numbers might go up by about 40 to 50 basis points. But interestingly, that creates a favorable base for FY27. So just statistically speaking, the FY27 forecast might be lowered because of that by about 25-30 basis points is what our estimate is. Having said that, there is still a lot of uncertainty around how the price collection process will change in the new series and to what extent that can change the price indices also, not just the weighting pattern that is changing, but even the price indices might change. So it's going to be a tough call for the MPC, and that's why we are going with a pause in this MPC for the MPC to get a better chance to go through that data, go through their own FY27 1 year ahead forecast before finalizing how much space is there for further monetary easing. And that's why maybe this policy, it's only a dovish guidance and not an explicit rate cut.
Okay. Well, that was a very interesting way you put it, Samiran. I heard that from Y.V. Reddy once. Central bankers all over the world have a problem that the future is uncertain. In India, the past is also uncertain. Take your point. Well, Sonal, I'm getting two views on growth over here. Dr. Sen is worried about growth. Samiran, I think, alluded that maybe we have to, the policy may be dovish because you have to be less worried about growth. Sonal, you tell me, does growth need any more help from RBI?
I think a lot has been done by the RBI, by the government. We are 1 year out from when the RBI first started cutting policy rates. So I think the foundations are quite solid. And the main objective of the RBI now should be to ensure that we transition to a much faster growth rate. So the enabling conditions are there. So the main focus, therefore, should be to, one, ensure that transmission continues. Whatever cuts have been delivered does feed through. And this will still require fairly active management on liquidity. So that job is still a work in progress. And second, I think in terms of communication, markets have been sort of running ahead, and the discussions have moved to whether rate hikes are next in India. Given we stand fairly comfortable on the inflation outlook, I think pushing back on any of such hike expectations, again, with the objective of ensuring transmission, because as I said, I think the building blocks are there. The focus now is to ensure we transition to a much faster cyclical growth outlook in 2026, 27.
Okay, so those are clearly varied views. Shaumya, I want to ask you about nominal GDP. The CPI series is getting recast, the GDP series is also getting recast, but the bane of this year has been the very low nominal GDP. What will be the trend for FY27? Higher nominal GDP, or can this lower nominal GDP continue to persist?
I think, Lata, you have posed a very interesting point over here. I think the nominal GDP growth rate has been surprisingly kept at the lower end of the spectrum at 10%. And the tax buoyancy has been kept at 0.8, possible to take into account the slower growth in GST because the compensation rate is going away. But having said that, I think once the GDP series and the CPI series are released, I think it will be a tale of two narratives. The first thing is that while the nominal GDP growth rate, there could be an absolute increase in the number in the GDP value. So that will actually help the government in terms of an percentage reduction in the deficit numbers possibly. But overall, I think the things will not change on the ground. So while it could actually help the fiscal math, because if you have a larger number in terms of a revision, possibly the GDP numbers could be a little higher in the new series because of the measurement issues. But that could help the percentage terms, but materially, I think things will not be much different. So this issue of nominal GDP growth rate getting higher could be actually a statistical artifact because of the new series. So my sense is that these tax collections and other things will continue to be a little bit of issue given the current global growth scenario and also in the Indian context.
Okay, let's move over to the second voting round. The question is, will there be any further rate cuts or hikes in 2026 from the MPC? Well, Sajid had to leave, and so he has given me what his vote is. His vote is no more rate cuts expected. Sonal Verma, what's yours?
We're expecting a final 25 cut in April.
Shaumya, yours?
We are for another 25, but we are now veering towards a no rate cut.
Okay. We are going to take it as one cut. Samiran?
No more cuts, but I'm going to see the new CPI and GDP to finally decide.
Okay, Dr. Sen, this is a divided house. What's your vote? Will there be more cuts?
At least one more cut. And there may be a second cut towards the end of the year. Now, whether it will be this year or next year is a question.
Okay, so the future is uncertain as far as our MPC members are concerned. Thank you very much, members of the Citizens Monetary Policy Committee, for your deliberations. That's it on this special show. Thanks for watching.
बहुत ही विस्तार से भारत के प्रगति का एक स्वर संसद में गूंजा है। देश के नौजवान भारत के सामर्थ्य को कैसे आगे बढ़ा रहे हैं, इसकी भी विस्तार से चर्चा की है। हर वर्ग के सामर्थ्य को उन्होंने शब्दांकित किया है और इतना ही नहीं, आदरणीय राष्ट्रपति जी ने भारत के उज्जवल भविष्य के प्रति एक विश्वास व्यक्त किया है। ये अपने आप में हम सबके लिए प्रेरक है। आदरणीय सभापति जी, 21वीं सदी का प्रथम क्वार्टर पूरा हो चुका है, लेकिन ये दूसरा क्वार्टर जैसे पिछली शताब्दी में भारत की आजादी के जंग में दूसरा क्वार्टर बहुत ही निर्णायक बना था। मैं साफ साफ देख रहा हूं कि विकसित भारत के निर्माण की दिशा में ये दूसरा क्वार्टर भी उतना ही सामर्थ्यवान होने वाला है, उतना ही तेज गति से आगे बढ़ने वाला है। और इसलिए आदरणीय सभापति जी, राष्ट्र का हर व्यक्ति ये महसूस कर रहा है कि एक अहम पड़ाव पर हम पहुंच चुके हैं। अब न हमें रुकना है, न हमें पीछे मुड़ करके देखना है। हमें आगे ही आगे देखना है, तेज गति से चलना है और लक्ष्य को प्राप्त करके ही हमें सांस लेनी है। उस दिशा में हम आगे बढ़ रहे हैं।
Nothing should go on without except to the Prime Minister's speech.
आदरणीय सभापति जी, वर्तमान में अगर हम देखें तो भारत के भाग्य के अनेक सुयोग एक साथ हमें नसीब हुए। ये अपने आप में बहुत ही उत्तम संयोग है, ऐसा मैं मानता हूं। सबसे बड़ी बात है, विश्व के समृद्ध से समृद्ध देश भी बुजुर्ग होते जा रहे हैं। वहां की आबादी उम्र के उस पड़ाव पर पहुंची है हम जिन्हें बुजुर्ग के रूप में जानते हैं। हमारा देश ऐसा है जो विकास की नई ऊंचाइयां छू रहा है। उसी समय दिनों दिन हमारा देश युवा होता जा रहा है, युवा आबादी वाला देश है। ये अपने आप में एक बहुत अच्छा सुयोग है। आदरणीय सभापति जी, दूसरी तरफ मैं देख रहा हूं जिस प्रकार से विश्व का भारत के प्रति आकर्षण बढ़ा है, और उसमें भी विश्व भारत की टैलेंट का महात्म्य समझ रहा है। हमारे पास आज दुनिया का बहुत ही महत्वपूर्ण टैलेंट पूल है, युवा टैलेंट पूल है, जिसके पास सपने भी हैं, संकल्प भी है, सामर्थ्य भी है और इसलिए ये दूसरा सुयोग है। शक्ति का आशीर्वाद हमारे साथ है। आदरणीय सभापति जी, भारत आज विश्व में जो चुनौतियां पैदा हो रही है, उन चुनौतियों का समाधान देने वाला एक देश आशा की किरण बना हुआ है और हम समाधान दे रहे हैं। वैसा ही एक महत्वपूर्ण सुयोग है कि आज मेजर इकोनॉमी में भारत का ग्रोथ बहुत हाई है और हाई ग्रोथ और लो इन्फ्लेशन ये बहुत ही यूनिक संयोग है और ये हमारी अर्थव्यवस्था की मजबूती को प्रदर्शित करता है। आदरणीय सभापति जी, हम जिस गति से आगे बढ़ रहे हैं, जब हमें देश की जनता ने सेवा करने का मौका दिया, तब फ्रेजाइल 5 के रूप में ये देश जाना जाता था। जब हमें अवसर मिला, तब देश आजाद हुआ, तब हम दुनिया में 6 नंबर की इकोनॉमी थे, लेकिन इन लोगों ने ऐसा एक हाल करके रखा कि 11 पे पहुंचा दिया। आज हम 3 पर जाने की दिशा में तेज गति से आदरणीय सभापति जी, आज कोई भी सेक्टर देश लीजिए, चाहे साइंस हो, चाहे स्पेस हो, चाहे स्पोर्ट्स हो, हर क्षेत्र में आज भारत एक कॉन्फिडेंस के साथ, आत्मविश्वास से भरा हुआ भारत है। कोविड के बाद विश्व में जो स्थितियां पैदा हुई और ऐसी नई नई चीजें जुड़ती गई, आज दुनिया संभल नहीं पा रही है। ऐसे में साफ साफ नजर आ रहा है कि दुनिया एक नए ग्लोबल ऑर्डर की तरफ, नए वर्ल्ड ऑर्डर की तरफ आगे बढ़ रहा है। सेकेंड वर्ल्ड वॉर के बाद एक वर्ल्ड ऑर्डर बना था, अब एक नए वर्ल्ड ऑर्डर की तरफ विश्व बहुत तेजी से आगे बढ़ रहा है और सबसे बड़ी खुशी की बात है, सारी घटनाओं का अराजनीतिक तरीके से निष्पक्ष भाव से विश्लेषण करेंगे तो झुकाव भारत की तरफ है। विश्व मित्र के रूप में, विश्व बंधु के रूप में आज भारत अनेक देशों का विश्वस्त पार्टनर बना है और हम कंधे से कंधा मिला करके विश्व कल्याण की दिशा में भी अपनी उचित भूमिका निभा रहे हैं, अपने सामर्थ्य से सहाय भी कर रहे हैं। आदरणीय सभापति जी, आज पूरा विश्व ग्लोबल साउथ की चर्चा करता है, लेकिन उस चर्चा के सूत्रधार के रूप में आज भारत वैश्विक मंचों पर ग्लोबल साउथ की बुलंद आवाज बन गया है। अनेक देशों के साथ आज भारत फ्यूचर रेडी ट्रेड डील्स कर रहा है। पिछले कुछ ही समय में दुनिया के महत्वपूर्ण 9 बड़े देशों के साथ 9 बड़े हमारे ट्रेड डील हुए हैं और उसमें मदर ऑफ ऑल डील एक साथ 27 देशों के साथ, यूरोपियन यूनियन के साथ। जो लोग थक गए, बेचारे चले गए, लेकिन कभी न कभी उनको जवाब देना पड़ेगा कि देश की ऐसी हालत कैसे बना के रखी थी कि दुनिया का कोई देश हमसे डील करने के लिए आगे नहीं आता था। आपने कोशिश की होगी, पीछे 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 बहुत चक्कर लगाए होंगे, लेकिन किसी ने आपकी तरफ देखा भी नहीं होगा। क्या स्थिति ऐसे पैदा की? दुनिया के देश ऐसे ही भारत के साथ डील नहीं कर रहे हैं। आदरणीय सभापति जी, इसके पीछे सबसे बड़ी बात, डेवलप कंट्रीज एक डेवलपिंग कंट्री के साथ डील करता है ना, वो अपने आप में भी अर्थ जगत के लिए एक बहुत बड़ा डील है। और मेरे लिए नई बात नहीं है। जब मुझे गुजरात में सेवा करने का अवसर मिला था तो मैं एक वाइब्रेंट गुजरात समिट करता था और मेरे लिए गर्व की बात थी कि एक स्टेट, हिंदुस्तान का एक स्टेट, मेरी इस वाइब्रेंट समिट के पार्टनर कंट्री, डेवलप कंट्री जापान हुआ करता था। एक राज्य ने सामर्थ्य दिखाया था, आज मेरा देश है सामर्थ्य दिखा रहा है। ये तब होता है जब आपके पास आर्थिक सामर्थ्य हो, आपके पास आपके नागरिकों के अंदर, देशवासियों में एक ऊर्जा हो और खास करके मैन्युफैक्चरिंग के लिए एक मजबूत इकोसिस्टम हो, तब जाकर के विश्व आपके साथ डील करने के लिए आगे आता है। वोट बैंक की राजनीति में डूबे हुए लोगों ने कभी भी देश के ऐसे अनेक पहलुओं पर मजबूती देनी चाहिए, ये कभी उनकी प्राथमिकता नहीं रही और उसी का परिणाम है। और जहां तक कांग्रेस पार्टी का सवाल है, मैं साफ साफ कहना चाहता हूं और मेरे शब्दों पे भरोसा नहीं है तो मैं देश को, लोगों को कहूं, कुछ मत करो, सिर्फ लाल किले से कांग्रेस के प्रधानमंत्रियों के जो भाषण है, सिर्फ उन भाषणों का एनालिसिस कर लो, आपको साफ साफ लगेगा कि न उनके पास कोई सोच थी, न उनके पास कोई विजन था और न ही कोई इच्छा शक्ति थी। और इसका परिणाम है कि देश को इतना भुगतना पड़ा। आदरणीय सभापति जी, मैं कोटि कोटि देशवासियों का आभारी हूं। उन्होंने सेवा करने का अवसर दिया। हमारी काफी शक्ति उनकी गलतियों को ठीक करने में जा रही है। दुनिया के मन में जो उनके समय की छवि है, उस छवि को धोने में मेरी ताकत लगती है। ऐसा बर्बाद करके रखा हुआ था और इस काम के लिए हमने फ्यूचर रेडी पॉलिसीज पर बल दिया है। और आज आपने देखा होगा, देश नीति के आधार पर चल रहा है, पॉलिसीज के आधार पर चल रहा है। एडोकिज्म को हमने त्याग कर दिया है और उसके कारण विश्व का विश्वास बनता है। हमने रिफॉर्म, परफॉर्म, ट्रांसफॉर्म के मंत्र को लेकर के आगे बढ़े और आज स्थिति ऐसी है कि देश रिफॉर्म एक्सप्रेस पर सवार हो चुका है। हमने स्ट्रक्चरल रिफॉर्म्स किए हैं, प्रोसेस से जुड़े रिफॉर्म्स किए हैं, पॉलिसीज में रिफॉर्म किए हैं। हमारा मैन्युफैक्चरिंग सेक्टर, हमारे उद्यमी ये सशक्त हो, भारत की हर चीज का वैल्यू एडिशन हो, उस दिशा में हमने प्रयास किया है। और मैं आज विश्वास के साथ कह सकता हूं, आज भारत विश्व के साथ स्पर्धा करने के लिए पूरी तरह तैयार है। जब मैं विश्व के सीईओ फोरम की समिट देखता हूं, आज दुनिया हमारे उद्यमियों को समानता के रूप में देखती है। और जब पिछले दिनों सभी दलों के डेलीगेशन विश्व में गए थे, ये भाव उन्होंने भी अनुभव किया और आकर के मुझे सभी दल के माननीय सांसदों ने अपने अनुभव बता रहे थे, बड़ा गर्व से कह रहे थे कि हाँ, बराबरी से बात हो रही है। ये हमारे लिए अपने आप में बात है। आदरणीय सभापति जी, एमएसएमई का बहुत बड़ा नेटवर्क जितना सामर्थ्यवान होता है, वो लंबे अरसे तक इकोनॉमी को एक ताकत देता है। हमने उस दिशा में बल दिया और हमने कई रिफॉर्म्स किए हैं। आज हमारे एमएसएमई नेटवर्क पर दुनिया का भरोसा बढ़ रहा है। बड़े बड़े हो सकता है हम हवाई जहाज नहीं बनाते होंगे, लेकिन कई हवाई जहाज है जिसमें कई पुर्जे मेरे देश के छोटे छोटे एमएसएमई बना रहे हैं। आदरणीय सभापति जी, देश में हुए इन प्रयासों का नतीजा सबके सामने है। बड़े बड़े देश भारत के साथ व्यापारिक संबंध बनाने के लिए बहुत ही आतुर है। यूरोपीय संघ का ट्रेड डील हो, अमेरिका के साथ अभी हुआ जो ट्रेड डील हो, और कल हमारे पीयूष जी ने सदन में विस्तृत जानकारी भी दी है। और पूरा विश्व खुल करके इस ट्रेड डील का तारीफ कर रहा है। और उसमें जब यूरोपियन यूनियन के साथ ट्रेड डील हुआ तो विश्व को एक भरोसा हुआ कि अब वैश्विक स्तर पर स्थिरता की संभावना बढ़ेगी। अमेरिका के साथ ट्रेड डील होने के बाद विश्व को और भरोसा हो गया कि जो स्थिरता की एहसास हो रहा था, अब गति का भी एहसास होने लगा है। अब विश्व के लिए शुभ संकेत है। आदरणीय सभापति जी, इसका सबसे बड़ा लाभ हमारे देश के नौजवानों को होगा। और जब मैं नौजवान कहता हूं तो उसमें मध्यम वर्ग का भी नौजवान होता है, शहर का नौजवान भी होता है, गांव का नौजवान भी होता है, बेटा भी होती है, बेटी भी होती है। और इसलिए उसे टुकड़ों में न देखा जाए। मेरे देश के युवा के सामर्थ्य का हमें गौरव करना चाहिए। और उनके लिए पूरा विश्व बाजार अब खुल चुका है। अब उनके लिए अवसर ही अवसर है। और मैं उनको कहता हूं, आइए दोस्तों, मैं आपके साथ कंधे से कंधा मिला करके खड़ा हूं। हिम्मत कीजिए, बढ़िए। देश आपके साथ खड़ा है और दुनिया आपका स्वागत करने के लिए इंतजार कर रही है। आदरणीय सभापति जी, जिस प्रकार से दुनिया में हमारे युवा प्रोफेशनल्स की मांग बढ़ रही है, इवन केयर गिवर्स की मांग बढ़ रही है, हर कोई मिलता है हमें इस प्रकार के लोग चाहिए। इस प्रकार कुछ लोग तो अपना स्पेशल ऑफिस यहां बना रहे हैं रिक्रूट करने के लिए, योग्य टैलेंट की खोज के लिए। इसका मतलब हुआ कि भारत के प्रोफेशनल्स के लिए भी विश्व में बहुत बड़े अवसर बन रहे हैं। आदरणीय सभापति जी, ये संसद का उच्च सदन ये एक प्रकार से राज्यों का प्रतिनिधित्व करता है। और जो चर्चा की बारीकियां मैंने देखी, मेरा मन कहता है कि थोड़ा स्तर इसका ऊपर होना चाहिए था। और वहां से तो ज्यादा होना, वो तो कितने साल तक सरकारों में रहे हैं, वहां से जरा चर्चा का स्तर ऊंचा होना चाहिए था, लेकिन उन्होंने ये मौका भी गंवा दिया। देश उन पर कैसे भरोसा कर सकता है? आदरणीय सभापति जी, मैं कल एक माननीय सदस्य को सुन रहा था। यूं तो वो अपने आप को राजा कहलाने में बहुत गर्व करते हैं, लेकिन वे आर्थिक असमानता की चर्चा कर रहे थे। बताइए, जो खुद को राजा माने और वो आर्थिक असमानता की बात करे, तब लगता है कि क्या यही देखने के बाकी रह गए थे क्या? आदरणीय सभापति जी, हमारे टीएमसी के साथियों ने काफी कुछ कहा। जरा खुद तो अपने गरेबा में देखें। निर्मम सरकार पतन के जितने भी पैरामीटर्स हैं, उन सब पैरामीटर्स में नए नए रिकॉर्ड बनाते जा रहे हैं और यहां उपदेश दे रहे हैं। क्या हाल करके रखा हुआ है? ऐसी निर्मम सरकार से वहां के लोगों का भविष्य अंधकार के अंदर डूब रहा है, लेकिन इनको कोई परवाह नहीं है। सत्ता सुख के सिवाय कोई आकांक्षा नहीं, और वे यहां उपदेश देते हैं। घुसपैठ, दुनिया का समृद्ध से समृद्ध देश भी अपने यहां गैर कानूनी नागरिकों को बाहर निकाल रहा है। हमारे देश में घुसपैठियों को बचाने के लिए अदालतों को तब तक प्रेशर पैदा किया जा रहा है। मेरे देश का नौजवान कैसे ऐसे लोगों को माफ करेगा जो घुसपैठियों की वकालत करने के लिए ताकत लगा रहे हैं? और घुसपैठिए मेरे देश के नौजवानों के हक छीन रहे हैं, उनकी रोजी रोटी छीन रहे हैं, आदिवासियों की जमीन छीन रहे हैं, बेटे बेटियों की जिंदगी पर खतरे पैदा हो रहे हैं। लेकिन उनके लिए महिलाओं पर अत्याचार होते रहे। सत्ता नीति के सिवा कुछ करना नहीं, और वो यहां पर हमें उपदेश दे रहे हैं। और ऐसे चिंताजनक सभी विषयों पर आंखें मूंद करके बैठे हुए वो लोग हैं। एक हमारे माननीय सदस्य काफी कुछ बोल रहे थे, जिनकी पूरी सरकार शराब में डूब गई, जिनके शीश महल घर घर में नफरत का कारण बन गए, और शायद उनको ब्लैक शब्द ज्यादा पसंद है। हर एक अपना अपना एक भूतकाल होता है। पता नहीं ब्लैक के साथ उनका क्या पुराना रिश्ता है। आदरणीय सभापति जी, ऐसे सभी साथियों से मैं आज जरूर कहूंगा, तुम कितना दुनिया को धोखा दोगे, तुम कितना दुनिया को धोखा दोगे। आईना देख लिया तो अपनी सच्चाई कहां छिपाओगे? कांग्रेस हो, टीएमसी हो, डीएमके हो, लेफ्ट हो, ये दशकों से केंद्र में सत्ता में रहे हैं, सत्ता के भागीदार रहे हैं। राज्यों में भी उनको सरकारें चलाने का अवसर मिला है, लेकिन उनकी पहचान क्या बनी? आज डील की चर्चा होती है तो गौरव से कहते हैं, तब डील की चर्चा होती थी तो बॉफोर्स डील याद आता था। ये डील होते थे। उन्होंने सिर्फ जेब भरने का काम किया। नागरिकों के जीवन में बदलाव आना उनकी प्राथमिकता नहीं थी। आदरणीय सभापति जी, मैं कुछ उदाहरणों के साथ भी बात बताना चाहता हूँ क्योंकि यहाँ चर्चा में ये सारे विषय आए हैं और इसलिए मुझे कहना बहुत जरूरी है। अब एक उदाहरण देता हूं मैं बैंकिंग सेक्टर का। बैंकिंग सेक्टर एक प्रकार से अर्थव्यवस्था की ग्रिड होता है। 2014 से पहले फोन बैंकिंग का कालखंड था। नेता के फोन जाते थे और उसके आधार पर करोड़ों रुपया दे दिए जाते थे और गरीबों को तो बैंकों में दुत्कार मिलती थी, नफरत होती थी। देश की 50% से ज्यादा आबादी बैंक के दरवाजे तक नहीं देख पाई थी। कांग्रेस के नेताओं के फोन पर अरबों रुपये लोगों को दे दिए गए और जो ले जाते थे वो अपनी पर्सनल प्रॉपर्टी मान करके पैसे हजम कर जाते थे। यही खेल चलता रहा। कांग्रेस और यूपीए के राज में और आज जो इंडी अलायंस बन करके बैठे हैं उनके राज में बैंकिंग व्यवस्था तबाही के कगार पर खड़ी थी। मैं नया प्रधानमंत्री के पद का दायित्व मुझे मिला, मैं एक देश के मुखिया से मैं मिला, ऐसे ही बात कर रहा था। मैंने कहा बैंकिंग की दृष्टि से हम कुछ आगे बढ़ना चाहिए। उन्होंने कहा पहले एक बार साहब जरा अभी आप नए हो, आपके बैंकों की व्यवस्था का अध्ययन कर लीजिए। हम कैसे हिम्मत करें। एक देश के नेता ने कोई एक जानकारी थी, उसने मुझे बताया यहां इनको कोई परवाह ही नहीं। यानी एक प्रकार से उन्होंने जिस प्रकार से बैंकिंग व्यवस्था को एनपीए के पहाड़ खड़े हो गए थे। जहां भी देखो चर्चा चलती थी एनपीए का क्या होगा, एनपीए का क्या होगा, कैसे बचेंगे। आदरणीय सभापति जी, चुनौती बड़ी थी लेकिन हमने समझदारी से काम लिया। बैंकिंग व्यवस्था के सब कर्ता धर्ताओं को विश्वास में लिया। रिफॉर्म की आवश्यकता थी, हिम्मत के साथ रिफॉर्म किए, पारदर्शी व्यवस्था बनाई, ढेर सारे बैंकिंग रिफॉर्म्स हुए और जो सरकारी बैंक दुर्बल हो चुकी थी, ठीक नहीं चल पाती थी, उसको हमने बड़ी बैंक के साथ मर्जर कर दिया। और मुझे याद है किसी एक महाशय बड़े अपने आप को विद्वान मानने वाले ने लिखा था, अगर मोदी सरकार बैंकों में ये कर ले तो हिंदुस्तान का बहुत बड़ा रिफॉर्म हो जाएगा। वो काम मैंने आते ही कर दिए थे। आदरणीय सभापति जी, और इन सारी चीजों का नतीजा हुआ बैंकों में जो बीमारी घर कर गई थी उस बीमारी से बैंकों को मुक्ति मिली। बैंकों का स्वास्थ्य सुधरा, लगातार सुधरा, अभी भी तेजी से आगे दौड़ रहे हैं। और बैंकिंग का जब स्वास्थ्य सुधरा तो लेन देन का कारोबार भी उनका बढ़ा, लोगों को पैसे मिलने लगे, सामान्य व्यक्ति को पैसे मिले। ऐसे ऐसे गरीब लोगों को लोन मिले जिनके लिए कभी बैंक के दरवाजे बंद थे, बेचारा दूर से देख करके उसे जाना पड़ता था। आज मुद्रा योजना जो देश के नौजवान को अपने पैरों पर खड़े रहने की ताकत देता है, मुद्रा योजना जो स्वरोजगार की प्रेरणा देता है, लेकिन स्वरोजगार के भाषण के काम नहीं होता है, उसका हाथ पकड़ना पड़ता है, उसको साथ देना पड़ता है, उसको सहाय देनी पड़ती है। और हमने मुद्रा योजना के साथ द्वारा 30 लाख करोड़ रुपया $30 लाख करोड़ रुपए से ज्यादा लोन मुद्रा योजना के माध्यम से और बिना गारंटी देश के नौजवानों के हाथ में दिया और उन्होंने अपने कारोबार को आगे बढ़ाया। और गर्व की बात है उसमें बहुत बड़ी मात्रा में माताएं बहनें भी हकदार बनी, लाभार्थी बनी। सेल्फ हेल्प ग्रुप, इन दिनों ग्रामीण महिलाएं बड़े सपने देखती हैं। खुद अपने पैरों पर खड़ा होना चाहती थी। विमेन सेल्फ हेल्प ग्रुप का हमने विस्तार तो किया ही किया, लेकिन 10 करोड़ बहनों को हमने सीधी आर्थिक मदद की व्यवस्था की। हमारे एमएसएमई सेक्टर को हमने भरपूर लोन दी और मैं आज बड़े संतोष के साथ, बड़ी जिम्मेवारी के साथ इस पवित्र सदन में कहना चाहता हूं, हमने एनपीए जिसके पहाड़ हुआ करते थे 2014 के पहले, आज उसको हमने नीचे निम्न स्तर पर ला करके खड़ा कर दिया। आज एनपीए 1% से भी नीचे है। ये अपने आप में बैंकों के स्वास्थ्य के लिए बहुत उत्तम काम हमने किया। मैंने इतना ही नहीं, हमारे बैंकों का प्रॉफिट आज रिकॉर्ड पर है, हाई रिकॉर्ड है उसके। ये अपने आप में देश की अर्थव्यवस्था को ताकत देने के लिए, बैंकिंग व्यवस्था मजबूत होती है तो बाकी अर्थव्यवस्था को भी मजबूती मिलती है। उस काम यहाँ कुछ साथियों ने इम्प्लीमेंटेशन के संबंध में शिकायतों का भाषण काफी किए। शायद वो तय करके आए थे कि ऐसा ऐसा बोलना है, तो इसमें तो उनका ऐलान दिखता था, बाकी में तो नहीं दिखता है। आदरणीय सभापति, जब ये इम्प्लीमेंटेशन को लेकर के इतनी बड़ी बड़ी बातें करते हैं, मैं एक जरा किस्सा सुनाता हूं। मैं किसी का भला बुरा कहने के लिए नहीं कर रहा हूं, मैं सिर्फ हकीकत है रख रहा हूं। परेशानी जिनको होगी उनको होगी, लेकिन तथ्य तो तथ्य ही होते हैं। हमारे देश के एक नेता हिमाचल प्रदेश के दौरे पर गए थे और वहां से आने के बाद उन्होंने खुद ने ये घटना कहीं सुनाई, रिकॉर्ड पर उपलब्ध है। उसमें उन्होंने कहा, उस नेता ने क्या कहा, मैं उन्हीं के शब्द पढ़ रहा हूं। काफी लंबे समय तक मुझे योजना आयोग से संघर्ष करना पड़ा, क्योंकि वे पहाड़ी क्षेत्रों के लिए अलग योजनाएं बनाने को तैयार ही नहीं थे। मैं हिमाचल प्रदेश गई थी, जब मैं वापस आई तो मैंने योजना आयोग में कहा कि हमारे कामदारों को, वर्कर्स को जीप की जरूरत नहीं है, बल्कि खच्चरों की आवश्यकता है, ताकि कम से कम उन पर सामान आदि लादा जा सके। आगे उन्होंने कहा, लेकिन मुझे बताया गया हम पैसा तो जीप के लिए ही देंगे, क्योंकि खच्चरों के लिए पैसे देने की पॉलिसी नहीं है। इसी भाषण में आगे वो कहती हैं, अब वहां सड़कें ही नहीं थी। उनका कहने का कारण यह था कि हिमाचल में जहां वो गई और सड़कें ही नहीं थी। अब वहां सड़कें ही नहीं थी तो फिर उस पर जीप का क्या लाभ हो सकता है? जीप लेकर के कौन जाएगा जहां रोड नहीं है? लेकिन उस समय योजना आयोग का जोर था, या तो जीप या तो कुछ भी नहीं। आदरणीय सभापति जी, ये भाषण किसी और का नहीं, ये कांग्रेस के वरिष्ठ नेता और तत्कालीन प्रधानमंत्री इंदिरा गांधी का भाषण है। कांग्रेस के लंबे शासनकाल में यही कार्यशैली रही, और जिसको इंदिरा जी खुद जानती भी थी कि ये पाप चल रहा है, लेकिन इस कार्य संस्कृति को सुधारने के लिए उन्होंने कोई कदम नहीं उठाया। और इंदिरा गांधी जिस प्लानिंग कमीशन की धज्जियां उड़ा रही थी, उसके जन्मदाता उनके स्वयं के पिताजी थे। और प्लानिंग कमीशन को बना, और इंदिरा जी ने जब कहा, उसके बीच में 2 दशक बीत चुके थे, लेकिन हाल यही था। और 2014 तक सब दुखी थे, सब परेशान थे, सब गलती देख रहे थे, लेकिन सुधार करने की तैयारी नहीं। 2014 के बाद जब आपने हमें मौका, और कांग्रेस ने जिस प्रकार से प्लानिंग कमीशन अटकाना, लटकाना, भटकाना वाली कार्यशैली बना दी थी, 2014 में जब हमें मौका मिला तो हमने आकर के काम किया, प्लानिंग कमीशन को खत्म कर दिया और नीति आयोग को। आज नीति आयोग बहुत तेज गति से काम कर रहा है। अब देखिए एस्पिरेशनल डिस्ट्रिक्ट, वो भी एक बड़ा प्रेरक उदाहरण है। और मैं तो देख रहा हूं कि डेवलपिंग कंट्रीज के लिए, विकास के लिए एक मॉडल के रूप में वैश्विक संस्थाएं इसको अनुमोदन दे रही है। ये एस्पिरेशनल डिस्ट्रिक्ट की ये सफलता बनी है। देश के कई जिले ऐसे थे जिसको पिछड़े मान करके छोड़ दिया गया था, और वहां करोड़ों लोगों की जो मौलिक जरूरतें थी उसको भी नकार दिया गया था। उनको तो ऐसे ही जीने के लिए मजबूर कर दिया गया था। और जो पिछड़े इलाके थे वो और पिछड़े होते गए और बर्बादी आती गई। और हालत तो सरकार में ऐसी थी कि जब किसी को पनिशमेंट ट्रांसफर करनी होती थी, पनिशमेंट पोस्टिंग देना होता, तो ऐसे ही जिलों में भेजा जाता था ताकि और खराब करे वो। ये हाल बन गया था, ये वर्क कल्चर बन गया था। हमने इस स्थिति को बदला। सबसे पहला आग्रह किया, यंग होनहार अफसरों को लगाया जाएगा और पूरा 3 साल का मौका उसको दिया जाए काम करने का। एक के बाद अब निर्णय किए। और आज देखिए किसी समय छत्तीसगढ़ का हमारा बस्तर एस्पिरेशनल डिस्ट्रिक्ट में था, आज वो बस्तर पूरे देश में बस्तर ओलंपिक के नाम से चर्चा में है। आज विकास की धारा बस्तर के गांव-गांव पहुंच रही है। अभी कुछ गांवों में पहली बार बस देखी, पूरे गांव ने उत्सव मनाया बस्तर में। ये परिस्थितियां छोड़ करके गए हुए हैं लोग। और यहां पर पता नहीं किस प्रकार से देश को कहां ले जाना चाहते हैं लोग। आदरणीय सभापति जी, इंप्लीमेंटेशन क्या होता है, ये एस्पिरेशनल डिस्ट्रिक्ट एक बहुत बड़ा शानदार उदाहरण है। ऐसे तो सैकड़ों उदाहरण हैं, लेकिन मैं कहने के लिए इसको उल्लेख कर रहा हूं। कांग्रेस के हमारे साथियों को ये जो बदलाव आ रहा है उसमें इंप्लीमेंटेशन नजर नहीं आ रहा है। और उनका तो एक ही प्लानिंग कमीशन वाला मॉडल है, जीप और खच्चर वाला मॉडल, यही वो लोग जानते हैं, उससे आगे कुछ नहीं जानते। और ये इंप्लीमेंटेशन कैसे करते हैं, मेरा जन्म नहीं हुआ था उसके पहले सरदार वल्लभ भाई पटेल ने नर्मदा नदी पर बांध बांधने की कल्पना की। विषय तो पक्का हो गया, सरदार साहब नहीं रहे, खैर नेहरू जी ने शिलान्यास किया। अब इंप्लीमेंटेशन देखिए इनको। मेरा जन्म नहीं हुआ था जब इसकी कल्पना की गई थी, और प्रधानमंत्री बनने के बाद मैंने उसका उद्घाटन किया। ये हाल है। और उनका इंप्लीमेंटेशन देखिए, मुझे मुख्यमंत्री रहते हुए 3 दिन अनशन पर बैठना पड़ा था नर्मदा सरदार सरोवर डैम के लिए, मेरे राज्य के किसानों के लिए। मैंने अपने आप को दांव पर लगा दिया था, तब जाकर के भारत सरकार को झुकना पड़ा, और तब जाकर के सरदार सरोवर डैम के कंस्ट्रक्शन को गति मिली। और यहां मैं पहुंचा तब मुझे उसका उद्घाटन करने का सौभाग्य मिला। और आज कच्छ तक हावड़ा बीएसएफ के लोग जहां बैठते हैं वहां तक नर्मदा का शुद्ध पानी पीने के लिए पहुंच रहा है। इंप्लीमेंटेशन क्या होता है। और यहां पर इम्प्लीमेंट किसी ने शब्द पकड़ा दिया, हर एक के मुंह से वही निकल रहा था। हमने कांग्रेस की कार्यशैली को बदलने के लिए, जब मैंने देखा कई ऐसे काम थे अटके पड़े हुए, कोई पूछने वाला नहीं थे फाइलों में, और पॉलिटिकल फायदे के लिए अनाउंसमेंट कर दिए, दिए जला दिए, पत्थर लगा दिए, करना कुछ नहीं। आखिरकार मैंने एक टेक्नोलॉजी वाला प्लेटफॉर्म बनाया यहां आकर के, प्रगति के नाम से। ये प्रगति प्लेटफॉर्म का मैं उदाहरण देता हूं, आप हैरान हो जाएंगे। मुझे एग्जैक्ट याद नहीं है, लेकिन शायद हिमाचल में एक ट्रेन उन्होंने पार्लियामेंट में घोषित की थी, शायद ऊना और कोई। मेरे आने तक वो कागज पर भी उसका ड्राइंग नहीं बना था, बताओ। और चुनाव जीतने के लिए वो घोषणा कर दी। प्रगति के अंदर मेरे सामने विषय आया, ऐसे कई विषय मेरे सामने आए, और उस प्रगति के अंदर हमने एक एक प्रोजेक्ट क्यों अटके हुए, कॉस्ट किस डिपार्टमेंट के काम में क्या मुसीबत आई है, किसने गलत तरीके से इसको आगे बढ़ाया, और बजट तो बढ़ता ही गया था। जो योजना 900 करोड़ में होनी थी वो 90,000 करोड़ तक पहुंच जाए, ये हाल करके रख दिया था इन्होंने। हमने एक टेक्नोलॉजी प्लेटफॉर्म बनाया, हर महीने बैठा। अभी मैंने 50वां एपिसोड पूरा किया उस मीटिंग का। और लगातार उस काम करते करते और संबंधित राज्यों को भी बिठाया, उनकी कठिनाइयों को भी समझा, उसके इम्प्लीमेंटेशन में कौन मिनिस्ट्री का परेशानी हो रही है, किस स्टेट की परेशानी हो रही है, किस कानून की परेशानी हो रही है, हर एक की बारीकी से देखा। और आज मैं गर्व से कह सकता हूं कि इस प्रगति के इम्प्लीमेंटेशन को बारीकी से प्रधानमंत्री के स्तर पर देखे जाने के कारण 85 लाख करोड़ रुपीस का काम को गति मिली। 85 लाख करोड़ रुपीस के काम, आप कल्पना कीजिए देश की कितनी बड़ी शक्ति को अनलॉक किया हमने। इंप्लीमेंटेशन कैसे होता है ये हमने करके देखा है। रेल हो, रोड हो, सिंचाई हो, ग्रामीण कोई व्यवस्था का काम हो, इन सारी चीजों को हमने इसमें लिया। अब जैसे जम्मू उधमपुर श्रीनगर बारामूला रेल लाइन, आज ये प्रोजेक्ट पूरा हुआ। और बर्फबारी में इन दिनों आपने देखा एक वीडियो बहुत पॉपुलर हुआ है, बर्फ के बीच में से चारों तरफ बर्फ की चादर छाई हुई है और वंदे भारत ट्रेन निकल रही है और लोग कहते हैं गलती मत करना, ये तो विदेश है, ये हिंदुस्तान है, ये रील चल रहा है बाजार में। लेकिन 3 दशक तक यही प्रोजेक्ट लटका हुआ था। 3 दशक, 30 साल, आप कल्पना कर सकते, 2 पीढ़ी आगे बढ़ जाए, ये यहीं के अटके पड़े थे। हमारी सरकार ने इसको पूरा किया। आदरणीय सभापति जी, मैं असम की बात करता हूं और कोई ये मत सोचो कि मैं चुनाव है इसलिए बोल रहा हूं। इनके पाप है इसलिए मुझे कहना पड़ रहा है। कांग्रेस सिर्फ इमेजिन करती है और इंप्लीमेंट करने का उनको कोई लेना देना ही नहीं होता है। अब असम का बोगीबिल ब्रिज, ये बोगीबिल ब्रिज अरुणाचल और असम को जोड़ने वाला बहुत महत्वपूर्ण ब्रिज, कितने ही सालों तक ये प्रोजेक्ट लटका रहा। हमने प्रगति के माध्यम से इसको रिव्यू किया और असम सहित पूरे नॉर्थ ईस्ट को बहुत बड़ी सुविधा वाला ये काम हमने पूरा किया। आदरणीय सभापति जी, इंप्लीमेंटेशन की बातें जब करते हैं तो एक बार हमारे पास तो तथ्यों के साथ चीजें हैं कि हमने चीजों को समय पर पूरा करने की दिशा में आगे बढ़े। और इन दिनों तो जो काम कर रहे हैं समय से पहले हो रहा है। हमने पूरी दुनिया को कहा था कि हम 2030 तक यहां पहुंचेंगे सोलार में, हमने वो काम 2025 में कर दिया। हमने इथेनॉल का समय तय किया था, हम उसमें भी 2-3 साल पहले ही काम पूरा कर लिया। तो एडवांस में हम काम पूरा करने का, इंप्लीमेंटेशन की ताकत हमारे से उससे भी ज्यादा है। आदरणीय सभापति जी, भाजपा हो, एनडीए हो, हमारा अप्रोच, चीजों की तरफ देखने का हमारा दृष्टिकोण, समस्या के समाधान के लिए हमारी सोच और कांग्रेस के बीच में आसमान जमीन का अंतर है, बहुत फर्क है। मैं आपको उदाहरण देता हूं। हमारी सोच ये है कि 140 करोड़ देशवासी ये इतने सामर्थ्यवान हैं कि वह चुनौतियों को समाधान दे सकते हैं। ये हमारी सोच है। हमारा भरोसा है देशवासियों पर, उनके सामर्थ्य पर हमारा भरोसा है और यही लोकतंत्र की भी सच्ची ताकत होती है। लेकिन कांग्रेस देशवासियों को ही समस्या मानती है। अब मैं इनका इतना बोल करके छोड़ दूंगा तो आज पता नहीं रात को उनको नींद नहीं आएगी और गालियां कल कैसी दे उसका प्लानिंग चलेगा। लेकिन मैं उदाहरण के साथ बताना चाहता हूं किस प्रकार से लोग सोचते थे देशवासियों के लिए।
Hello and welcome to CNBC TV 18. Joining us today is a very special guest, Omar Abush, the CEO of Pearson. Now, Pearson is a UK headquartered company with a 180-year-old legacy. They call themselves the world's lifelong learning company. And today their focus is on upskilling their clients, be it in the biggest corporate houses and be it students in colleges and universities across the world as well. Omar, thank you very much for being with us here on CNBC TV 18.
It's my pleasure. Thank you for having me.
Let me begin by one of the biggest issues that we're facing in the IT industry right now. We saw headlines about Anthropic's new AI plugins, and that literally had a very strong impact on IT stocks across the world, wiping off literally $285 billion from software stocks. Why do you think this happened, and what's the lesson here?
I mean, why it happened, I think, is the investment community is nervous because actually what you're saying happened in advertising, professional services, it happened in information services, it happened in edtech. I mean, so there's a whole bunch of sectors. It's happened in media that have been impacted by this because people don't really know how AI will play out. I think what we can say is it will be profound, it will have far-reaching consequences, and it will take many years to play out. The one thing that you know for sure, though, is that AI is affecting the half-life of skills. So if you were a lawyer yesterday who did contract reviews, and Anthropic put out a plugin to do contract reviews, that's important. And so humans need to keep developing their skills because the half-life of skills are declining. And in order to develop your skills, you need to be very good at learning. Learning is the skill. And so focusing on how to learn is the best way for people to progress in their lives, and that's what we're 100% focused on.
Right. So would you say that this incident actually shows that we need to be better in terms of skilling our workforce for the future?
100% yes. I mean, I'm running around telling my CEO colleagues that CEOs need to be chief education officers, or at least the chief learning and development officer for their company, because there is no positive future AI scenario without human development. In order to deploy AI, you need domain skills in the industry like underwriting and insurance. You need tech skills like security and data. You need AI skills like data science, and you need human learning. Without that, the companies can't actually bring on board these amazing technologies and create more value. So human learning is the core thing that we need to get right to get a positive outcome from AI.
All right. Now, I'll persist with this question on Anthropic just one more question. What do you think CEOs of some of the legacy IT companies in India should be doing or should take as a lesson for what has happened as a result of Anthropic launching these AI plugins? How should they prepare themselves for the future now to gain investor confidence?
I mean, what I would say to that, I think applies to any company. You have to lean into innovation. If you try and resist it, it'll wash past you. And so the Indian technology services companies are some of the world's best, most innovative, most entrepreneurial companies. These companies have grown unbelievably in the last 20 years. And so actually, personally, I think that the vast majority of them are just going to lean heavily into this innovation. They're going to train their people on using it. Those people are going to be training the rest of the workforces of their clients in that world. And probably they will be fine.
Right. Now, speaking about the skill gap that exists, Pearson does a lot of skill mapping around the world.
Yeah.
When it comes to India, what is the skill gap when it comes to readiness for an AI future, and how ready is our workforce?
I mean, again, the question you're asking really applies to every country. No country is ready for AI today. And there are skill gaps that pre-existed before AI. Like you can go and look at a country like the US today, and they don't have enough healthcare workers, they don't have enough teachers, they don't have enough construction workers. Those things apply also in India. The gap that I would say that you can see common across pretty much every country, developed and developing, is around vocational skills. People underestimate the sheer need that we have for the vocational careers that are out there. So whether it's around construction or electricians or plumbing or mechanics, the world has a huge need for that in the future, including with a lot of AI. So I think that's an area that we're very focused on. And then the area that Pearson is extremely focused on is you have 8 billion people in the world that need to learn how to develop and be effective in the world of AI, but they are trained by hundreds of millions of educators. So we need to have a huge focus on teaching teachers, because they're the people who help everyone else.
So If you had to list out certain priorities as CEO for 2026 and maybe over a 5-year horizon for Pearson and how you see this company growing, what would be some of the goals for you?
Well, I mean, again, this is like business 101. So making sure that everyone in the company is leaning into modern innovation, including AI. I insist that my leadership team really understand it. So at the beginning of 2025, I put the whole leadership team through a prompt engineering course, multi-week. They got very good at it. They all use it now all the time as part of their job, but we cascade that through the company. So innovation is part one. Two is meet customers where they are. So we have a lot of products and services around the world, and I want us to be incredibly customer-centric, listening carefully to customers and their needs, so that we're constantly evolving our products and services in a way that meet their requirements. And, you know, just now I was with my town hall here, and they were talking about, you know, we have a lot of Hindi language assets, but what about all the other languages in India? And so again, it's like, okay, well, the AI tools and the models are not that good at translating, you know, Tamil Nadu or Telugu so much today. And those are things that we need to do much more on to make our products more relevant. And then finally, the last bit is the business side. It's sales and marketing and localization. And those are things that, as you can imagine, we're very focused on.
Right. Now, when we speak about preparing India for an AI future, and this is an area you work with very closely with schools, with offices, with big IT companies. What does India need to do? What do corporates need to do in order to upskill their students, their employees?
Again, the comments I'm going to make are not necessarily just for India. They really apply elsewhere. Today, in today's world, there's a signaling failure. Companies don't really know what skills they have in the business, apart from the moment they hire you. But a few years later, they can't really know exactly what skills you have. And they also can't predict the skills they need in the future. So they can't signal. Employees also sometimes, like people trying to get recruited, it's a real struggle today because they're writing resumes and CVs with AI. And those CVs and resumes are being screened by AI. So you have this like signaling disconnect. So what do you need to do? Well, you need to teach teachers on applying and using AI in school to make their jobs easier, but also to qualify kids with job-ready skills for AI. In the workforce, you need to use AI to help advance the skills that you need for the future. And again, we know a lot about what is required there, but at the heart of it is, if you're a management accountant today, tomorrow you're going to be a management accountant using AI. If you're a radiographer today, you're going to be a radiographer tomorrow using AI. And so those are clearly the skills that we need to develop across the workforce.
Right. How would you quantify the global skill gap at this juncture, and what would be the cost of it?
So we did an analysis last year called about the learning to earning transition. The cost in the US economy alone was $1.1 trillion a year from the lost time of how long it takes to get out of learning into work, and when people get disrupted with technology and restructurings from work, how long it takes them to get back into work. So in the US alone is 1.1 trillion. In the UK it was 100 billion pounds. In Saudi Arabia, the number can go up to 6% of GDP. I mean, these are enormous numbers when you look at individual countries. And so, yeah, we're very focused on making sure people have the right skills at the right moment and that they can be ready to be aligned with the right job opportunities where there is demand. That's a big focus for us.
How would you quantify that for India versus China?
So I haven't done that analysis. The Chinese have invested tremendously on something called their Genius program, where they find the best of the students on mathematics and STEM and positioning them for AI careers. And that's been going since 2017, and that's working well for them. I think India has always had a tremendous legacy and history of education and learning. You also graduate large numbers of STEM candidates every year. I still think that in all countries, you know, China, India, and the West, you know, everywhere around the world, there's this signaling failure. There's a disconnect between what institutions graduate and what workforces need. And that alignment of skills is something that we're working on.
Right. Of course, as you say, every college, every institution, every workplace has to get their workforce ready. But as a country, as a government, is India doing enough?
I mean, I've been coming to India now for not quite 2 decades, but quite a few years. And the progress I've seen in this country is unbelievable. I mean, I would be hard pushed to pick another country that has developed at the same rate as India. And the things that your government is dealing with on the social side, on the digital side, on the infrastructural side. I mean, it's just tremendous progress all along. Would you ever say someone is a 10 out of 10? Like, I never give myself a 10 out of 10. So there's always more that one can do to improve. But I think with the 1.4 billion people, the youthfulness of the country, the energy of the country, the educational focus, and I mean, this country loves education. That's a massive advantage. And so I would be long India.
Right. You're long on India. But would you also say that skilling is now a national security priority? The reason why I say so, that over the last 5 to 6 years, ever since COVID struck us, we've seen weaponization of resources. Even in India, we've seen cases where the Chinese government pulled out its workers from Foxconn factories in India. Do you feel that we need to be ready for a future like that, for instances where movement of services, movement of highly skilled professionals, people who can work on foundational models in artificial intelligence, that could be weaponized?
So listen, geopolitics is evolving and has become more complicated in recent years. That is a fact. I think countries that pursue an autarky approach, where they try and do everything for themselves, ultimately won't work. There are lots of reasons why it doesn't work. I think the benefit to humanity is more interaction, more proximity, and more trade. Too much going it alone results in making us all poorer. Now, having said that, yes, there are national security implications to skills. If you don't have a competitive workforce with the right skills, then that's going to be a disadvantage, even in an era of more lenient geopolitics. You still need to have a comparative advantage in trading, and so you need skills. I think smart countries absolutely make it a national priority. When I see India with your NCVT, for example, your National Council for Vocational Training, you have a huge opportunity to upskill large numbers of people to help India be ready for the future. You want to build data centers in India, you do need electricians. You need semiconductor fabs. You need data scientists. So all the above. And India's always been incredibly leading on software, and I think you can go beyond that as well.
Right. So when you say that you are very bullish on India, could you give us a sense of how you look to expand your workforce, expand your presence, maybe invest more? Would you have any pipeline or figures in mind for us?
Actually, I was just discussing with my team some of our growth opportunities. So you may have seen that we have partnered very deeply recently with TCS, Cognizant, and HCL Tech. We have thousands of people in those companies working with us. We're planning to expand our domestic market business as well. We have hundreds of people working here in India today. One of my colleagues talked about 2xing that business, and I was more in the 5xing zone. I think we can do a lot more in India. You have thousands of higher educational institutions. You have 100,000 schools. And so Pearson provides curriculum, assessments, materials, digital and physical, for all of those environments. And I'm hoping that we can be a much better partner to the Indian government, the various agencies. We signed an MOU with Telangana recently in that space, but I think we could do much, much more in the future.
So more than 5x?
I'm always excited to reach for the stars.
Okay, all right. My final question to you would be, one thing is to get your workforce ready for the future. But then, do you also feel that considering the speed at which artificial intelligence is changing things around us, do you also feel that it's also better for legacy IT companies in India, some of the biggest established players, to look for acquisitions, major acquisitions in countries like the United States, in Europe, to help them grow their base and keep their eyes on the ball?
So listen, as I say this to my investors, M&A is a tool, but it's a useful tool to drive organic growth strategy. I don't think any one company has got the jump or the lead on using AI for the future today. We're very early in this AI revolution today. The way I'm thinking about it at Pearson is, for example, we launched a product called Communication Coach. So, you wrap up your Teams call and a little learning card pops up and it says, hey, I love the way you expressed yourself on that meeting, but that last point you tried to get across, you were a bit technical and people didn't really follow you, and here's some suggestions on your range of expression. And so that helps you if you're a native speaker, and it helps you if you're a non-native speaker with your grammar and your vocab. That learning and the flow of work is the way that we make people adaptable and agile in an era where the AI is changing very fast. And so I'm very focused on those sorts of organic strategies, and sure, M&A every now and then to help accelerate organic growth could be a useful tool.
Right. Finally, any recommendation for India in terms of skilling for the future, for the education sector, for the corporate sector?
I mean, what I would always come back to is think hard about the two things. teacher training, because the teachers are the ones who are teaching everyone else, and investing in learning to learn techniques. We've learned a lot in learning science in the last few decades about actually how humans learn, and those techniques are very affordable and very doable, but we don't teach them often. And I think every human in the future, their core skill will be learning. And that's what we should focus on.
All right. Omar, thank you so much for joining us and giving us your view on the India AI story and India's readiness for an AI future as well.
What a lovely time with you. Thank you so much.
Welcome back. You're watching CNBC TV 18. Swiss watchmaker Atlantic Watches has stepped up its expansion plans in India. The company is planning to operate around 40 retail stores in the country by the end of 2026 across Delhi, Mumbai, Pune, Bengaluru, among others. My colleague Abhimanyu Sharma caught up with the watchmaker's global sales head to understand more about their India strategy.
Currently, Atlantic is represented in 20 points of sales. We are in the major cities, so we have point of sales in Delhi, we have point of sales in Bangalore, Mumbai, Pune, Ahmedabad. Maybe I forgot something, but at least we are in 20 point of sales. We have 5 more point of sales in the pipeline. And the goal is actually to have, by the end of the fiscal year, at least 40 more point of sales.
We are also looking at an increased trade between India and Switzerland due to the European Free Trade Association's free trade agreement with India, which was recently incorporated and came into force. What are the kind of growth plans you're looking at in the Indian market now?
First of all, the free trade agreement has been set, I think, by the end of last year. It will be introduced stepwise. So now I think it's like 3% less you will have, you can benefit. But the problem is at the moment the Swiss franc is very strong. So that's why I think, it will remain at the same at the moment in terms of pricing and everything. And otherwise, yes, we have ambitious plans in India. So India is one of our focus markets because we see the development of the market. The Swiss watchmaking industry, they have statistics where you can see that India is getting more and more important for Swiss watchmaking. So we see that trend. That's why we are here. We have seen a very successful start for both parties, for our partner here in India. So within 1 year to be present in 20 points of sales, that's quite an achievement. And as mentioned, for us, it's a market where we invest. We invest together with our partner, and we want to further grow here, sure.
Are there any new brands which you are going to launch, which are going to target particularly the Indian market, given the peculiar conditions of temperature, humidity, and even particular behavioral exercises which possibly you must have undertaken as part of your research?
As we are in the market now for 1 year, we are learning a lot. We talk to the people, especially to the salespeople here, because they get the customer feedback, so they know what they are looking for, what kind of specific designs. That's why we need to learn a lot, we need to improve. And we have some plans. We are doing probably maybe some specific Indian designs for the customer, because you have to imagine we are an international company, so that's why we have 250 SKUs in our portfolio, because Indian customer has much a different taste than probably a Swiss customer. That's why we would like to fulfill all those requirements. And when we develop a new product, we always talk a lot with our customer.
What's the price segment and target you're looking at with respect to sales in India?
So first of all, we are based in the mid-price segment. Means the quartz watches, they start at 300 Swiss francs in retail. The automatic watches, they start like 700, 750 Swiss francs. And then it goes all up to, like, we have limited edition, which we launched here for like 1,000 Swiss francs. And the most expensive watch we have is 5,500 Swiss francs in retail. But this is a solid gold watch, limited. So this is really something rare we are doing. But I would say core range goes from 300 to 500 in terms of quartz watches, and 700 to 1,200 in terms of automatic watches.
With that, it's a wrap on this edition of News Center. More news and updates continue right here.
big thing in Davos today is about this new world order that is going to be much more distributed. Today, most of the wealth on AI is on US. Prosus believe this is going to change a lot over the next few years because the countries has to be strong in technology.
So 2026, India will be the most preferred market?
I love India. I have three most preferred markets: India, Europe, and Latin America. So I'm not going to say today what is the most preferred child. However, India to me, it's amazing. I love the grit, the speed of the Indian companies.
We focus on disrupting the field of intelligence, military intelligence very specifically. We started doing this by building small satellites with an instrument called synthetic aperture radar. Those satellites allow us to take pictures of any place around the world. We are able to take those pictures and identify what's happening in that area. That information helps ultimately to infer decision making.
At scale, what we are doing is we are building a general purpose brain for robots. So think of any robot, any task, one brain. Despite seeing all these robotics demos for all these years, like decades, there is still no robots around us. And the reason for that is the brain has been missing.
Our company's history goes back 10 years. Back then, raising money in Europe for defense tech was unimaginable. I think since the beginning of the full-scale war in Ukraine, we are seeing a massive influx of capital.
India's startup ecosystem, of course, has had a big year in 2025 with a slew of IPOs hitting the markets. 2026 promises to be equally exciting. This is one of the bright spots that people are looking at and talking about here in Davos. And who better to talk to me about what the outlook is than Prosus's Fabrizio. Fabrizio, thanks so much for joining us once again in Davos. You're better prepared this time around. Your gloves are on. The jacket is here.
Big pleasure to be here with you again. Ready for the Davos cold.
Ready for Davos.
Hope next time we are going to meet in India, much warmer.
But ready for India in 2026?
Very ready for India. I think 2025 was a great year for Prosus in India. We are really invest there. We are creating our ecosystem strongly. First, I really believe in the country. India is growing very fast, 7.5%. India is the fourth biggest economy. And I believe India is using technology as very few countries are with the identification and payments initiatives. So, and I think it's just getting started. I think India will have 10 years of growth, and we work to make Prosus one of the companies that are going to help push and invest to have this growth in India.
But 2025, there were many milestones, but the ones that stand out for you, for Prosus specifically in India?
In 2025, we made many IPOs of Prosus-related companies. There are many things. For example, last year we were talking about PayU. PayU is growing fast and is profitable now. Yes. So we think PayU is the best positioned payments company in India. We're very happy about that. We did many IPOs, and a few highlights, for example, is Mishu. We love Mishu. It is a great IPO. And we think Mishu story is just starting. We have Urban Company. We had a few other IPOs. The ecosystem thesis, that's what I talked to you last time. It's really starting to work in India. So our companies are working together. PayU is supporting our other companies like Swiggy and Mishu. We have new companies in the ecosystem. For example, Rapido. I don't know how close you are following, but Rapido is growing very fast. And we just get an approval now to grow to more than 20% in our participation in Rapido. Rapido is growing more than 100% per year. We now have Ixigo, another company growing a lot. And the most important about Prosus is it's not only about investments, it's about the ecosystem and how we can help those companies through international knowledge and through AI and technology. And we are working together to that. Very excited to the next step.
So what is today the quantum of how much Prosus is invested in India, and how much are we likely to see you further invest in India?
We have around $10 billion in India, but I really think we just get started there. I really believe you can get to $50 billion in India. That's what is our clear goal. For the next 4 years, we are going to be...
By the next 4 years, $50 billion you want to invest in India?
Not invest, to have companies...
Have companies.
Exactly, value 50... Yeah, if the highlight, I'm going to invest $50 billion.
I was like, that is the biggest headline.
No, not to invest. Actually, my biggest thing today now, we have investment capacity in India, but we have many companies, and what we really can help is to help the companies grow faster through the ecosystem. That's what we're really doing today. For example, in AI, just give you one example. Actually, for Prosus, now we're in a moment of delivery. We did lots of investment in the last 1 year, not only in India, but also in Europe and Latin America.
Yeah.
And we believe that AI is going to change everything. People are waiting for the next AI disruption. We don't need to wait for the next AI disruption. What we have today through agentic companies, and every time more life assistants, it's enough to change the world. And what we are doing is investing more in this technology. For example, we created an AI house in Amsterdam, and we expanded a lot our AI lab in Europe. My goal is to do that in India this year.
Okay.
So I really expect us to work closer in technology and R&D in India because the opportunity is amazing.
So you will focus on investing in companies that are AI native in India?
AI native or can leverage AI or our ecosystems.
Okay.
Because look, everyone's going to be AI first in 3 or 4 years.
Yeah.
AI is going to change how everything works. So we are working together, including with
You're not worried about valuations?
I think we are going to build our value because we are much more than an investor. We are a company that help our companies to grow faster. So when we invest in a company, it's not only about the money. It's we can help them grow faster because with the connections with the companies we own, PayU or Swiggy or Mishu or Rapido, and I think this creates a lot of value. But look, valuation today, it is a challenge. Many companies are overvalued, but I want to reinforce to everyone, don't think that AI is a bubble because a few companies are overvalued. AI over 10 years is going to change how everything works. It's like discussing 2000s, is internet overvalued?
Yeah.
Probably some companies are, but in 5 to 10 years, everyone is going to run all their process through AI. This is a so big opportunity for the world. And look, the big thing in Davos today is about this new world order that is going to be much more distributed. Today, most of the wealth on AI is on US. Prosus believe this is going to change a lot over the next few years because the countries has to be strong in technology. And
So will that mean you putting in more money into Europe?
I will put more money in Europe, but I want to reinforce India is a big bet for us too.
So what will that mean in terms of incremental investments into India in 2026?
I don't have a number today to share you. However, I want to say that we are working together with the government for the AI summit in mid-February.
Yes.
I think the government of India, I had the pleasure to meet Prime Minister Modi 1 month ago during G20. And it was great to see the government committed to, we want to make India a leader in technology, innovation in AI. So we are working together on the AI summit in what we call AI for All, an initiative to define how India can use AI to growth, to create jobs. So expect us to be there in the summit.
And 2026 IPOs?
I think there is a few more IPOs ahead. No one to announce today, but we have a few more ahead. But I think the big thing is we did around 5 IPOs in the last 1 year.
Yeah.
There is a few more ahead. But the big thing is our ecosystem is working in India. Our innovation is working in India. So the level of growth of those companies in India that we expect a lot of growth, a lot of opportunities.
But what about the profitability question? And you brought up companies like Swiggy and Misho. And while we have seen a rapid expansion, we've seen revenue growth, there is still question mark on sustainable profit growth as well as the fact that they're continuing to need cash. I mean, Swiggy raising money even after IPOing. The profitability question.
Very good question, because you asked about that last year.
Yeah.
And 1 year later, I have good news to tell you. For example, PayU is profitable now. And when we talked last year, I told you PayU will be profitable because we are confident this is a good business there. But also Swiggy, in their core business, that is food delivery, they are profitable and they improved a lot their numbers over the last year. Swiggy is investing more money in the new business of quick commerce, and that's why we are raising more money now. But I want to remind you, quick commerce is a business that we are investing for maybe 2 or 3 years, where food delivery for many more years, maybe 10 years. So food delivery is mature, quick commerce in some of other companies are already mature, some of our competitors, and we will get there for sure. So we are not investing in the bubble. We are going to have profitable and good companies.
But how do you see the regulatory pushback from the government as far as quick commerce is concerned, now saying you cannot advertise or don't advertise quick commerce and 10-minute deliveries and so on and so forth? Do you think that that is going to have any impact on the business model per se?
I am confident that we are quick commerce is doing well in India compared to most of the world. There were some excess in terms of investing. We had a lot of competition there and lots of investments. I think this is the government made a decision to adjust a little the business. I think things are going to keep working. And my expectation of quick commerce is a more balanced, how can I say, execution for other companies, what are going to contribute to more, to reduce the level of losses. So I think this is better for the drivers, and I think the companies are going to do well.
So 2026, India will be the most preferred market?
I love India. I have three most preferred markets, India, Europe, and Latin America. So I'm not going to say today what is the most preferred child. However, India to me, it's amazing. I love the grit, the speed of the Indian companies. So if you compare India to Europe and Latin America, it's amazing to see how the Indian companies are growing fast with a lot of grit. Yeah. Therefore, I think Prosus can help a lot, and we will keep helping. We will keep our connection, and I hope to have lots of good initiatives to talk this year.
And more announcements in February.
Announcements. For example, we invest in a company called Convergent. That is vibe code in India that is growing super fast. This is amazing. We have to have disruptive AI companies in India. We are preparing now to train our language models in India inside the group to announce soon more AI labs in India with Prosus support. So 2026.
How large will these AI labs be? It will be one or multiple AI labs?
It's one AI lab from Prosus, but we want you to have more R&D in India because the opportunity is so big. That's our vision, to have local knowledge in India.
So tell me a little bit more about this AI lab that you intend to set up in India.
I look forward for that in the event, so don't miss our AI summit in February.
All right.
I will look for you.
So you're keeping the suspense going. You will have to come back to us in February when we speak to Fabrizio next to get more insights on the AI lab that they intend to set up in India. Fabrizio, always a pleasure. Many thanks for joining us here on CNBC TV 18, and we look forward to seeing you at the Impact Summit.
Pleasure.
We will take a break. The conversations will continue. Don't go anywhere. We're back with plenty more from Davos 2026. Stay tuned to CNBC TV 18, your Davos headquarters. While a lot of the focus and attention is on big tech companies and what they are doing here in Davos, there's also a large ecosystem of innovators, global shapers, young global leaders, part of the World Economic Forum's program. There's also a bunch of disruptive companies who are showcasing their stories to investors and, of course, to potential clients here in Davos. Joining us are two such companies, and to take us through their startup stories and what they have lined up for the year ahead and whether India figures at all in their plans, I have with me two young entrepreneurs, Rafal, Deepak. Many thanks for joining us. I'm going to start by asking you, Rafal, to first take us through your startup story, but more importantly, what the mood is like as far as young companies like yours in Davos is concerned.
Right, thank you very much for having me. It's wonderful Davos so far. So my name is Rafał Mądrzewski. I'm representing a company called ISI, which I have co-founded about 10 years ago. We focus on disrupting the field of intelligence, military intelligence very specifically. We started doing this by building small satellites with an instrument called synthetic aperture radar. Those satellites allow us to take pictures of any place around the world, whether that's within a territory of a country that owns the satellites or whether that's within the territory of the adversarial country. We are able to take those pictures and identify what's happening in that area. That information helps ultimately to infer decision making, whether that's about the defensive posture or sometimes it's offensive posture. We are a global leader in this. We've launched 64 of such satellites, and we are disrupting this field, which honestly hasn't really been disrupted for the last 40 years. When it comes to the mood, I think there's a lot of recognition being given to young companies, especially within the deep tech field, that are bringing new capabilities way faster than what incumbents would be able to do. It's actually interesting to see how much attention is given to this on the political level, especially in Europe, where we see massive amount of new defense budgets.
I was just going to ask you that, given what is happening in Europe and with Europe at this point in time, how many calls have been made to you asking for meetings in Davos?
It's actually been extraordinarily busy, Davos. It's also been an extraordinarily busy year last year for us.
Especially as Europe looks at remilitarizing.
100%. I mean, the SAFE mechanism has just been distributed across the countries, which means that there is going to be a massive amount of borrowing going on for last year. I will draw your attention to one thing which literally happened just a few weeks back. Mid-December, we have announced a big contract that we have signed along with Rheinmetall for the German government. That's a 40 satellite constellation, 1.4 billion euros in new satellites to be deployed fully within the next 2 years. Right?
Okay.
What we see is a complete shift in the way people think of satellites and military-driven intelligence. The deployment time, not anymore a decade, not anymore 7 years, just 2 years. But we're not talking about 1 or 2 satellites. This is a whole distributed constellation. Exactly, a swarm, if you will, of satellites relying on a completely new concept. Now, what's going to be critical about this is that constellation will allow the German armed forces to monitor their troops in Lithuania every 20 minutes. So we are not talking about revisit rates of 24 hours, it's 20 minutes, and that changes the battlefield significantly.
Well, it does change the battlefield significantly. I'll come back to that in just a second. But Deepak, let's talk about what you're trying to do with Skilled AI and, how your startup has evolved over the last few years.
So at Skilled, what we are doing is we are building a general purpose brain for robots. So think of any robot, any task, one brain. Like today, if you think of language models like GPT, etc., you think of brain, right? But if you think of robotics, you think of hardware. And that's what comes to your mind. That's how movies have primed us for all these years. But despite seeing all these robotics demos for all these years, decades, there is still no robots around us. And the reason for that is the brain has been missing. That's the gap we are bridging. Like we have already built these models, which we call omni-bodied.
I was going to ask you that. What is omni-bodied intelligence?
So when I say any robot, any task, like if you think deeply about this, any robot can mean any kind of robot. Like it could be a humanoid-shaped robot, it could be a dog-shaped robot, it could be a quadruped, like an arm in a conveyor belt, it could be hand. And you could have different number of motors. So these are all different bodies. This is, in some sense, the goal is even superhuman because even humans are trained for their own bodies. But that being said, if I put you in a VR headset or something, you can control any arbitrary system with your hands. So we do have that intelligence. We just don't display it on a daily level. And that's what we believe is a core way to really build these brains, because robots have no data set around there. There is no internet of robots like here for language. So which means we cannot waste any data point. which means no matter what the robot shape is, that data should be used to improve the brain over time. And that's what our thesis is and what we are building.
So building this brain power for robots, you've got some marquee investors on board.
Yeah, we are very fortunate. Just last week we released our Series C announcement, where the company has raised over $1.4 billion and
$1.4 billion. I mean, that's the kind of money that's being raised now by deep tech companies, and that's what I want to talk to the two of you about. So $1.4 billion valuation of what, 14 billion?
14 billion plus, yeah. And we are very fortunate to be supported by all the key investors, like you name it, like all the famous Silicon Valley VC firms, Lightspeed, Sequoia, SoftBank, companies like NVIDIA, LG, Schneider. The reason is because the demand for physical AI is real, right? If you look at even the job numbers out there, there are already a couple of million extra jobs that are unfilled right now in US. And this gap is supposed to increase up to like 30 million or so by 2030. And at the same time, there is also unemployment.
Yes.
Which means there are certain kind of jobs which people do not want to do.
Yeah.
And but those jobs have to be done. And on top of it, the average age of every country is increasing.
Yes.
So there are more and more elderly people.
Yes.
So this gap has to be filled by something. And that's where we come into play.
So where do you see the most disruption coming in the near term? I'm saying in the next 5 years, potentially, on the back of the use of these robots.
We are already deploying in a variety of enterprise scenarios. So our goal remains to deploy in consumer setups like home, etc. But today, you would feel weird if you have a home robot and you have not seen robots around you at like conferences and hospitals. So that's where we are starting, like in enterprise applications. Anything in like delivery style applications, inspection, manufacturing, assembly, data centers. So that's where all beginning. And we believe not just 5, even the next couple of years, all these areas will see heavy robot usage.
Well, heavy robot usage, but also I want to come back to the funding issue, Rafal. Raising $1.4 billion, you talked about how there is a renewed and growing interest in backing deep tech innovation and deep tech companies. How much of that has changed specifically in the last few years? You know, the investor interest, the investor appetite to back companies like yours?
It's been a transformational shift. I can tell you, our company's history goes back 10 years. Back then, raising money in Europe for defense tech was unimaginable. There literally were laws in place making it difficult for some of the funds to put money into companies that dealt not specifically with defense tech, but dual use technologies alone. And think about it, almost all technologies at the end of the day are dual use in one shape or form. So over the last 3-4 years, I think since the beginning of the full-scale war in Ukraine, we are seeing a massive influx of capital. With the change in the commitment in Europe when it comes to defense spending, a whole new market opened up. If you think about it, there's a 200 billion euro of annual spend that has been added on top of what existed. We literally doubled the amount of annual spend. We don't really have supply chain to fulfill that, right? There's not enough companies producing stuff to fill that 450 billion euros of spend. So now the new companies are going to have to do it. And we know that the governments are searching for innovative capabilities. So it's a whole new world out there.
It is a whole new world out there. You're absolutely right. But, I want to address this issue with the two of you because while running Young Turks, which is India's longest running show on startups, many of the conversations that I've had with founders, there's a dilemma. Sometimes, you're in need of capital, it's not coming your way, but then you perhaps are at your innovative best. And when you have capital and perhaps you don't even need as much as you get because you're already primed for success, you end up sometimes quite often, developing toxic traits. So as founders, how are you looking at the issue of capital? How much is good enough? What do you do when you have more than you need? I'll start with you, Deepak.
Frankly, there is no time to think about capital. The problem is so difficult, and it's so robotics. I've been in this area for over 15 years. That's all I've been in my career. So we are very ultra singular focus on it. So I could imagine in some scenario where you have abundance of capital, but here the problem is so hard that all of our time just goes into thinking about this, and we are
and all of the money as well.
Money as well. That's why we are raising, but we are nowhere close to discovering all the ways that will help us get to this a dream of ours to build AGI in the physical world. So we are pretty focused on that in general. So Yep.
Rafal?
No, I will just say I think your description is very correct, right? It's very often that when you really would use some capital, that's when it's difficult to raise. And when you don't need the capital anymore, that's when everybody is giving you capital.
Yeah.
In fact, I mean, it's always been the saying, startup founders should always be raising, and you should definitely be raising when you don't need the capital. Now, the interesting thing is one of the first advice when I've received, our first investment round was $2.5 million. Back then, it seemed like all the money in the world. And the advisor of ours told us, don't spend it all at once, right? Because there is this tendency, the moment you raise, that you're letting all your brakes loose, and suddenly you're on a spending spree, you're hiring people like crazy, you are building new facilities, you are celebrating with a large party, and you may run out of this money, right? It's a common mistake and it's a common dilemma that companies face. And I think, you have to be disciplined about knowing why you have raised the capital and what are you going to do this with. I do agree. Right now, the problems that we are both solving are so fundamental and are so deep that there isn't really such thing as too much capital, right?
Yeah.
There is, however, an amount of capital that you can misuse, and you should be very careful of not
Very
doing
careful about that. But, building a deep tech company, and I think this has been a debate that's been on in India, whether what will it take for India to build more deep tech companies? In your experience of having worked in this space for 15 years and now doing this as a founder, what do you believe the mentality needs to be, the founder's mentality, the mindset needs to be to really do a deep tech startup?
I think what it takes is to think in a first principles manner, right? Let's talk about robotics, for instance, right? Currently, if you think in terms of robotic supply chain, China has the lead in many ways, like rare earth matters, motors, etc. And with the global trade war and all these issues going on, people look for alternatives, right? There is a very good opportunity here, especially for India. Why? Because building robots and all the supply chain of motors, it is in some sense similar to automotive supply chain and electronic supply chain. Now, not so much electronics, but on automotive, India has been great.
Yes,
they have been
supplier to the world.
Yeah, exactly, right? And they have produced competing vehicles, lowest price. And if we can really capitalize on that and piggyback on that supply chain, there is opportunity to capture this big market in the whole robotics manufacturing hardware space. And in fact, we also have an office in Bangalore, and we are trying to promote this thing in India to develop hardware in the country. In fact, any country, but India has an advantage over there. So it's about really thinking about first principles and what's the unique angle you can bring. If you just take what others are doing and exactly replicate, then you're always, in some sense, the trail end of this thing. But you have to find our strength and then use that in a unique way.
Thanks very much for joining us here in Davos. We wish the two of you the very best of luck, and we look forward to hearing more from both of you. Well, that's it then on our Startup Roundtable here at Davos 2026.
without further ado, may I request the chairman of Reliance Industries, Mr. Mukesh Ambani, and the chairman and CEO of BlackRock, Larry Fink, to please join us on stage. Ladies and gentlemen, a big round of applause for the two leaders who join me in a conversation on what it will take to invest in a new era, the trends that will shape our investment choices. Mr. Ambani, Larry Fink, thank you very much, and welcome to a warm, sultry Mumbai from a very cold Davos, Larry Fink, where you were in the throes of conversation with world leaders about the world order or the world disorder. So let's get started with that. We're talking about investing in a new era. What are the changes that you foresee that will shape the investment choices, the investment decisions of leaders like you as we look at this new era?
Well, first of all, it's great to be here in Mumbai. It's great to spend time with my partner, Mukesh, and the entire Reliance NGO team. So it's a real honor to be here. The weather is nicer here than it is in Davos, and much nicer than New York, where I had our board meeting last week. So it's good to be here. You know, we talk about a new era to give people a foundational understanding where we are. As an investor, I don't look at any era. I mean, our job is to be having people focus on the real opportunities to invest over a lifetime. There's so much information that confuses people. Media talks about the moment, the velocity of money. And the reality is, for most people, they need to be in a position to grow with each and everyone's country. So when you think about the growth of India, it's not a quarter, it's not a day or a week, it's not a year, it's over a long horizon. And you could say maybe this is the era for India and over the next 20, 25 years. But if you use that as a foundational paradigm that we all want to think about, the era of India, forget about the era of investing for a second, but the era of India, the key for us, the key for Geo BlackRock is to compel more people to understand what does that mean, the era of India, and how do you participate in it? What we've learned in the United States, for that segment of the population that had invested with the growth of America, they're far better off than those who just kept all their money in a bank account. Mm-hmm. And so the key is, if you believe in the era of India, forget about the era of India, investment, the era of India, which I believe in, we need to get more people investing alongside the growth of the country. And that's the role of the capital markets, that's the role of what we can be doing together. And to me, whether it's, you want to focus on AI, or you want to focus on how we live, how we grow, how we educate ourselves, to me, those are subsets of the era of India and the opportunity to be an investor alongside the growth of India. And to me, that's a compelling story. It's not about, about tariffs or President Trump or anything else that's top of mind. We need to be compelling people to think about the horizon of investing over a long period of time, to grow with the great companies of India, to be a part of that and to participate in that. And I'm absolutely convinced, if you believe in that, in the era of India, we need to compel hundreds of millions of Indians to invest alongside the growth of India. And that will actually transform India in so many ways, because as more and more families invest alongside the growth of India, India has less needs for the importation of capital. And I do believe the combination of importation of capital from foreign investors who believe in the era of India, but the fundamental foundation of any country is having the domestic economy being built on the back of retirement savings, on the back of excess savings, to invest alongside of that.
Well, thank you very much for those opening remarks. And, the era of India, says Larry Frink, that is certainly going to be one of the headlines that goes out this evening. But if I could ask you to explain to us what excites you the most about India. You referenced the tariffs and, we've had a deal with the US overnight. President Trump and Prime Minister Modi have signed off on that reciprocal tariff agreement. So the overhang has lifted at least on one aspect of that relationship. How crucial a development is that, and what excites you the most about India today?
Well, let's be clear, over 20 years it had no bearing. Maybe over the next 6 months or a year it had some significant bearing, but over time, the foundational issues of India, how it's able to leapfrog. I mean, you watch what has, over the last, I would say, since the era of the smartphone. And I think that's a pivotal point. 2012 was, I mean, think about your life before the smartphone here in India. But the beginning of the smartphone, the rollout of 5G, and how that transformed India in so many ways. When you think about how the Modi administration digitized the rupee and how it transformed commerce in India across the board. I am very worried about other countries, even the United States is falling behind. We need to be digitizing. We need to be thinking about how this all plays out. I think this is part of the democratization of India, and so now India is a leader in this. And so I could cite many things that give me optimism, but the fundamental opportunity is the huge intellectualism of India, the transform what technology, whether the technology was created in the US or somewhere else in the world, the dispersion of that technology in India is really what is so inspiring, and the utilization of the new technology for more and more people, and how that transforms commerce, consumption, information, education, all of that is ripe for real solid growth. And I agree that India has, over the next 10 plus years, it's going to grow anywhere from 8 to 12%, probably hovering around 8 to 10. And that's a place where I want to personally invest in, and what we need to do is compelling more Indians to invest alongside that growth.
Well, we certainly hope that more Indians are going to be investing in that story as well. And speaking of one such Indian, Mr. Ambani, let me talk to you about Larry Frink's praise of saying that this is the era of India. Now, you've seen India over the last 2 decades transform itself in many, many ways, especially as far as the digitization era is concerned. Specifically, what excites you? What is compelling about the India story today? How have you seen it being transformed?
Well, Shireen, before I answer that, let me warmly welcome Larry, and I'm grateful to Larry to again come back to India. It was a conversation that we had in 23, and it just took me 5 minutes to saying, Larry, BlackRock should be back in India. And he said,
that's all it took, 5 minutes?
Will you partner me?
Less. It was a car ride. We had to go to point A and point B, and we accomplished it in a car ride.
In terms of, here you are with your full team, and we have launched the business. So thank you for again coming back to India, and India warmly welcomes you and your colleagues, and to all my colleagues from the industry and the financial community, a very warm welcome. And we look forward to working with each and every one of you. As Shireen said, I think that, Larry, there is an old Indian saying that a tree only attracts attention if it bears fruit. And today, in this new era, as you described it, India and the tree of the Indian economy is bearing fruit with great visibility, with sustainability and abundance. As everybody said, right, we are confident, like we are the largest growing fast economic growth in the world. 8 to 10% is possible and doable, and I think that sustained double digit is not ruled out. So that gives us and that is why we are, after a long time, attracting all this attention. And this has happened primarily because I think that the last 10, 15 years, right, we had two successive periods. We had 10 years of Manmohan Singh, where we focused on growth. And then we were very lucky to have now consistently 15 years of very stable leadership. So stable economic leadership defines a country. And I think that we have to be thankful to Prime Minister Modi for giving us this stability now for like going in, by 2029, it'll be 15 years. Yeah. I also think that we've got what is different about this is we've got a very clear goal. A goal in terms of saying we have to be developed, Viksit Bharat by 2047, which every Indian aspires to and has started believing in. Second, we've executed at scale, right? While as Indians, we like to criticize ourselves, and we are not, and it's a good thing in a democratic mindset, but if you see, we've built more roads in the last 15 years than any other, like multiple times than any other country, including the United States at its peak. We've built like power capacities. We are now the leading renewable power producer in the world. We've built in our own industry digital capacities, 5G, that is better than most people in the world and cheaper than most people in the world in terms of what. And now every Indian village has got 5G. So, and I can go on, like we've built the same thing in terms of infrastructure, the roads that you see in Mumbai. For a long time we said that we will connect Mumbai to the mainland, and we now have the bridge that is running. So we've executed. We've also had policy which is sustainable. So even when you see between governments, right, we all thought that Aadhaar was the earlier government's piece. I think this government was wise enough to saying we've had continuity in policy at all times. In terms of that, we've had stability, we've had predictability. We've also been conservative. So as Indian successive finance ministers, we've always maintained our debt in order. Relative to global debt, we are still 50% of GDP as debt. So we are not, like the world norm is now 100%. So we've had, and I think that we've also in the private sector, and what excites me the most is the startup industry. When I interact with startups and we see young 28, 30-year-olds starting up companies, and I can clearly see, right, 100 new Reliances in terms of where, and the aspiration, the confidence that they have. And finally, it is the confidence that you see. Fortunately, we now operate across the length and breadth of India. So it's not only the confidence in forums like this, but when you see the confidence in young people going to school and colleges, wanting, and in parents today believing that their tomorrow is better than today. Right? And that is a big, big change in India, that all of us, this is our baby boomer generation. This is the Indian generation that believes that they'll make a better tomorrow than today. And that's the confidence that we see as a result of all of this. And I don't want to rule out, like when everybody, we've also had, right, at least I think a sustained 15, 20 years of great law and order. Right? And that is a prerequisite to continuous economic growth, social harmony. All of these things matter in terms of that. And hopefully, like we are now setting the foundation for many, many decades. The world sees that. And that is why, even like after the budget, we had the European Treaty, we had, fortunately, the US. So the world is looking at us. We have, and we at Reliance get at least every month 3 or 4 global majors. We cannot say yes to everybody for partnerships in terms of saying we want to come to India and can we work together. So the world is taking notice of India. It's a tree laden with abundant fruit. And I have always believed that for profit and for prosperity, nobody needs an invitation, and that is why we are attracting all the people. And I think this is very, very sustainable over the coming decades.
sustainable for the coming decades, and 100 more Reliances, in your words, from the startup ecosystem. If that is, comes true and that bears fruit, it'll be a very, very different economy, as you point out, Mr. Ambani. But, I want to understand from you, since we're talking about Jio BlackRock, we're talking about the opportunity for India's financial sector. A lot of people are asking, is the ambition and the aspiration to disrupt this business just as you did with telecom, Mr. Ambani?
Well, our ambition and aspiration starts with, what I admire about Larry. Right? And Larry is not only, right, the result-oriented CEO of a US top global multinational, right? But I think that he has a very compassionate and passionate heart, right? When he told me that, look, like at the end of the day, purpose of BlackRock is not to just make short-term results or not even to make returns, right, for my investors and my shareholders, right? If I cannot put this money to work, first for the betterment of society, and as a byproduct, I give my investors and shareholders returns, then I would have done my job. And that is the Reliance philosophy too. We've always believed that our minds match. And the purpose of Jio BlackRock, right? And I think that disruption is fashionable, but the opportunity that we see is that Indians have really been savers, right? Right from, if you look at our history, we have saved consistently over the last 5-6 decades. What has happened is that some of this saving has not been productive. If you see just the last year, right? We as India imported $60 billion worth of gold, and we imported $10 to $15 billion worth of silver. And all of this not for industrial use, but really for domestic savings in terms of... Now, this is unproductive. If we can actually convince the Indian saver that if one invests in the capital markets in a safe, transparent, and consistent way, there are returns. And these returns, we heard from all the three panelists, compound. And for us at Jio BlackRock, the opportunity is to encourage Indians to save, but to make sure that we give them the options to convert those savings into earnings and hopefully compound their earnings so that they not only work for themselves, but they also work for the Indian economy. And that propels the Indian economy to grow in terms of what we want to do. And then we all grow together. So yes, if you call that disruption, we will use technology, distribution to achieve that for every Indian household, for every Indian small business and large businesses. That's our objective.
So from the foundation and the beginnings of BlackRock, we never focused on targets of growth, ever. And yet, our focus has been relentlessly on the client, whether it's a client who's awarding us 100 rupees or a sovereign wealth fund who is awarding us tens of billions of dollars. If you are working on behalf of each and every client, and you're serving that client over a long horizon with good advice, with maybe a degree of safety, and importantly, just confidence building about the opportunities of compounding over a long period of time. Through the utilization of technology to intersect more often, more frequently, to have deeper, broader relationship with your clients. That's how disruption occurs. But disruption does not occur because you set a target. The target is making sure you're living with purpose every day with each and every client. And if you can achieve that with consistency day after day, clients will reward you with more share of their wallet. And so to me, it's just it's a process. It's a process you have to earn every day, live every day, and if you do that properly and you embedded that in the culture of the firm, we could be disruptive, but you can't be otherwise.
Mr. Ambani, let me come back to you on the investing in India's growth opportunity and this new era that we're speaking about, and the role of making strategic choices today, which will require patient capital. And I want to understand from your perspective what it will take actually to build patiently with patient capital over the next 2 decades.
Well, I think that the Indian opportunity, as we stand at about $4.5 trillion of GDP in a $110 trillion world. Right? I see us outgrowing the world and finding our right place. So I am one of those believers who think that this four and a half in a 20-30 year period, right, will outgrow the rest of the world, and we will hit $25-30 trillion. It's going to be 30 years from now, but as we do that, the India opportunity is a 10, 20, 30 year opportunity. And when you think about solving India's energy problems, I am a believer that in the next decade, India will not import 80% of its energy. We have a path, and God willing, like with technological breakthroughs, we will be reasonably self-sufficient in energy. Investments in such like energy sectors which make us self-sufficient are 20, 30-year time horizons. Investments in physical infrastructure that we still need. We have the opportunity to build with today's technology the physical infrastructure for 1.4 billion people. We've done a lot, but there's a lot more to do. These are also 20, 30-year opportunities. Technological infrastructure. We are not going to be behind the world in terms of building country-scale intelligence infrastructure so that every village has intelligence available to them. And this also is a 20, 30-year opportunity. Each one of this is hundreds of billions of dollars of investment. And within that, while the benefits are there, right, they are long-term, sustainable, compoundable opportunities, and that requires sustainable capital, which